they do believe that government funding is a bit of a sideshow, that they've seen this movie before.
I know where you were going with that.
Where was I going with that?
Before it was a sideshow. Anyway.
Oh, another S show.
Anyway.
Another show.
Yes,
Another show.
That's very good.
Anyway,
That's something to remember.
so
if you need to pull something out of your nose.
our clients are also not talking about that either.
Out of your
But what they are talking about, obviously, is just the other headlines. I think that maybe this does give some sort of confidence to the market, though, that a tax bill can get done sooner than what I think was feared. Obviously, if they were mired in a shutdown, that would have sort of prevented them maybe from moving forward to a
Government
budget resolution.
shutdown seems like it's different than taxes to me. Okay, wait, I'm rethinking this as I'm saying this. Maybe not, because no Democrat wants to get blamed for every American's tax bill going up either.
Well, no, and what I'm just saying is this sort of clears the deck in terms of the House to be able to move forward, and I think, again, gives Speaker Johnson more credibility in terms of his ability to get the necessary votes in difficult bills. And he's obviously had the House budget resolution, a difficult vote, right, authorizing up to $900 billion of cuts in energy and commerce, which are likely Medicaid cuts. A difficult vote for, I think, a lot of moderate Republicans to vote for. He was able to get that through, and obviously this most recent victory.
Should we call it Medicaid? If you're cutting projected increases in Medicaid, but it still goes up 2% a year, is it a cut in Medicaid?
I mean,
No.
how I think Democrats are framing this is
Yes.
absolutely.
Yes. Any cut, even in the increase,
Yes,
is a cut.
and it would be a cut. It would be a net cut, even though you're right
Liar.
that mandatory spending has crept up
Although-
over time, both Medicaid, Medicare, and then
Not-
also Social
Liar.
Security.
Social Security, not nearly as much.
Yeah,
They've
well-
almost been flat.
Yeah, well,
for 10,
Medicaid,
15
obviously,
years.
the expansion of the Affordable
Liar.
Care Act.
And Social, yeah, exactly.
Yeah, Medicaid, the expansion of the Affordable Care. The other thing, though, the upshot of this show is that Medicaid's a lot more popular than it used to be. I think
it's also pretty heavily used.
those cuts
So
used to be a
in
lot
school
easier
lunch-
20 years ago. Now I think
But
you
it's-
fast forward.
Oh,
and
you're a
cuts are being
bitch.
much more
Things that have
difficult.
nothing to do with
But it's
Medicaid.
very popular in red states and very popular with.
I don't know where they get these snooty people at.
Mark Berlini, who's going to be on with us tomorrow.
These liars.
He was saying that Republicans, 80% of them favor keeping the ACA additional subsidies.
Yeah, but
because
what-
they're using them.
The
So.
reality is 1 in 5 Americans get their health insurance through Medicaid, 1 in 3 in many red states. So if you look at Louisiana, if you look at West Virginia, if you look at Arkansas, 1 in 3 folks are getting their health coverage through Medicaid. So again, we'll see. Speaker Johnson has been able to do some really pretty unprecedented things, but I think quite difficult. And particularly in the Senate, I think that will be sort of the rub. And this could be, again, we've talked about to our clients that the market has been having to eat more vegetables than dessert. I think they're hungry for their dessert, but this Medicaid cuts could be yet another kind of obstacle in terms of getting
And
this done.
Republicans don't like Obamacare, but they love the Affordable Care Act subsidies, which is.
Well, that's the issue. Vernacular and nomenclature actually does matter in politics. The last thing I will just say about this government funding bill that we've been talking to our clients about is it does not codify the DOGE cuts. This is something I think is really important as big Treasury investors like PIMCO is. If you want to actually see a reduction in the deficit, and you know this, you actually have to codify these cuts that Elon Musk is sort of putting through into law. If you do not do that, that money effectively just goes into basically a banking account of these various agencies, and they cannot touch it for 5 years. So while it makes a lot of headlines, in terms of actual deficit reduction, then it can go back into the Treasury General account.
Libby, why are we're headed for $2 trillion again? Why?
I mean,
Deficit.
again.
Next year too? We were under $1 trillion before the pandemic.
yeah. Well,
The pandemic's over.
yes. And I think that a lot of what you're saying, obviously discretionary spending has crept up, but then also mandatory spending. And we have talked about this, is that in order to actually do anything
Interest
about
rates.
the fiscal trajectory, you have to do something about on the mandatory spending, and you probably have to do something on the revenue side. And then obviously interest rates have backed up and been a big portion of the government spending as well.
Okay, Libby, at our table.
Here I am.
Remember that ad?
I do. I grew up with that. I grew up on an 80s kid, yes.
Yeah.
Very well.
Me too.
Oh, look at
But I was 40.
Please.
Coming up, another warning from a retailer about a
Not really.
cross-border slowdown
Not
in growth.
really.
That story
Do the math.
after quick
Not
break. And then
really.
later, don't miss House Speaker Mike Johnson. That is coming up at 8 a.m. Eastern Time. We're going to continue this conversation we just had with
It's unbelievable. That's what they are. Unbelievable. Yes. So unbelievable. That's what they are. Why? Because they don't speak the truth. It's just so funny how they act. They're just so wrong all the time. I think the problem with CNBC is they try to dictate. They think they have the power to change and to dictate. And the difference between Schwab is they just present the facts. This is how it is. But we want it this way or it ain't going to work. Instead of, well, this is the way it is and we have to follow the procedure. And they're always wrong. We'll head out. Got a lot of work to do still.
Inditex, which is the Spanish owner of retailer Zara, reported fourth quarter sales that beat estimates, but it is forecasting a slight slowdown in the first quarter sales this year. Not uncommon from what we've heard from lots of other retailers as well. You can see the shares, though, are falling pretty sharply in European trading this morning, down at this point by about 7.8%. When we come back, we've got a check on the commodities. Energy has been buffeted along with the broader markets this week. WTI this morning trading just below $67 a barrel. When we come back, we'll dig a little deeper. Squawk Box will be back after a quick break. right, let's take a look at energy prices this morning. They have been up this week, this morning up by about 1% for WTI, but just 2 days ago we were looking at the lowest price we've seen in quite a while, just above $66 a barrel. The broader markets have been swinging as well, so we've been keeping an eye on all of this. And joining us right now to talk about it is Amrita Sen, Energy Aspects founder and director of research. And Amrita, we have seen oil prices down about 4% over the last month. Is that a function of drill baby drill with the Trump administration? Is it a function of concerns about the growth of the economy and maybe watching oil prices decline as part of that? Or is it a function of more supply as this talk of Russia ceasefire brings more Russian oil back onto the markets too? What do you think?
So I think the main reason why prices are down is the second reason you gave, which is kind of concerns about the global economy. Obviously, everything that's going on with tariffs, what that does for global growth. Drill baby drill is purely rhetoric. It hasn't led to any increase in US production. We actually don't think it's going to lead to any increase in production. Even with all the talks of tax cuts, already indirect costs basically can and are tax deductible. So any of these kind of talks about massive tax cuts that will benefit shale producers isn't actually true from where they are currently. Any of these tax cuts will only take place in 2026. The biggest thing which we've been saying is geology. It is getting more mature. We are going to get a lot of gas, we're going to get a lot of NGLs, but we are not going to get a lot of black oil regardless of that. Final point on Russia, Ukraine, we actually haven't lost any Russian oil because of sanctions. Let's be very clear on this. India and China are buying all the Russian oil. So even if there is a ceasefire, which again, it might take months as we believe it will, it doesn't mean more oil to the market. So this is really about global growth concerns rather than supplies.
There was a Bloomberg article just this week that said Russian oil flows surge and it signs that U.S. sanctions are starting to crumble. U.S. sanctions on Russia's oil tanker fleet are showing signs of faltering after a clutch of blacklisted vessels loaded cargoes for the first time in more than a year. Is that not happening?
So that's nothing to do with sanctions removal versus where we are now. So the point being is that if you recall on 10th of January, the US actually did put a bunch of sanctions on Russia, and that did lead to disruptions to trade flows. But again, I'm talking about production. We did not lose Russian supplies. There was no cut in Russian production. They simply put that oil on tanks and they floated it. Now with those sanctions, basically they found workarounds. Banks are allowing Chinese and Indian buyers to buy it again. That oil is reaching Asian buyers. So again, we haven't actually lost any production from the market. Yes, there was a disruption to trade flows. And even if these sanctions are not removed, the workarounds are already there, as the article points out, and the oil's flowing.
How significant do you think the risk to global growth is, and how much does that determine where you think oil prices head over the next 6 months?
So I think if you look at the micro oil balances today, they are actually very strong. I think we forget year to date, we have globally drawn down inventories by 70 million barrels, which is counter-seasonal. This time of the year, we build inventories because refineries go into maintenance. So I think that tells you that the market is tight, and even with additional OPEC volumes, which is very small, we have sanctions on Venezuela, potentially tightening sanctions on Iran. So I think that's the support that oil gets. The challenge, of course, is on the demand side, where we have seen a struggling China with a lot of the tariff policies. There's a lot of uncertainty in the market, and our demand growth number for oil this year is less than 1 million barrels per day. And I think that's where the downside risk is. Right now, there's just so much uncertainty. Traders are not even trading oil. I mean, of course, there's been bigger moves in the equity markets, but you just don't know whether it's tariffs or sanctions. The swings are just huge right now.
Which makes it dangerous to venture in. Amrita, thank you.
Absolutely. Thank you so much.
It's 7 a.m. on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin along with Joe Kernan and Becky Quick. Among today's top stories, the House of Representatives narrowly passing a 6-month government funding bill. If signed into law, would prevent a government shutdown at the end of the week. Now heads to the Senate, where it'll need the support of at least 8 Democrats to pass. We're going to speak with House Speaker Mike Johnson. That's going to happen at 8 a.m. Eastern Time. We've got a lot of questions for him. We'll talk to him about everything that's going on right now. Meantime, the Department of Education announcing it's going to cut about half of its staff. This after the head of the Department of Education, the secretary, was on our broadcast just yesterday. About 1,300 career employees expected to be fired. It amounts to more than 30% of the workers who were at the department when President Trump began his second term. Hundreds of others previously accepted voluntary resignations or took early retirement. We asked her about the timeline. We didn't know that the timeline meant now. And Intel sharply higher this morning. This after Reuters reporting that Taiwan Semiconductor pitching U.S. chip designers NVIDIA, AMD, and Broadcom about taking stakes in a joint venture that then they would operate Intel's factories effectively for them. The report says that Taiwan Semi proposing to run the operations of Intel's foundry division, but it would not own more than 50%. So our eyes are on that story and a lot more. Also, Steve Leisman, the professor, at the table this morning. Consumer Price Index for February. It's going to be released at 8:30. A lot of eyes on it as we try to figure out what's going on with our actual economy.
Many eyes.
Many eyes.
Not
plus,
all eyes. Many eyes.
Many eyes. And the professor is here with his professorial glasses on this morning.
Whose eyes are not on inflation?
Probably 100, probably 70% of the country aren't watching the CPI today.
They're making a mistake.
They are.
They're making
They
a
are.
bad
If they're not-
mistake.
We should
Wall
have
Street-
all eyes on Squawk Box.
All eyes on Squawk Box. Who's not watching Squawk Box?
Should
As
say
far
that.
as I know, anybody who's watching me is watching Squawk Box. Wall Street looking today for a modest rise in February inflation. It's going to still tell the Fed that it has more work to do in bringing down inflation. And it's likely we'll see the first but not likely the last signs of tariffs in the inflation numbers. Headline looking at 0.3. That's down from 0.5, so that's progress and better than it was this time last year. The core the same, 0.3, a little bit of improvement there. And it's going to improve the year-over-year numbers, but not quite get the Fed back. You take off a half a point more or less to get to the Fed's PCE number. So you're still in the 2.5 area with these numbers. 3.2 on the core estimate was, and 3.3 was the prior. The index could get some help from rents and used car prices, while apparel prices expected to bounce back. Bank of America, this is important, sees a 0.2% increase in core goods ex-used cars from these 10% tariffs President Trump put on China in February that I believe have risen to 20% since then. There's risk that tariffs show up more than or less, Bank of America says, than we expect in February. That said, if tariffs do not affect this month, it just means the impact is delayed to future months. The bank's belief in higher inflation from tariffs, that's behind their call that the Fed will stand pat on rates throughout 2026. But hold on, that is not the consensus, at least in the Fed futures markets. 3 cuts remain priced in June, September, and December. You can see right there. That third cut is going up and down a little bit, but that's where it's at right now, a 66% probability. The general belief is that the Fed will be facing pressure to cut from flagging job and economic growth and will look through any tariff-fueled inflation. The question is how long it takes the Fed to feel comfortable that tariff inflation is not wider inflation.
Transitory.
It shifted, hasn't it? Remember the last CPI number? We were on pins and needles. The growth concerns have taken front and center. If it is a bad number, then we're really screwed. Because then it's a growth concerns and inflation.
My whole issue is with the timing. When can the Fed come to the rescue, right? If you think about it, I don't know when these tariff price hikes and how much, right? You had Unison this morning arguing that Walmart is pushing back and that China's pushing back on Walmart. So we'll see how much makes it through into the core. I'm actually a little more interested in tomorrow's PPI number. Because, folks, if you're not watching that, you're not paying attention.
Well, is that because it's the precursor?
It's
to
where you would
CPI?
find,
It'll show up
exactly, Becky.
first.
You would find that pressure first, and then you start to see, well, how much comes along, and that has to do with how competitive these markets are. So one thing you might want to ask yourself today, these 25% steel tariffs take effect. What does a U.S. steel manufacturer do? Do they raise their price to 25%? Do they go to 20%? I talked to Adam Posen about this from Peterson. He said,
Or do they steal all the market share?
but what happened in the 70s, Becky?
I don't remember.
We had quotas on Japanese cars, and Americans made really lousy cars.
Leisure suits.
Yeah.
Well, that was true too. Did you
Terrible.
wear a leisure suit?
Bad
I did.
mustaches.
Did you wear a leisure suit and drive a Chrysler?
And a Nehru jacket.
Wow.
I drove an old Buick as
Can we
long as I
say
possibly could, and
For
then I had to
PPI,
buy.
more eyes on the PPI
I
number?
would personally like as many eyes as possible.
But it's
to be
more
on
than the
PPI.
CPI.
The CPI is the one that matters, the one that people follow. We have had this boost in inflation expectations. There's a legitimate question as to whether or not companies were preemptively raising some prices. You could have had some pressure on prices from people trying
Would
to
that
get.
be gouging? If you're preemptively raising prices?
I don't think so. I think it would be market forces, Becky, in the following way. If people were buying stuff ahead of tariffs, you would have an increase in demand that could that could support an increase in prices if people were buying stuff ahead of time.
Or if you're a manufacturer and you're bringing, or a retailer and you're bringing the stuff early, you have to store it somewhere, which costs you more too. So it does increase your cost.
Right. What's really interesting now, Becky, as you know, is this whole Christmas thing. Right? They start doing it now. Some tariffs move in, and then you won't see the price increases until October maybe or whenever.
Well, and you have to figure out how much demand there's going to be.
Right.
So what's the consumer?
So the best idea, I know we got to go, is his idea is you don't have inflation, because what happens is, and this is not this is economics, right? Is that prices go up here, they'll go down in other places, and you could have substitution. That's the problem. The trouble you have is that there were people who were selling stuff on this stuff, and all of a sudden they're become a redundant, or their factories have to shut down. That's where you get the decrease in growth potentially.
The Professor, thank you. We'll see how it all plays out. We'll see you at 8:30.
8:30.
You bet. Coming up, a wide-ranging interview with Altimeter Capital's Brad Gerstner. We're going to get all things tech, AI, crypto, and so much more. And he's doing some very interesting things actually in Washington that could matter to all of us. We'll talk about that. Plus, we're going to talk to House Speaker Mike Johnson for the latest out of Washington after the House passed a budget bill. Stay tuned. You're watching Squawk Box, and this is CNBC.
The markets are waiting on that CPI report for more clues on inflation. The futures, though, have been pretty solidly in the green this morning. You'll see that right now it looks like the S&P would open up by about 43 points, and the Dow would open up by about 240 points, NASDAQ up by close to 180. Joining us right now is Alexandra Wilson Elizondo. She is the co-CIO of Multi-Asset Solutions at Goldman Sachs Asset Management. And Alexandra, Goldman Sachs itself put out a call this morning that lowered its growth prospects for the S&P 500 this year. I think the new target's 6,500 from 6,800. I realize that's not you, but let's just talk about the firm's overall outlook. What's causing that? That's still growth, but not as much as you had anticipated at the beginning of the year.
Yeah, I mean, you hit it head on. Even within multi-asset solutions, our outlook has been revised to adjust for the austerity impulse, if you will. We're very focused on the medium-term outlook still being positive, but when you look at the different policies that are being prioritized right now, they end up ultimately hurting both what we would expect for GDP as well as raising what the inflation target would look like.
Cost cuts, job cuts throughout the government, those initiatives?
Yes, and tariffs.
And tariffs, yeah. Obviously, that's caused a lot of confusion, and it's been reflected in the markets. Is that a fair reflection, you think, of investors' concerns around those issues?
Yeah, I think what you're seeing in the market right now and what they're acutely struggling with, investors, is how do you price the second derivative of some of these outcomes, right? So what is the confidence crisis that could ultimately materialize? And when you look at equities in the near term, one of the things we talked about is the tactical setup was very complicated because you had very high valuations, a lot of length, the Momo trade was doing very well, and you've seen some of that unwind, and to the point of how we've adjusted our target, I think it's come down, the other side of the house has said something, it's like 20 and a half times. But what's driving some of that is, even right now, if you look at the equal weighted index, I mean, the average stock is barely down.
Right.
So there is still some room for things to continue to go down from here.
You like those people on the other side of the house? They know what they're talking about?
I mean, I think
Your
so.
rival? Yeah?
Yeah,
You're
of
better
course.
though. I think you're side of
No,
that.
they're very good partners.
So my question, if these things persist, if Doge is deep enough and if the tariff persists long enough to cause this austerity, would it be long enough to make a difference positively on the long-term outlook of the United States?
I mean, it can very well be that, but one of the things we were talking about is that just as Bassan talked about, how we have to detoxify the addiction, the market equally has been used to this stimulus, and you have a lot of weak hands that have gotten flushed out of the market.
Like a government, it's sort of a government-funded prosperity boom almost. But I'm just saying, I'm not convinced it lasts long enough to cause the deleterious effects, which would also mean they don't do enough or it doesn't last long enough to be positive. I'm not really sure on the margin that it's going to work.
Structural change, is it real or is it not?
Yeah, is it real or is it? But if you believe, and it could, the worst case would be, is it long enough? It is long enough to cause the austerity, but it doesn't work.
Yeah, so one of the other calls that we've been very focused on is actually the structural change or the paradigm shift within Europe, which is actually the complete opposite, where you both have the impulse being on the monetary side and the fiscal side positive, where you on the margin don't have either of those in the U.S.
Does the Fed have to come to the rescue here? Is that the market's hope on this?
Well, that's what the rate market has been telling you, right? So you've seen a very strong risk-off nominal rally in the rates market, and today it's going to get put to the test. Where's the Fed put? I mean, most people have been writing off the seasonality in CPI. I think you're going to start to see some of the tariffs come in through the numbers today, and if you get anything hotter than 0.3, you're going to start to see a repricing of rates, which is very risky, because one of the things that portfolios have been reliant on thus far in terms of P&L has been that negative correlation between stocks and bonds right now.
And the dollar weakens?
I mean, the dollar's, it's a very complicated story, just given all the different things that are happening. So, one of the things that you can do in a broader portfolio is have a basket of currencies, which can help with, any large systematic vol shocks that you can experience.
Alexandra, thank you. Good to see you.
Good to see you too.
They're jealous. They're watching the other side of the house, and they're going, "Oh my God, I wish she was over here." That's what I think. All
Coming up on the other side of this, checking the pulse of airline demand with the CEO of aircraft leasing company AerCap. That is next. And then take a look at shares of Apple. Morgan Stanley now slashing its price target on that stock from $275 to $252 now, citing the delayed Apple Intelligence rollout and its impact on the iPhone upgrade cycle.
Below that.
Yes, it is. You can look at the shares right now, 220.67.
Thanks for that.
Squawk come right back after this.
Time now for today's Aflac trivia question. What is the only item in the White House that was present when it opened in 1800? The answer when Squawk Box returns. And now the answer to today's Aflac trivia question. What is the only item in the White House that was present when it opened in 1800? The answer, Gilbert Stuart's portrait of George Washington.
JP Morgan Industrials Conference continues in New York City today with more heavy hitters. Wow, that's pretty cool. Including our next guest, Angus Kelly, CEO aircraft leasing company AerCap. You've been called that a lot. Phil LeBeau, our heavy hitter, is here as well. Thank you. You're in studio. That's cool.
Yeah, and it's great to have him here because I want to get your perspective on two things. Let's start first off with, we heard from a lot of airline CEOs yesterday, the U.S. airlines, and they're worried a little bit about what we're in a sort of a rough patch in terms of the first quarter. Nobody's bringing down their guidance for the full year. When you talk with airline CEOs, how worried are they about demand, whether it's here in the United States or globally?
Phil, yeah, great to be on. The airlines are not worried about demand. Demand is strong. This is not like airline recessions of the past, where we have two seats chasing one passenger and you see fare sale now on, which is the worst thing an equity and investor in an airline can see. So demand is strong. Yeah, there's a bit of a soft patch now. A lot of that is driven, of course, by what's happened on the cost of labor throughout the airlines, led by pilot increases.
Yeah.
But no, I'd be pretty bullish around the world, and we still move an aircraft every 24 hours somewhere in the world, and we see strong demand.
So that's the one topic that's out there, and I think people can say, okay, we can see through that. The other question is tariffs and what might happen. You buy dozens of aircraft from Boeing, also you buy dozens of aircraft from Airbus, and there's a lot of questions about what happens if these 25% tariffs truly stick, whether it's just with aluminum and steel, but with other things as well. What's your perspective in terms of the impact this could have in terms of demand for Boeing?
So, to give a context, AerCap is the biggest buyer of aviation assets in the world, bar none. Last year we bought 150 aircraft, helicopters, and spare engines. That's more than any commercial entity, airline or other, has ever bought. So we know what will happen if we see, in an absolute worst case scenario, say a 25% increase across the board on tariffs, tit for tat from both sides. A Boeing 787, the price will go up by $40 million.
Wow.
No one's going to pay that. That won't happen.
They won't be able to buy it and say, I'm going to pass it through to the end customer in some fashion?
Customer won't take it. What will happen is that the airlines say, can't afford the airplane, we'll call Airbus. So in a worst case scenario, what would happen over time is that Boeing would end up with the United States, about 20 to 25% of the global market. Airbus would end up with the rest of the world, about 75 to 80% of the global market, because no one can afford to pay those numbers.
So it's a matter of waiting to see what the true impact will be in terms of tariffs. It's too early to know right now.
Correct. Correct. And so we would all hope, of course, that that doesn't come to pass. That's an absolute worst case scenario. I'm sure that won't come to pass. But what Boeing really needs today, Phil, is cash. Boeing needs cash. At the end of last year, Boeing had $84 billion of inventory on its balance sheet. For Boeing to get cash, it needs to deliver aircraft. To deliver aircraft, aircraft have to be certified. The entity that certifies aircraft is the FAA. So Boeing has made tremendous steps in terms of quality, safety, and reliability over the last year. We see it because we're on the shop floor buying airplanes every day.
They're better now than they were.
They certainly are, and they're continuing to get better. But the key thing for them is a relationship with the FAA that enables them to certify the aircraft they're building, today the MAX 8, but also aircraft that are not yet certified, the MAX 7, the MAX 10, the 777X.
Can I just ask, is that relationship in jeopardy because of the problems they've had with producing Air Force One and how that has aggravated President Trump?
I would hope not, Becky. I would hope that when they're looking at the lifeblood of Boeing is commercial airplanes. That is what they're all about. Defense, space, the Air Force One, they're not the main event. The main event is the commercial aircraft programs. And if they don't get a working relationship with the FAA to deliver aircraft and certify their new aircraft types, you will be handing more and more of the market over to Airbus.
It just seems like that would require a lot of government relations, and that's been something that Boeing has struggled with recently.
Look, all I can say is the biggest buyer of assets in the world is that we have seen a marked improvement in the quality of the product, the reliability of the product, and the safety of the product. And that's what they've been asked to do, and that's all they can.
That's saying something too, because I have never thought deep down that a Boeing aircraft is any of the things, the opposite of any of the things you just said. I mean.
And how do you think that relates to Airbus? Do you think they have better quality? I mean, given that you just.
No, I don't. I mean, both of these companies help build the world. These companies, both of them, I would have no hesitation whatsoever, and never had any hesitation on getting on a Boeing airplane.
But you're saying you think the quality is better today than it was?
Over the last 2 years, the manufacturing process has definitely got better.
Yeah, you don't want that door.
Kelly has the team moving in the right direction, is what you're saying.
Yeah. You don't want that door in the middle of the frickin' plane, the fuselage. No. Oh, it wasn't a door. What was it? It was a plug.
The door plug.
Door plug.
Yeah.
Thank you, gentlemen. Thank you.
You're very welcome, Joe.
It kind of looks like you could put on a black coat and you'd be ready to go to like a black tie thing. Angus, right?
Yeah.
I like the gray.
Dynamic.
People wear. You got one of those, don't you? Do you have a gray? Is that gray? I can't.
No, it's purple.
Okay. Never mind.
Yeah.
Never mind.
Dynamic.
Coming up, Ray Dalio giving a warning about U.S. debt and its risk to the economy. We'll bring you details about that next Squawk Box returns after this.
/smooth.
Welcome back to Squawk Box. Bridgewater founder Ray Dalio is speaking to Sarah Eisen at the CNBC Converge live event in Singapore overnight, and he's now sounding the alarm on America's debt issue and specifically the mechanics of resolving that problem. Take a look.
There's a supply-demand problem, so that they have to sell a quantity of debt that the world is not going to want to buy. And that's a set of circumstances that is imminent. Okay, that's paramount importance. Then we're going to have to deal, that the deficit must go from what will be projected now to be about 7.2% of GDP to about 3% of GDP. Otherwise, there will be a supply-demand problem. Okay, that's a big deal. You are going to see shocking developments in terms of how that's going to be dealt with. Things that may not have happened in our lifetimes, but things that have happened throughout history.
Dalio also saying that President Trump's tariffs would lead to various types of fighting between the U.S., Mexico, Canada, and China. And the consequences of that fighting, he says, would be important to watch, something we are all watching.
When we come back, Altimeter Capital's Brad Gerstner joins us for a wide-ranging interview on the markets, technology, AI, and much more. We've got a lot to talk about with him, and fortunately, we've got a lot of time with him, too. Plus, the big number of the morning is coming. The February CPI report is out in under an hour. We will bring you those numbers and the analysis as soon as the numbers hit. Squawk Box, we'll be right back.
Welcome back, Squawk So I want to get right to our next guest for a wide-ranging discussion on the markets, tariffs, tech uncertainty, investing in AI, the IPO market, and so much more. Investing in America, what kids might be able to do. We'll talk about that in a moment. Brad Gerstner is founder and CEO of Altimeter Capital, a leading tech investment firm with notable investments in NVIDIA, Tencent, Coupang, Amazon, Meta, Snowflake, and others. Though, interestingly, sir, you have lightened the load during this uniquely maybe uncertain time. So
Well,
I mean, ahead of this.
We started the year. First, it's great to be here.
It's nice
I
to
even
see
put
you.
on a tie for you.
Thank you.
Got rid of the black T-shirt for the day. We started the year markets at an all-time high. We had seen a big Trump bump coming out of the November election, and when you listen just to the words of the president, we knew this was going to be a big period of transition, right? We were going from a period of 4 years of $2 trillion deficits, massive fiscal stimulus, massive monetary stimulus, and we're going to delever the economy, right? He talked very openly about the tariffs, more reciprocity, fairer trade, talked openly about the fact we're going to have some level of austerity with Doge, et cetera, that we'll get into today. Periods of uncertainty. We have high economic uncertainty, high political uncertainty, and high technological uncertainty.
And high multiples.
Right, at all-time high multiples. So there's only one thing that can happen. Discount rates have to go up, right? Risk premiums have to go up, and when they do, multiples come down. So for us, that was just a period to say, okay, we'll go to the sidelines, we'll wait this out a little bit. We've seen the markets come back in, and I have to tell you, we were buying some yesterday, because now you see NVIDIA at 18 or 19 times next year's earnings. Now you're getting paid. You have a margin of safety.
Here's the question, though. Do you think that the uncertainty, I would argue, the uncertainty does not feel like it's over, unless you think it is.
No, listen, the market now is firmly ensconced in understanding that we're in a period of uncertainty. So I think about the first 10% down, Andrew, which I think the NASDAQ troughed it down 14% yesterday from its peak, okay? The first 10% is just digesting the fact that there is more uncertainty. This week was the first week where I saw a banner on CNBC that says fears of recession. So the second 10% really is about growth and recession.
And where are you on that?
So I think the handoff between these two policies, right, can be messy, and it could tip us in to growth concerns or recession. We heard Delta warn earlier this week. We heard cautionary comments out of Walmart. So I don't think we can, go slowly through this transition. I think the economy is fundamentally sound, but I think we need to get clarity around the tariffs. We need to get clarity around taxes. We need to get clarity around reconciliation and Doge. I think the president's going to lead us in that direction.
But just to clarify, you were speaking pretty publicly about this back in early February. I know you did have a podcast where you talked about those things. Did you sell stocks when you say you stepped to the sideline?
Yes.
So you sold a lot of the positions, and now you're starting to.
So we took down our gross exposure, so that's our longs plus our shorts. We took down our net exposures, really to kind of the bottom decile of exposure that Altimeter would normally have. Again, it's just in the too hard bucket, as Warren Buffett would say. It wasn't because we thought we're going to fall off a cliff, but we were concerned that this could be more messy than people thought. Because the magnitude of the change is bigger than people
buy with both hands in the NASDAQ? What is what you would think is, wow, this is dirt cheap? 20%, 25% from
off the peak?
Off the peak.
Oh, well, again, it's all fact and circumstance dependent. If we're heading in a positive direction fundamentally, which I think we are, right? I think we're heading in a pro-growth, lower regulation, fiscally more responsible direction.
On the other side of the
right. And so when you're off 20%, to me that's probably a huge buying opportunity. Because remember this, Joe, as of yesterday, the average stock in the Russell 3000 was down 30%. The average stock. Most stocks in the NASDAQ I was looking at were down 20 to 40%. So yes, the index was only down 14 because of the Mag 7's weight in the index.
So timing is a dangerous game, but the question is, to the extent you think this continues to be messy, how messy is it? How much more is there? And to the extent there's some people who are sitting around going, you know what, the knife is falling, I'm going to let it continue to fall.
The mess could be.
That's the opportunity.
Right.
But the markets bottom long before the mess stops.
Well, no, but
that's the problem.
Like
during the pandemic. You said the next 10% would be from
You're suggesting that there is another 10%.
Well, listen, the future is a distribution of unknown probabilities. So there, of course, is a probability, right? There's a certain distribution that we're going to go further down. And let me give you some scenarios and maybe a framework to guide how we're thinking. So first, the president said April 2nd is going to be a big day. Howard Lutnick has come on here and said April 2nd is going to be a big day. We're going to announce the reciprocity tariffs. So I think we have to wait and see. We have to wait and see what that is. Now the question is that the start, Andrew, or the end?
Right.
Right? If that's just saying, you know, we think the Europeans have $2 trillion of non-tariff trade barriers against the United States, and we're going to impose very high tariffs against the Europeans, then it's more like a start than an end.
And the Europeans are already making noise this morning to say that there would be reciprocal tariffs to our reciprocal tariffs.
Correct.
If that's what.
So I think, listen, on the tariffs issue itself, if you believe that we're heading in the direction, I see Peter Navarro come on here sometimes, I think he's great, but if you think we're heading in the direction of high structural, permanent, McKinley-style tariffs, then we have further to go down. There's not a lot of support on capital.
What do you think?
Right? So I don't. I fundamentally think that, you know, the president is negotiator in chief. He likes to keep all of us off balance. He likes to keep all of his negotiating counterparties off balance. I think it's probably a pretty effective negotiating technique. In order to do so, he has to make you believe that he might actually impose super high protectionist structural tariffs. But at his core, I think he's a free trader. At his core, I think he wants to make deals.
But here's the question from the timing perspective that at least I'm thinking about. Maybe I'm wrong about this. So we have April 2nd coming, and I don't know where. And if, by the way, if you're a negotiator in chief and you want leverage over people, the truth is you might actually continue that process for a longer period of time. Okay. Then you're going to hit the summer, and we're going to have a big conversation in America about taxes and our budget. That will go through the end of this year.
Yes.
Okay. Again, more uncertainty because
I think that'll be done. No, he wants a bill on his desk by the end of May, the reconciliation package. Whether or not it gets there is a question. Could fade into June or July, but I don't think it's going to be the end of the year.
So when do you think that's all going to get resolved?
Well, I think we're going to.
Tax story in America.
My sense is that you got to take it as it comes. Price, you know, the market's going to adjust along the way. But if you think there's a clearing event thus far, I don't see any clearing event, right? We're still in the land of the ambiguous. Every day, everybody's waking up in the morning to see what was said overnight. I think April 2nd will provide a little bit more clarity. I'm hopeful that May will give us what we need. I hope that's the clearing event. I hope we know at that point in time what reconciliation is.
April showers bring May flowers.
Exactly. But listen, the fact that everybody is operating on that framework probably tells me that's not how it's going to work, Joe. Yeah. To your point about the market gets ahead of these things, it discounts it faster, and so a lot of this has gotten discounted in very quickly. I said on that podcast with my partner Bill Gurley, BG2, in early February, I said, you know, my only surprise on February 4th was that the markets hadn't reacted because they had said the words. Right? They had said the words very clearly.
People didn't believe them.
Right,
because
exactly.
Everybody thought that Trump cared more about the stock market than he appears to care.
Exactly.
But then there's another question talking about the stock market, which is he may not care about it today, but as you get closer to the midterms, I imagine he's just going to care. Maybe he's not going to care. You tell me.
He cares about Congress, but he doesn't care about each person that as much as he cares about it. You know.
Well, listen, I honestly believe. You know, and I was
and this goes to when does he have to get all this resolved?
He'd like to keep both houses, but I don't
start to work in the right way if you believe the midterm.
He is not getting up every morning watching CNBC and adjusting policy based upon whether the futures are up or down that morning. I know there is a conventional wisdom that that's the case. I think this president went through a life-changing moment in Butler, Pennsylvania, and I think he wants this term to be of consequence. I think he has beliefs that go back 30 or 40 years. You know, I had a CEO of a major company send me a video of the president from 2016 talking about tariffs. And he said, what's your reflection on this? I said, the man has been remarkably consistent for 30 years on this issue.
Can I ask you, so we talk taxes. So 2017 becomes permanent. What's that, 4 trillion? Something like that. You do the other tax cuts. I don't know how many of those actually go through the tips and Social Security
over time. $3 trillion for just about every one of them.
We're already on track for another $2 trillion deficit this year. Before any of that this year, he says he won't touch entitlements. DOGE isn't going to take care of $37 trillion that we already have, and we're going to keep adding to it. What can he? I mean, that's a worse problem for me than tariffs long term.
Yeah, this president and his economic team, which is incredible, Kevin Hassett, Bessent, the Commerce Secretary Howard, he's got great advice around him, and they want to reduce the deficit during his term in office. Frankly, I think he would love to he said he would love to get to a balanced budget. But I certainly think we'll get to 2% of GDP under his term. Here's how I think we get there. Most of the tax cuts are extensions, Joe. Yeah. But I agree with you. Tax on tips, I think that's $80 billion. Taxes on overtime, you're not going to be able to do all of them at the scope, perhaps, that people are estimating.
But I don't think the CBOE has the extensions.
The CBO.
Not the Office of the State. I don't think the CBO has those tax cuts as permanent in the numbers. That adds how much? That's why they did it in 2017.
Correct. They're going to scale these to 7 to 10 years. But by the way,
they will.
In 7 to 10 years, these things are going to expire. They're going to have to be reauthorized. And you just heard Ray Dalio say, 7 to 8% debt to GDP is unsustainable. Everybody knows
we can get to 2?
I think we can get to 2%
with growth.
And here's how we get there. I've tweeted about this. You can see the chart. Elon retweeted this chart. If you just baseline 2019 federal spending, and in 2019, nobody on this set thought kids were starving in the streets or weren't being educated or we weren't spending enough as a federal government, right? We spent $4.5 trillion in 2019. Grow that at 3% a year. If you baseline that, we should be spending about $5.5 trillion this year. Instead, we spent $7 trillion last year. That is COVID stimulus. That is the Red Bull high that we all put ourselves on. So if you just went back to the 2019 baseline, you grew it to 2029, that's $6 trillion in spending, okay? I think we can get the federal revenues to 6 to 6.5 trillion by 2029 by just growing 2.5%. So I think there is a reasonable shot at getting close to balance at $6.5 trillion in 2029, but you're not going to get the entire wish list.
I'm feeling good.
We've had people who have come in and said the wish list is very expensive.
Yes.
President Trump says promises made, promises delivered. He plans on coming through with that, and that's why the tariffs are very important, because they see that as a form of revenue. Navarro has said that, others have said that.
Yes,
and that is McKinley style.
But I was going to say, Bessent said that the tariffs would not be included in whatever budget is going to be planned.
In the math that they go
Well, I mean, ultimately, the revenue is the revenue, right? Like, of course, the revenue of the federal government is going to be included in the P&L of the federal government. So, the budget forecast may not include because they don't have visibility. Right, but ultimately it will be the revenue.
We asked the question very explicitly.
That's for this year passing.
But let's talk real quickly about tariff revenue. Last year, tariff revenue was $56 billion to the federal treasury. Okay, so the question is, where's it going, Becky? If you think we're going to $1 trillion and we're going to replace the income tax with the External Revenue Service, and we're going back to McKinley style where it was 90% of federal revenues, right? It would require a shock to the global economic system of massive proportions. I just don't think there's support for it among the Business Roundtable CEOs who are in Washington today. There's not support for it on Capitol Hill. But what there is support for is this president getting fairer trade deals with our partners and using this in this moment to get better deals. Now, what would that mean? I think we could take tariff revenue from $56 billion to $100 or $150 billion, right, over the course of these negotiations. Something closer to 10% across the board, but right now it's unknown. He's in the middle of the negotiation. We have to let him negotiate, and if you don't like the turmoil, you got to step to the side.
Who pays the tariffs? Because this morning we already had our reporter in Beijing, Eunice Yoon, talking about how Walmart has been saying to the suppliers, trying to pressure the Chinese suppliers to pick up on some of this, and China's government is basically now saying, forget it.
Sure.
Don't come looking to us for those tariffs.
Sure.
If we end up paying them as American consumers, tariffs a tax, right?
Sure, absolutely, which is why I said we can sustain $50 billion or 75 or $100 billion more, but not $1 trillion more. That would be massive austerity and a massive tax. But, economic theory, we know producers, particularly in China, will absorb a lot of this tariff increase, but we also know that a bunch of this stuff is going to be passed on. So let me give you one example. Canada and Mexico versus China.
Right.
In China, it's an export economy. the producers have no choice but to absorb a lot of the price increase. But in Mexico, if you're assembling an AI server in Mexico with parts that you procured from Asia, right? There's no way you can absorb that price increase. And so those price increases are already going into effect, right? The price of computers are already going up in the United States as a result of this. So I think when you look at Canada and Mexico, I certainly hope, and I think a lot of people share this view, we need to get their action on the border. I mean, listen, credit where credit is due, right? On the issue of immigration, we were told for 3 years that we needed a statute before anything could be done to slow the flood of people across the southern border. Totally untrue, right? And we're back to 20-year lows. So we have gotten a lot of action. I do think it's having an impact on the fentanyl labs in Mexico and Canada. But the reality is those are positive externalities of this negotiation. These are our trading partners. We need to get fair reciprocity from Canada and Mexico and then be done with it and get back to business.
Let me ask you an AI tech question as we look at NVIDIA and all of the Mag 7 and everything else, which is to say, if you do think that we're headed into a recession of any sort, the Metas of the world, the Googles of the world that rely on advertising, the Amazons
Not cheap enough. Not cheap enough today. If you think we're heading into a recession...
So my question to you relates to whether people are going to be buying more iPhones, whether people are going to be buying more from Amazon or not. Because if they're not, those companies are going to have a harder time, I imagine, maybe not, buying NVIDIA chips.
For sure.
Right.
I mean, everything in the everything in the Nasdaq, all indexes go lower in a recession for 2 reasons. Number one, earnings forecasts come down. Number two, multiples come down. So you asked the question, are we there yet? And I said, no, we haven't had a clearing event yet. And so I said I was buying a little bit more yesterday. Why? Because discounts, we had a little fear in the market, right? And I am constructive ultimately. So I hear a lot of people in my world say this, oh, I can't wait to own everything in the back half of the year. I'm going to buy everything on this. Nobody rings a bell.
Right.
Nobody says this is the bottom. We know that there's going to be a process over the next few months of adjustment. I think we're going to end up in a situation that we're going to have reasonable tariffs. I think we're going to cut some expenses, maybe 100 to 200 billion out of the deficit.
Brad, I've been so depressed about 7.
Well, I came here to cheer you up.
7 to 8% was never going to get past that, and you just said 2%, and I'm teary.
You should be. We're going to have the speaker on here in a second.
I asked for a half. Remember we talked half full, half empty. Is he not? You're full. You are so full.
He's half full on the other side, hoping that there's another side. That's right.
Yeah, but he's.
Well, I would say this. I love the direction and the intentionality of what I heard on Capitol Hill, what I heard at the White House. I think there's full intention to rein in the spending, the excess spending. I mean, everybody on this set agrees. Like, we've seen the insane line items that were, that Doge is uncovering. Nobody should be defending that garbage. I mean, listen, in 1997, nobody was cheering louder for Bill Clinton and Al Gore to reduce, the size and scope of federal government, and they balanced the budget. They balanced the budget for 3 years. They had a $230 billion surplus in the year 2000. That was great for America, and we should be cheering for Elon and Team Trump to get this done in this administration.
Brad is sticking around. Do not go anywhere. We're going to have a lot more with him in just a moment when we return. Squawk coming right back.
Higher.
When we come back, House Speaker Mike Johnson will join us live from Capitol Hill for the latest on the budget, the tariffs, and much more. Squawk Box will be right back.
Etsy.com.
It's 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. We are waiting for that February CPI number. That is out in just about half an hour's time. Ahead of it, the futures have been looking up this morning. Dow futures indicated up by about 225 points. The S&P futures are up by 40. The NASDAQ up by close to 175. And Treasury yields that we watched pick up a little bit yesterday are continuing on that trend. 4.3% for the 10-year, the 2 years at 3.97.
The Republican-led House passed the federal funding bill 217 to 213 to avoid a partial government shutdown until the fall, and the bill moves on to the Senate, where they'll need at least 8 Democrats to vote yes. Joining us now, House Speaker Mike Johnson. I'm not even gonna think that there's a possibility that you don't know what you're doing as far as whipping votes. I'm always worried, Mr. Speaker. Once again, here we are. You did it again. Is it you or Trump, or both?
It's a combination. I'm so grateful to have a president who's engaged and willing to help us along with the process. He made a few calls yesterday. That was certainly helpful to get this done. Look, he wants to continue his agenda. We want to continue to find the fraud, waste, and abuse in government. We want to scale down the size and scope of the government to make it work more efficiently and effectively, and this is all part of that process. But I'll tell you what we did, Joe, yesterday. We put on the floor a simple, clean bill to continue funding through September, the end of the fiscal year, and the Democrats, all but one, voted against that. They voted to shut the government down in the House. Thankfully, we got it through. We will send it over to the Senate now, and Chuck Schumer must decide. Senate Democrats have to decide. Are they going to cast a vote to keep the government open, or are they going to be responsible for shutting it down? We'll see what they do.
Did they change their charter about clean reconciliation bill? They love those. I thought that was. They changed it. When did that happen? I missed that. Let me ask you
Great question.
let me ask you an in the weeds question. If Do you think any of the Democrats that are in areas where President Trump had pretty good margins, do you think they were willing to come to the rescue if you didn't have it, and they just, since they had cover, they didn't have to? Or would you have gone down in flames if you didn't get all the Republicans on board?
I tell you what, Joe, we'll never know, but there are a number of House Democrats who are very nervous today. There's 13 of them, 13 House Democrats currently sitting in districts that President Trump won. There are 21 House Democrats in districts that he came within 5 points of winning just a couple months ago. So they're nervous about this. They have very difficult choices to make. Are they going to do the responsible thing and fund the government? You're right. They've all been on video 1,000 times decrying the great tragedy that it would be if we shut the government down, and now they played politics last night. They also really spread a lot of misinformation and falsehoods about what that bill was. A clean, simple funding bill is what they always said they wanted. We presented it, and they voted no. So look, we'll see what they do on the Senate side, but the House has a lot. House Democrats have a lot to answer for.
You I mean, you can't whip senators, can you? I mean, what do you think? How do you think this works? Who are the ones that? I mean, I saw Schumer yesterday. He did not dismiss it out of hand. He doesn't want to be I don't think he wants to preside over the government being shut down if you don't get the 8 senators.
Well, it'll be called the Schumer shutdown. We've already begun the hashtag because that's exactly what it'll be. It is his decision. We have done our job. We have acted responsibly in this chamber, and now it's up to him. And look, I hope every Senate Democrat comes along with that and does the right thing. It is
Maybe
the right
not.
thing.
I'm not looking for 49. I don't know. I don't think you get all 49 or whatever it is. Go ahead.
No, we won't. We won't, and that's the shame of it. But they should.
Yeah.
Great to see you, Mr. Speaker.
Hey, good to see you.
So, you know, we get past this moment. Handicap for us, if you will, just how you're thinking about reconciliation, the timeline, and you know, Joe's over here thinking that we're not going to be able to cut anything out of the budget this time. I'm more optimistic under your leadership and the White House leadership that we're going to actually get to a couple $100 billion in savings as part of this package. Talk to us a little bit about that.
We're shooting for at least 1.5 trillion in savings and hopefully higher, and there's a way to get there, unlike any scenario we've been presented with before. This is a new ballgame. Why? Because we have the DOGE efforts, we have a White House that's committed to scaling down the size and scope of government, making it work more efficiently. And so through the reconciliation process, we'll check all these boxes. We'll fulfill all these campaign promises that we made. It's going to be about everything. One big, beautiful bill. That's why we call it that. The president refers to it that way because it will have border security. It will have getting back to American energy dominance as a big driving force of that. It'll have a regulatory reform and the downsizing of the bureaucracy, the 4th branch of government now. And of course, it will have the extension of the Trump-era tax cuts, among many other things. We have to get all that done, and we will. It's going to help stabilize the economy. It will give certainty to business owners and entrepreneurs and risk takers and job creators. All these things that are necessary to make get back to a flourishing economy and a flourishing society. We're ready to do that. Yeah.
Put it on a calendar for us. I think that's the big thing that everyone's trying to understand. To the extent that you can solidify a bill that actually we know where this is all going, that will take some uncertainty out of the marketplace. But when do you think that meaningfully happens?
Yeah, it's a great question. I mean, I've put it on a very aggressive timetable for the very important reason that we need to get to this certainty as soon as possible. You know, if you're a small business owner, for example, it's hard to plan a year out or to open up a new facility or add jobs or what have you if you don't know what your tax rate's going to be. And if we don't extend the Trump-era tax cuts, small business owners' taxes will go up to over 43% in many cases. So we've got to make sure this is done, and we've got to do it quickly. It's a lot to do in a short amount of time. I put it on an aggressive timetable to try to get a vote on the one big beautiful bill, the reconciliation package, on the House floor before Easter. If we do that, you're pushing it over to the Senate for them to act upon. It's conceivable you could get this to the president's desk by the end of April or early May, certainly before Memorial Day. To me, that must happen because we've got to get certainty. We have to allow the effects and the benefits of this bill to be seen and felt by everybody, from business owners to consumers and taxpayers all across the country. That will happen, but we got to push really hard. There's no rest around here. You know, it's a 24-hour operation to get that done. We have 11 different committees in the House that are working in their areas of jurisdiction to get all the components of that bill done. And they've been working overtime. And by the way, guys, we started this process a year ago. We started last March. We brought the committee chairs together, told them that this would be the eventuality. We would have this opportunity. And so we've been putting the groundwork together for this for a long time.
Mr. Speaker, the markets have been a little jittery. I don't know if that's reached, if that's come over to transom for you, and there are some growth concerns about some of the policy moves that we're seeing. We are, if you're optimistic, we're willing to wait for a reset of things, or you know, there's dislocations that need to be addressed, if you will. But we're told there's no Trump put on the market. There's no Powell put on the market. Is there a midterm House put? Are people going back to their districts right now? And is it just they don't even want to go to town halls, or are those Democrats that are, you know, that are flown in there to do that? What are you hearing from your members? How much consternation is there right now?
Well, there's a lot of hopeful anticipation, I think, in Congress. I mean, certainly we hear from people who are a little nervous about, you know, jittery about what's happening in the short term. But I like to use the analogy of a billiard game. It's like playing pool. When at the beginning of the game, the balls are stacked very clean and neat in the middle of the table, and you begin it with a really hard strike to the center, and you break the balls up and send them all across the table. A good pool player does that to spread them out, and then begins the strategy where you go and sink the balls with precision in the various holes. That's the game. You begin to score. President Trump is that great disruptive force. He's like that you know, pool cue, right? He has scattered the balls across the table. He did that intentionally. He's the great deal maker, as you all know. And what I think a lot of people can take a lot of solace in is that this is not some theoretical exercise. We did this already. We had a Trump administration. And prior to COVID, we brought about the greatest economy in the history of the world, not just the U.S. I mean, every demographic was doing better. Everyone was, because we followed a simple formula. We cut taxes. We cut regulations. I mean, those are our core principles and ideas in the Republican Party, and we did it under Trump. We'll do it again. The tariffs thing has got people nervous here in the beginning, right. But President Trump has a game plan. He's shaking things up. I mean, what he's trying to do is really level the playing field against unfair trade practices. And what he's doing is he's forcing our trading partners to look at America's interest. Yeah.
I mean, this is a very different Trump administration, Trump administration 2.0. The first time around, all of those positive factors for the market, things like tax cuts, that was all put up front. This time it's kind of in the back, and we are going to have to deal with some austerity before that. So sticking with your analogy, how long does it take for this pool game to play out? Are we talking the second half of this year? Or you think it stretches a little longer than that even? These are massive changes with tariffs.
Is there a lot of beer drinking going on? I mean, is that... Everybody's
hanging around the pool table and watching the game. No, look, no drinking here, okay? I don't allow it, at least during business hours here. Look, there's steady hands at the wheel. What you're seeing is the Republican Party here in the House, we demonstrated last night, passing a simple, clean bill to keep the government funded and freeze spending at this level is a signal to the markets and to everybody else. We are doing our job here. We're going to bring stability to this. The next piece of it comes quickly. The reconciliation bill is where you're really going to see all this settle out, because we're going to codify all these things. You remember in the first Trump administration, when we passed the Tax Cuts and Jobs Act, it took us until the end of that first year in 2017 to really get to that. That was too late, and we learned tough lessons by that. We've got to do it sooner. We've got to do it early in the year, and that's why I put this on a very aggressive timetable, trying to get it done by late spring, because that will bring real certainty and I think calm to everybody about what their tax rates are going to be for the foreseeable future and how we're going to settle this out. We bring down federal spending dramatically, which we're aiming to do. That will help as well. I mean, I think it will bring stability to the bond markets, because, as you know, a lot of people, a lot of investors are concerned about the blossoming federal debt, the growing federal debt. We are going to address that now, and I think that's going to send
Speaker, look, if you're able to accomplish all of this, I think it would create a lot of uncertainty. I think the question that a lot of folks have is, if you're not able to accomplish it as quickly as you want, what happens then?
Well, look, I have to have cheerful persistence here every day. Okay, that's what I do. Is pushing everybody to action, making it happen. They always underestimate us, but we always get the job done. And I can tell you, I'm speaking on behalf of House Republicans, my team over here. You know, I've got almost 220 people who understand the gravity of the historic moment we're in. They understand the opportunity that we have, and they're excited about it. So we come to work every day, rolling up our sleeves, trying to get everybody to yes. And we will. We're going to find the equilibrium point that does this, that not only dramatically cuts federal spending in a way that's responsible and good for taxpayers, but also fuels the economy again, to get the economy going. I mean, this is going to happen, and we are working on it every day. We have been, as I said, for a long time, and those big moments are coming. So watch the reconciliation process. I think this could be the one big beautiful bill, as we talk about, could be possibly one of the most consequential pieces of legislation that Congress has ever passed in the history of this institution, and we're excited about it.
And Mr. Speaker, I agree. I would say the debate, that's roiling the markets more than anything else is this question, when we hear 25%, 50% tariffs, fundamentally, I've made the argument on set here this morning that I believe that Trump is fundamentally a free trader who simply wants to bring the trade deficit down through fair negotiating deals. He says reciprocity. Make sure that we get treated fairly and we're not the stooge at the table, right? But there is a growing concern, even on Capitol Hill and among CEOs, that they're hearing too much talk of McKinley-style tariffs, tariff revenue of $500 billion or $1 trillion. I heard from a lot of CEOs who say, the tariffs on Canada and Mexico really disrupt their businesses. So are you in the camp that I am, that fundamentally these are negotiations? He's going to get us better deals, but ultimately we're going to, stay in the system of basically fair trade we've had for the last 40 years? Or do you think we're heading into an entirely new normal of McKinley-style tariffs?
No, I agree with you. I mean, I've always thought of myself as a Reagan Republican, and on the economy, we believe in free trade and free markets. But President Trump brought in a different element. There was a blind spot in the party for a long time. He said, yes, we talk about this all the time. He said, yes, Mike, free trade, but fair trade as well. And he's not wrong about that. It resonates with the American people. The reciprocal trade idea, that concept, is to level the playing field. And I think ultimately the result is what you're suggesting, is that if we have a huge disparity with a trading partner and we match them, dollar for dollar in what they're doing with tariffs, it will bring those tariffs down for both sides, and that will get us closer and closer to an actual free trade concept. The time has come for that. After World War II, everyone has really taken advantage of the U.S. We were the largest economy, the biggest superpower, and they felt like they could engage in this kind of disparity. We have to level the playing field. President Trump is a refreshing perspective and voice on that. I think it resonates with the American people because they think fairness makes sense, and we've got to get our trading partners to pay attention to that. President Trump is the only one who's been bold enough to make them do that. You have to force trading partners to respect America's interest, and they are now. And I think that's a great innovation.
Well said, well said.
Mr. Speaker, great. We're going to end it there. Thanks for all the time this morning.
I think I lost the audio there.
On your way. Yeah, I think you got things things going on. Thank you.
Okay, when we come back, we're going to have more on the markets ahead of the CPI data with our special guest, Brad Gerstner of Alpena Capital. And then former Treasury Secretary Steve Mnuchin is going to join us for a wide-ranging interview as well. We got so much going on this morning. We're coming right back.
Insurance.
Our guest, Brad Gersner, is still with us. He is the founder and CEO of Altimeter Capital. And Brad, I thought your last question to the speaker was a very interesting one. The idea that you and the speaker both think that this is a negotiation when it comes to the tariffs. There's a lot riding on that in the markets right now. And again, this decisions for investors, for consumers, for business leaders, when they believe the president and when they kind of look through to say, is this a negotiation?
Yeah, I think this is the fog of war. Right, and even
fog of a trade war.
Fog of a trade war. Even when representatives come on set, I watch every day. Everybody watches every word. You guys have Hassett or Bessent or Peter Navarro come on set.
Now, you have to guess what they're messaging at the time, which way it's headed.
And if I listen to Peter Navarro, right, many times he sounds like a McKinley style. Right, he wants McKinley-style tariffs. Now, those were very high protectionist structural tariffs for the United States. And so I think that would scare the markets. I'm not saying, we can debate philosophically whether that's good or bad. I happen to think that's bad, but it certainly would scare the markets because it would be a dramatic shift from what we have today. Right. But I think when you listen, think about, I've called it the Bessent consensus. He wrote in his LP letter, a fully loaded gun rarely discharged. And where does the president sit? I think the president sits right in the middle. I think he's going to negotiate like hell. I think he's going to be unwavering about fair trade, right? And we know we're getting ripped off by some of our trading partners, and he wants that to end. And the only way you can get that to end is to show them that you're dead serious in the negotiation. The question is ultimately where does this land, Becky? And part of the reason people get nervous, right? CEOs get nervous. They get whipsawed in the process. They got to make real life decisions about what do I do with prices? What do I do with my supply chain, et cetera. So this needs to happen very fast. And there is a concept of negative reflexivity. So you start off as just a negotiation, but then one of your trading partners goes off the rails on something, and all of a sudden it ends up in a fundamental issue.
One of your trading partners acts the same way that you're acting, and it is going to put reciprocal tariffs on the reciprocal tariffs that you're already putting on. We can't control what they do, and the one thing that you're worried about is that we somehow stumble into a recession.
So think about what we just talked about. It's all uncertainty.
Yeah.
When uncertainty goes up, discount rates go up, risk premiums go up, multiples come down, markets come down. That's the explanation for the last 4 weeks in the market.
One thing that we have talked about is the Trump put. We don't know if it still exists anymore. I think we kind of suspect it doesn't in the same way. But what about the Fed put? Does the market still think that there's a Fed put out there? How important is that to where prices are right now?
Yeah, I mean, I think the concept of the put by any of these parties is way too simple. The world's far more nuanced than that. But I think we do have the Fed's attention. Right? And the Fed's attention, they're probably a little bit nervous about tariffs. But when they hear Delta Airlines warn this week that they're seeing, a softening of consumer demand, when they see United Airlines, Scott Kirby, say the same things, when they hear that from Walmart, they're calling all the CEOs in their district and asking them, and I'm certain they're hearing from the CEOs exactly what we're talking about on set. Right. Uncertainty in planning. When there is uncertainty, you don't make decisions. You don't make capital investment decisions. You don't make hiring decisions. And so I'm sure that's flowing through. I think that's okay. The economy's strong enough. We can withstand a certain amount of that. But that's why I think that the Speaker and the White House are moving at lightning speed. They know this can't drift into the summer or fall, or you run the risk of starting 2026, the midterm elections with a recession. That would not be good.
Well, let me ask you, related to all of this, and this goes to the context of just what the relationship is between the United States and the rest of the world. Mm-hmm. Do you believe, and we're already hearing from travel companies and other places that, foreigners don't necessarily want to come to the United States now. Mm-hmm. And what you think all of this does, not just to travel, but to the sort of larger relationship that the U.S. has with the rest of the world, and to the larger idea of investment in the United States by foreign companies and others who may be looking at this going, you know what, I don't know if I like these people the way I thought I did.
You know, I don't really buy that we're doing any terminal damage to that. And if you look at investment in the United States, right, TSMC stood there with the president and said, we're going to invest another $100 billion in the United States. I mean, the list of companies, I think we're up to $1 trillion, $1.5 trillion of reinvestment. There's no doubt.
Hold on, but can we just be, look, I pray that all of those commitments and pledges come true. The reality, at least from, if history is any guide, those pledges, in 3 or 4 or 5 years, we will look back, and it is unclear whether they will be.
There are 5 TSMC fabs.
Okay.
In Arizona, they got built as a result of these negotiations in Trump's first term. So the fact of the matter is, like, those did happen.
Yes, but Foxconn and others didn't. Sure, I think we can look at those examples, right? So that is a reality. And so when we look at these commitments, I look more, for example, right now at just basic things like the mergers and acquisitions market, which is a great sign of people's confidence in their own business, typically.
Right.
And the fact of the matter is that we are at, like, almost not historic lows. We're like back in 2015.
Well, let's talk about that for a second.
When you look at the actual numbers of what's going on, you have to say to yourself, talking about investment.
Yes.
If people actually wanted to invest here, I mean, we can look at the big numbers that were at the press releases.
Sure.
But what's actually happening on the ground, people are not doing anything. They're sitting on their hands.
Well, so a couple points of clarification. First, I think that construction in the United States is very real. You know, I talked to a large, domestic technology company that's currently constructing servers in Mexico, going to build a big plant in Texas. Like, there's no doubt in my mind that we are going to do some reshoring. But let's, go, to some of these other issues, as it relates to the positive byproducts of what the president's doing. I think that he is jawboning a lot of investment in the United States right now. But when you have uncertainty, all of this gets postponed. And all I'm saying right now is we're in this period of uncertainty. People want to see it settle out. The president needs to give some clarity around that. But I think it's going to result in...
Just so we're on the same page, when you saw Apple's quote-unquote commitment to the United States, right, the $500 billion, did you not say to yourself that that was a press release, in that they were planning to do most of that already? They had made a similar press release under the Biden administration in 2021 for $430 billion. When you saw the announcement by SoftBank with OpenAI,
well, I know that's happening.
And you saw Elon Musk say they don't even have the they said they don't even have the money. Then they said, go look at this other plant that we're building, and then they said they'd already started building it before Trump ever showed up. So
so two quick things. Number one, CoreWeave announced yesterday a $12 billion deal with OpenAI on Stargate. Those things are getting constructed. We're investors there. I can tell you those things are getting built. Secondly, on the M&A markets, we just had a $3 billion deal announced yesterday. ServiceNow bought MoveWorks in the United States. I can tell you every company has pulled their M&A teams off the beach. They haven't done anything for 3 years, and they're all back to work. We're going to hear a lot of M&A announcements over the course of the next 6 months.
Brad, I want to thank you so much for
It's great to be here.
spending the time with us. Great to see you.
Yes.
Squawk Box, we'll be right back with CPI.
right, Squawk, we are just seconds away now from February CPI. Rick Santelli standing by at the CME in Chicago. Rick, the numbers.
Yes, boy, this is a biggie. This is our February read. Consumer Price Index expected up 0.3, comes in a tenth light, up 0.2%, and in the rearview mirror, at least now, not revised, and up 0.5%, by the way, was a 2-year high we're reversing from. Up 0.2 equals where we were in October. To find a lower number, you're back to July of last year. Strip out the important food and energy, it remains up 0.2 on core. That's following up 0.4, which was the highest level since Feb of 23. 0.2, well, we equaled Dece of last year. To find a lower number, you're in June of last year. Year over year, a headline number, 2.9 expected, 2.8 is what we get. Last look was 3%. 2.8 to find a lower number. You're in November of last year when it was 2.7. And do remember that cycle at the end of last year, we actually saw 2.4 on the September read, just to put a face on the fact that we have been lower. And if you look at X food and energy or core year over year, 3.1. 3.2 was what we were expecting. 3.3 in the rearview mirror. 3.3 in the rearview mirror was the highest since May of last year. 3.1, to find a smaller number, you have to really go into the Wayback Machine. You're going to April of 21 when it was 3%. Now, I know many don't look at the following, but if you look at the actual index of CPI, that goes back to 1913. Right now we have 319.082. That's another all-time high going back to 1913. If you look at core, that was started in 1957. It comes in at 325.47, and guess what? Another new all-time forever high. Go use that inflation tool on the Bureau of Labor Statistics and the website, and what you'll find is inflation's running over 20% on a compounded basis going back to pre-COVID. Interest rates initially moved lower as they looked at the month-over-month numbers. You know that parlor game, you analyze these numbers, but in the end, they're still sticky. And just to point out something, our last look, still unrevised, these inflation numbers were hot last time, unlike today where they're a bit cooler. And what happened? We settled on February 12th, the last time January CPI was out, at 463 in a 10-year. It was the high water mark. Hot inflation, all we've done since is go lower. And the reason I point that out is there's a lot of moving parts pushing yields around these days. Andrew, back to you.
Okay, Rick, thank you for that. Steve Leisman is right here, looking at these numbers.
Yeah, there was a concern we would come in on the high side. Everybody said they were looking for upside surprise, so it's really good to come in below here. You got some help from food, Andrew, up just 0.2. You got a pop in the, I have the egg category, but not eggs themselves on the top line data. Meat, poultry, fish, and eggs up 1.6% after 1.9 the month before. Dairy products were down. I don't want to go through too exhaustively. Energy was well behaved. You got a decline in airline fares down 4%. We don't know if that's a demand thing or that's just an energy thing being passed through. And then, of course, the owner's equivalent rent has been much better behaved right now. And where we are is we're going to see some impact of the tariffs. Nobody knows how much. I can't tease it out of here right now. I've been looking. I'd look for core goods used cars would be one place to look for it. That's one place where people are concerned. You might see that first initial round. We're going to see some impact in the months ahead. Nobody knows how much. It's very difficult to game it out right now. Right now, the street is looking for rate cuts from the Federal Reserve. These kind of numbers get the Fed closer to where it could be, but you would think it would still be a little bit too hot for them to say, okay, I'm going to cut next week. Right. But in this trajectory, you can say, you know, we could maybe think about one if you don't get a big and lasting. In other words, this idea of the pass-through, it's the big and lasting tariff impact that I think would most likely stay in the Fed's hand.
But you still want to see the CPI numbers
Yeah.
tomorrow.
PPI.
PPI numbers tomorrow.
PPI is where you would see it first, but again, we talked about this for a long time. There's pass-through. And pass-through, you could reduce margin. That's bad for investors in stocks if there's a margin reduction. but it's better for consumers if they eat it. Remember that chart I showed that you were a little bit perplexed about all these stations along the way where tariff impact can be reduced? There are 4 or 5 places where you could absorb it. We'll see how much goes along. Has to do with how much competition we have in the business, what the elasticity of supply and demand are.
Steve, thank you, sir.
Yeah, earlier I said that
What's that?
that I wasn't as worried about that. The concern now is growth, not as much inflation.
That's true for this moment, Joe.
But the stock market obviously still cared about inflation.
Yes.
Because it's up. The market suddenly is. I mean, who knows where it is at 4 o'clock? But right now it's up over 500 points out. There's still concerns about, that'd be bad to have a growth concern and an inflation concern.
Well, that would be the stagflation thing, which is the rare occurrence that shouldn't happen because prices should adjust to growth. But
we're up 330 now. The market's bouncing around a lot.
And now we learned what bothered the market, or was something bothering the market, was this this issue of inflation was still on its mind. What I think the market may be saying is, okay, if we have cool inflation, the Fed can react on the growth side.
And it would also be good if we knew, the inflation we were worried about that was still in the pipeline. It'd be nice if the only inflation we had to worry about was the tariffs, and we could put some of the old stuff away and say the Fed did its job and didn't leave that, didn't put a stake in the heart. And
That's
now
a Kevin Warshian idea.
It is?
Yeah,
Warshian. That's
Kevin wrote an interesting piece that said,
like
no matter what the administration does on tariffs, the Fed is still responsible for the inflation outcome. It's an interesting idea that he wrote.
Okay. Let's get to our panel. Peter Earle is a senior economist at the American Institute for Economic Research. Angela Hanks is a former CFPB and Labor Department official. Rick, I don't know if I got to give you a chance to at least respond to whatever you want to say. Then I'll get to Angela and Peter.
I think that there's so much talk about the administration trying to push long-term interest rates down, and we all know why. Housing is a key aspect of the economy that obviously is not running on all cylinders, but I think very little of the action to the downside had anything positive to do with the administration. And in terms of inflation, there is a lot still cooped up in the pipeline, and there may be even more to come. Look at some of the horrible issues in California after the fire, insurers not wanting to go back. There is going to be costs to home ownership. There's going to be costs to energy that remain very, very sticky, and I don't see any of that dissipating anytime soon. I think stagflation is going to be the word most often used, but I think recession, I don't think I see a recession, but I do see a period of weaker growth. But then again, it shouldn't be shocking. If you pay for growth and then you stop paying, you get less growth, and that's really what this game's about.
Angela, you can start wherever you want, but are you at least in agreement? Is growth more of a concern now than inflation coming back or staying sticky?
I think it's too soon to say on both. So on inflation, I'm glad to see that the numbers are down from last month. But as many people have mentioned, we aren't seeing the impacts of the tariffs in these numbers. And we've had a pretty rocky March, which I think gets us to growth. While we should be paying closer attention to the inflation numbers and watching them over the coming months as the tariffs may or may not go into effect in each of these countries, we also have to be worried about the fact that even the president and the commerce secretary at this point are predicting a recession. If they are concerned that growth isn't going to happen and they're the ones who are in charge of ensuring that it does, I think the rest of us all have reason to be concerned. I think between the tariffs, the kind of chaos of DOGE, the mass layoffs of federal workers and the critical services that they provide, these things will have an impact both on the federal workforce, but also sort of downstream effects on the economy overall. And it's early, but I think we'll start seeing those in the coming months.
I think maybe I misheard you. You didn't say the Commerce Secretary and the President were predicting a recession. You said neither one of them are predicting a recession, right?
Oh yes, I said they both are.
They're not predicting recession.
On Sunday, the president declined to say that he didn't expect a recession.
Well,
Yesterday,
that's not predicting one. And the Commerce Secretary we were even making fun of him to some extent that he was so definitive about there not being a recession. That's absolutely
She
false.
may mean the Treasury Secretary.
Oh, do you talk Treasury Secretary or Commerce Secretary?
I believe the Commerce Secretary.
No, the Commerce Secretary said, we even were like, whoa, how's anybody know? But he said, anyway, Peter Earl, your comments?
Yeah, I mean, my view is that the decline in oil and certain food prices would show up as easing in the headline numbers, that the service side would be softening up, mostly due to falling consumer demand. There's a lot of price pressures at work right now, but at this point they're taking place very early in inputs and early stage production goods. They haven't been passed on yet, so I think we'll see that in CPI, and we're definitely already seeing it in the regional numbers, the Fed numbers, the ISM numbers, the S&P Global Manufacturing Service numbers. So I think they're coming, but they're still a ways away.
Can you explain I'm not worried about CPI anymore, Peter. Now I'm worried about the PPI. Can you tell me whether I need to worry?
Amazing how quickly Joe moves on.
But you told me to worry about the PPI. Yeah, Steve told me to worry about the PPI. Why should I worry about the PPI?
Thank you for listening.
Well, I mean, the thing is that there's really three factors that determine how bad tariffs hit us, right? One is the actual number, the percentage. First time around, first trade war, they're about 3% weighted average. Today, they're 10, 20, 25%. First time around, they were targeted on capital goods. This time around, they're on everything from capital and consumer to consumer goods and all that type of thing. And third of all, we don't have the things like, a tax break to sort of soften the blow. Companies are going to be less willing to eat them. So I would watch for the PPI tomorrow. But also, like I said, very closely watch the ISM numbers, the S&P Global numbers, and all of the Fed regional numbers, which show a lot more about what's happening in manufacturing and in the early stages of industry.
Okay, we're going to end it there. I want to thank everyone, Steve Leisman, and thanks for the numbers, Rick. Peter Earl, Senior Economist, American Institute for Economic Research. Angela Hanks, thank you, former CFPB and Labor Department official. Yeah.
All right, up next, former Treasury Secretary and the founder of Liberty Strategic Capital, Stephen Mnuchin, will join us. We'll get his reaction to the data, this volatile market, and the president's tariff battle. Squawk Box will be right back.
Welcome back to Squawk Box. The futures right now after that CPI data. Take a look at where things stand. We got some green across the screen. Dow up about 226 points. You're looking at the Nasdaq up about 268 points. You're looking at the S&P 500 up about 53 points. Join us right now, though, with a look at the economy and his take on all that is going on. Former Treasury Secretary Steve Mnuchin, now founder and managing partner at Liberty Strategic Capital. Mr. Secretary, it is great to see you. We've been having a wide-ranging discussion all morning, including with Mike Johnson, about where we are, specifically where we are in the context of these tariffs. You were part of Trump 1.0. We're now in 2.0. Back in the day, you often talked about the stock market and looking at the stock market as a barometer of where things are. 2.0 is saying, don't look at the market. There's bigger fish to fry down the road. What do you think of what's happening right now?
Well, first of all, it's good to see you. Look, I always said I was focused on the stock market longer term, not where it was on any day. And I do think the stock market longer term is a great barometer of the economy. I think Trump 2.0 has a lot of similarities to Trump 1.0. His focus on the economic issues are tax cuts, regulatory relief, and trade. And the president has always believed in adding tariffs. So I think that's what we're seeing in the market today.
Did you push back, though, on some of the tariff efforts in 1.0?
Look, I've been a believer in tariffs are important in getting people to the table. And there's no question if you take China, there's no question that the president's tariffs were the only reason they came to the table. I support the president putting another 20% to get them back to the table. They haven't lived up to the phase one trade agreement, and that should be the priority. And if they do, the tariffs can come off. And if they don't, I'm sure the president will add more tariffs.
What do you make, though, and what do you think the public should think about the uncertainty that all of this has clearly created within the economy? And you can look not just at the stock market, but so many different indicators where CEOs and others who I think people thought might be making investments are saying, you know what, hold on, we got to actually watch and wait and see what's going to happen before we do anything.
I think that people are overreacting a bit. So let me just start off with, this discussion around a recession. I don't think we're going to have a recession. I don't think the outlook looks like we're going to have a recession. And Larry Summers saying there's a 50% probability, I just don't agree with that. We've had a 5% correction in the S&P. We've had close to a 10% correction in the Nasdaq. Both of these indexes were at very high levels and had huge tech spending built into these. So I don't think anybody should look at what's a natural, healthy correction of these indexes as indicating that the economy's in trouble.
Steve, I didn't, Mr. Secretary, I did not see everybody around the crypto summit. I don't know all who was there. I know the Winklevi were there. I know Sachs was there. I don't think you were there, but immediately, and I'm glad you're laughing because I'm laughing too. Immediately, these people on Twitter remember things. They remember our conversation where I said to you something about Bitcoin, and I go, oh, you're going to own it. And it was 2019. And I go, well, the Treasury's going to own it in 6 years. I just was like sort of just yanking your chain about whether you're going to load up on Bitcoin after you were Treasury Secretary. And I just want to get your comments now because it has come a long way, baby, at least from that conversation we had to a sovereign fund where people are maybe looking at ways of even adding to that. What's your comments on it now on Bitcoin?
I don't own any Bitcoin. I missed the rally in Bitcoin. There's plenty of other things that one could have bought that could have made a lot of money that I think if you hold
not
for
that
the next
much, not that much, unless you leverage the hell out of NVIDIA or something.
Well,
maybe NVIDIA.
I still look, as I've said, if people want to buy Bitcoin as an asset class, they should do that. I continue to be concerned about the issues of transparency in all these cryptos and making sure that we're fighting terrorist financing and making sure that we don't treat them like Swiss numbered bank accounts. But
store value, Steve, do you buy it like gold, digital gold, or still need some more proof?
I don't buy it as a longer term asset, but then again, I don't invest in gold either. I like owning stocks that generate earnings.
Mr. Secretary, though, but let's go back to this reserve idea. My understanding is eventually the U.S. government is intending, I think, to ultimately buy more of this with its own with taxpayer money. No.
Well, I don't want to speculate what they're going to do or what they're not going to do. I mean, from my reading of the executive order, it actually was helpful to say they're not going to go out and spend taxpayer money to do that. They obviously have crypto that they've retained from various fines and other issues. I think, the gold is still there, by the way. I have no reason to believe that they've moved the gold since last time I checked on it.
Let me ask you a different question. Several of your former peers in your role signed an op-ed about a month and a half ago now, maybe a little bit longer even, about the way, their concerns about the way Doge and Elon Musk were going about their work. I think less about the work itself in terms of trying to actually find savings and more about the process. You did not sign that letter. Did you talk to them before they published that letter? Did you consider it?
I did speak to some of them. I didn't consider signing it. I have a lot of confidence in Scott and what he's doing. I think the letter kind of addressed certain issues at Treasury and what were the payment systems, and I'm comfortable with what Scott is doing and that the payment systems are secure. So no, I didn't see a reason to sign that letter.
Mr. Secretary, what do you think about the tariffs, not in the tariffs themselves, but maybe more importantly, the back and forth with tariffs are on, tariffs are off, this negotiation that's taking place that has led to some concern from corporate leaders and potentially investors and consumers too, just about the feeling of unease, not knowing what's happening and whether or not that could really put pressure on activity, corporate activity, on consumer activity.
There is no question that President Trump is trying to change the dynamic of trading relationships, and there's no question that he cares about the trade deficit, and he's focused on reducing the trade deficit both across the board and with specific countries. And that's a long-term change that he's focused on over the next 4 years. So I don't think people should be focused on this on again, off again. I think there's no question that there are going to be industries, let's just say the auto industry, which is a big focus of his. He wants more auto manufacturing in the U.S., and there may be issues along the way that impacts certain companies in the transition. But overall, I think if you step back and don't look at a specific company and you look at the economy, I think these are all moves that are going to be very good for the economy over the next 4 years. I was encouraged to hear the speaker say he actually thinks he could get a bill to the president by Easter. I mean, that's very aggressive. I do think getting the tax cuts on the agenda is an enormous priority.
Secretary, I'm going to start singing thanks for the memories, because we always used to talk to you about the dollar, too. We always try to get you to, I don't know, to not just come out with the standard, we are in support of a strong dollar, because there were certain things we thought at times maybe a weaker dollar would have been something that would be advantageous, and I don't think it ever more than maybe today. And we asked Scott Bessent last week about it, and he reiterated the strong dollar policy. But wouldn't it solve a lot of, if you let it slowly weaken, would it solve a lot of the problems that President Trump is trying to address with trade imbalances and future debt repayment and everything else? Do you think we still have is that cast in stone strong dollar forever?
I actually believe the important policy is a stable dollar as opposed to a strong dollar. And when I tried to indicate that as Treasury Secretary, the markets reacted. But I think that if you just look at the dollar, and the markets are what determine the exchange rates. And I look at the U.S., I think the U.S. is going to outperform Europe and the rest of the world. I think the dollar is the only safe haven to store assets around the world. And I really don't see any challenge to the dollar, at least in the next 10 or 20 years, as the reserve currency. Now, there could be things that change, but I think when you look at all those different things, you're going to either have a stable dollar or a stronger dollar. And obviously, interest rate differentials, have a very big impact on what happens to the dollar, because you can arbitrage various currencies based upon the difference in interest rates. But no, I don't think a weak dollar is in our interest, but I do think a stable dollar and not an overvalued dollar is in our interest.
Secretary, one final question for you, just because I think the American public, or at least some folks who are critical of this administration, are wondering about it. You know, when you went into the administration, you effectively gave up virtually, I think, most of your, not assets, but, you know, you're selling stock and moving things into blind trust and doing all sorts of things. Obviously, Scott Bessent and some others are doing that, but there are lots of other people in this administration, or at least people who are involved in very big decision-making, that still own all sorts of stocks and other assets that could be impacted by the work that they are doing. How do you feel about that?
Well, let me just say, it was a great honor to serve the president and serve as Treasury Secretary. And the last thing I was concerned about was having to divest assets. I didn't use blind trust, just to be clear. I sold all my assets and put them in basically market indexes. I think there is this concept of a special government employee that certain people are in today. I think it's meant for a relatively short period of time, and my understanding is they're still bound by the ethic rules. But if those people end up in the government longer term, I do think they should have to abide by the same issues. But I think it's helpful in terms of getting people into the government shorter term.
Mr. Secretary, we always appreciate talking to you. We very, very much appreciate it and look forward to talking to you again very, very soon. Thanks.
Thank you.
You bet.
Oh, we're coming right back, apparently, or squawk on the street. Either way.
All right, let's get a quick check on the markets after everything we saw this morning. That CPI number that was much tamer than had been anticipated. You now see the Dow futures up by 316 points, NASDAQ up by 321, the S&P up by 66. Treasuries, again, the yields had been a little higher. Now you're looking at 432, so we picked up a few basis points there too.
Up or down from here?
For yields?
No.
Or for equity?
Andrew?
I'm not even making a guess for 9:30.
I'm going up.
For 4 o'clock.
I'm going up because I'm Pollyanna. Up from here.
Save the tape.
Somebody wrote in, same blood type, be positive, right?
Be positive.
NASDAQ again up by 325. We'll see what happens tomorrow. We get producer prices, so it's going to be another big data point coming up at 8:30. Right now it's time for Squawk on the Street.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer at Post 9 of the New York Stock Exchange. David Faber's on assignment. Stocks do look to get back some of Tuesday's losses as February CPI comes in cool, up 2.8 on headline. That's the lightest since November. The EU, though, retaliating with some tariffs, 10 years back above 4.3. Our roadmap is that CPI print, helping fuel this pre-market bounce. The president's tariffs on steel and aluminum take effect today. The CEO of Cleveland Cliffs going to join us to discuss the fallout there. And Goldman Sachs lowering its year-end S&P target. Tech stocks, they say, are now transforming into the Maleficent 7. Let's begin, though, with market reaction to CPI after those back-to-back negative days for stocks. Jim, not bad. Shelter 4.2 year-on-year. Food away from home 3.7.
Right, and the food away from home, if you had a raise in price, and I deal with a lot of the restaurants, that's going to come down. The numbers for those who raise price or have high price, the sales are very, very bad. Sales aren't that good at Walmart. I mean, so what are you going to do if you raise your price of food? I do think, by the way, medical care intractable and rent untractable. Wish I had positive reads on that. Obviously, airline tickets, well, say goodbye to that. We know from Delta yesterday, you're not going to be able to keep that price up. Food is going to benefit from the fact that eggs have cratered. Energy's fine. Great stuff, by the way, by Brian Sullivan yesterday. Really fabulous reporting. People should recognize his serious stuff is just A+. You know what? I really like it here. I really like the market. Market's good.
Meaning you think it's gotten cheap enough?
Yeah, I do.
Without fundamentals completely falling apart?
Yeah, absolutely. I mean, you have to watch Tesla. I think Tesla's bottom. You have to watch NVIDIA. It sells at the market multiple that it always seems to bounce at. And of course, they got GTC next week. Yesterday, we had this kind of scalper sell-off in the last. They started the rally too soon. Rallies
You did
started
say
245.
you said around 2 o'clock. Don't do it now.
I have studied rallies over 20 years, and the successful ones begin at 247. The fact that I know that is completely ridiculous, but I actually traced them out. That's what I do. It's what benefited, one of the 7 or 8 benefits of being old. And we have a lot of stocks that are set up. A lot of stocks that are set up.
Well, yesterday you had backed off on some of this Canadian rhetoric with the surcharges and the 50%.
That's very key.
We got Ukraine at least agreeing to this 30-day.
Why do people ignore that?
We got a House CR, even though we'll see what the Senate does in the next 2 days.
The Senate looks good according to the stuff I've gotten this morning.
So that's all constructive.
Well, I think that, by the way, I think you have to view this market as, this is apolitical, but I put it this way, wins versus losses trump. The way that Canada blinked on electricity, win Trump. Ukraine, where he's now back giving them the weapons, Russia's not playing ball, win for Trump, meaning like, hey, listen, I'm flexible. Wins for Trump matter. We get the no government shutdown, win for Trump. Where are the wins for the other side, for the bears? Don't see them. Not CPI, looking for something, can't find anything. I think that we're going to see a resumption of M&A. I think we'll see a resumption of the IPO market, which will be read by CoreWeave, which is going to be a very big deal that helps the data center. So, look, can anything happen? I mean, if the president starts saying, listen, we have to put much higher tariffs, we have to change our tariffs on German cars. Yeah, but I think what people don't realize, and I hope that Lorenzo can help us, because they don't, what this whole thing is, and thank you, Peter Navarro, for teaching me this, they don't buy any of our stuff. So they don't have enough to retaliate Europe. I mean, it's kind of really, they spend a lot of time in business in Europe. I wish that they bought stuff from us so that they could tariff it. But people don't realize how screwed we are. People just, I mean, the president's done a really poor job of explaining the tariff list, and I've tried to criticize those guys and saying, will you please show people that they don't buy any of our stuff so they don't even have anything to retaliate with? $28 billion. Where's the Levi's jeans? I mean, come on.
We're getting back to do you have a trade deficit with your barber? I mean, why punch down like that? That's the argument.
I mean, look, I think that the tariffs, that President Trump has been angry and he's not been very thoughtful. I mean, look, we talk about McKinley. I mean, McKinley, we had industries we wanted to protect. By the way, referring to McKinley, can I just say that's a joke? I mean, let's refer to Hamilton. Hamlin was the guy who really put the tariffs in. Well, you want to go back in history? Well, you know, I mean, what are we going to go? Let's go back to Moses. I mean, let's stay a little more relevant.
The Journal again today, just pounding the administration on this trade war, dumbest war in history, and we're being kind. Jim, today, Politico pointing to Lutnick getting ahead of some announcements saying that he's likely to take the fall for whatever disruption we see here at
the long knives are out there for Lutnick.
Yeah.
The long knives, you never want the long knives out because they're hard to take back. But I think that the president's inability to articulate how horrendous our so-called trading partners are is causing a lot of the problems even with the Journal. I mean, look, they buy Jack Daniels, not as much as they used to because of the GOP-1, which is Novo Nordisk. Historically, they bought jeans. But what we make, they don't take. As someone who has tried to buy U.S. stuff in Italy, it's so much more expensive than whatever they have there. It doesn't matter. You know, I have to beat my swords into plowshares rather than buy a deer.
Would you trade U.S. growth for Europe's growth?
Well, Europe's doing better than we are right now.
At the moment, yes. Yeah, as they begin to lever up.
Europe's crushing it. Well, you know, if you're going to do the bazooka like Germany did, where they're finally using deficit spending. But you know what? I keep coming back to Spain, which is not, remember, Spain's a hard economy. But when you have the largest bank in Europe being Banco Santander, what does that say? And what it says is that if you're disciplined and you lend well, you win over there. And now I'm looking at a guy like Charlie Sharp, and he must be saying, at Wells Fargo, like, what the hell? Why can't I put up Santander's number? Of course, Anna Boutine was fired from J.P. Morgan. She would have been a worthy successor to Jamie Dimon in 2042.
Yeah. By the way, Goldman with a great chart looking at the PEG ratios for EU defense companies is closing in on Mag 7.
Well, remember that term went away when Broadcom passed it, and Berkshire Hathaway. I think that the funniest piece today was Costin. Costin's got away with words. What is he with Disney? He's got the
Maleficent 7.
Maleficent 7. I mean, you got to handle. Look, you got to hand it to Costin. He's trying to be Ives, but with nice clothes.
They do cut to 6,200.
Right. That was actually devastating.
On the forward PE coming down about 4%. Jim, they do have worries about equity risk premium as the result of uncertainty, and whether or not, I guess, in the end, the U.S. remains a stable home for capital.
I agree that that's an issue. Now, in the middle, 2/3 through the piece, he talks about the greatest time to buy is when we're down 10%. We're down 9%. So, I mean, I could have flipped David's piece, and I think David is very, very rigorous. But when you see the multiple compression of the best semiconductors and the multiple, like I said, there's going to be a bunch of these stocks that are going to, companies that are going to miss their earnings. But when I see the multiple, like Apple, when we had a really good piece by Morgan Stanley today saying that consensus is too high. That was a negative piece that's going to make it so Apple, you should sell Apple right here. It's up $1, just heat-seeking missile, go ahead, Lutnick it. Just go Lutnick.
I was making a list of the price target cuts today. MS on Apple is one. Deutsche on Hood, Oracle, Kohl's, UAL. There's a few.
Yeah, UAL, obviously, the very big. Kohl's was that $1.30 going down to 10 to 60. I'm wondering whether Ashley Buchanan, who is the new CEO of Kohl's, has a game plan to be able to make it so that that becomes a real estate play. Maybe he's just running the thing into the ground. When you have -6, you have -6 comp store sales. I've done a lot of work on what happens when you get to -8 and 10. You're done. I mean, it's okay. You're done. I mean, like, done. And Kohl's is flirting with being done. So my question is, if they were trying to sell the company at 50, they could sell it at 5. Kohl's was bad.
Yeah.
That was like the worst. I mean, that may have been the worst same store. What they've done, by the way, they put through a big dividend cut, but they don't even release it that. They just say, ooh, we're doing a 12.5-cent dividend. How about the 50-cent dividend?
Cents.
I mean, I wanted to, Kohl's cash is becoming Confederate dollars.
The all-time lows, as we pointed out yesterday, Jim. Do you think we're about a month away from earnings getting started? Does the guidance trim from the airlines, does that a canary in any sense?
Yeah, it is.
You do?
Yeah,
so
absolutely.
you're prepped for more
because
of
the
that.
travel bull market has been the last one. Vail is like, you want to, somebody had some good numbers about Expedia today. Okay, fine. Vail is the last remaining bastion. Now, the Vail Resorts.
MTN?
MTN.
Really?
Always like that symbol. But yeah, we just don't have a lot of good news. Although remember, we want tickets lower. You know, we want it's PAL versus earnings, and I was hoping it wouldn't get to this. I mean, I don't want it to be Walmart versus PAL, where Walmart has trouble with China, and the sales don't come through Walmart, and people think the sales aren't coming through Costco, which is untrue. The CFO did not explain how good the sales were. That was a misinformation call. But I mean, Costco's pretty damn big. But Target's just okay. Kohl's is just an abomination. Macy's not that good. TJX on fire. Why? Because they get all the stuff from Macy's and they get all the stuff from Kohl's.
Right.
Solid buy right here. Just buy it to 120.
Now we got these stories about the Chinese sort of weighing in with this Walmart Chinese supplier discussion, taking some heat. Kind of leads us to the soundbite that Faber put together with Joe Tsai talking about the trade war and whether Tsai at least is concerned. Take a listen.
How concerned are you about a trade war, about what that will mean for your ability to service your Chinese consumers with U.S.-made goods?
There's a lot of import and consumption going on in China of foreign branded products. And so of course we worry about potential tariffs. It's really about the leaders of countries getting together and deciding that ultimately, tariffs create too much friction, and some level of global trade and interaction between companies is good. We want to have more American companies. I think the Trump administration will want to have more American companies doing business in China and making money there, right? So at some point, I'm pretty half glass full kind of attitude towards that. Eventually, the tariffs being a negotiating tool, maybe, but at some point, things will sort of get better. I still think, though, certain protected industries will still be subject to tariffs. Like, this Chinese EV sector is exporting to the rest of the world. I'd expect that some tariffs are going to be put on them.
Joe Tsai, once again, is a remarkable figure. Flexible, no doctrine, no ideology, business person. And I like what he said. Glass half full is a really good way to look at why this market can rally. A guy like Joe, I don't know how much influence he has with the government, because the government is so hard line. But it's refreshing to hear someone say, yeah, look, we understand that we have a bad trade imbalance. And that's what the government never wants to admit, which is so frustrating. But we'll talk to Lorenzo, the Cleveland Cliff CEO, because we'll hear what's really happening in the world. Again, U.S. government, President Trump, not explaining things well enough at all.
Right.
I mean, it's really rather remarkable. His insensitivity to who's really at fault here, which is China, is rather shocking. It's not Canada.
I mean, we wanted the cheap goods years ago, and we gave those jobs to them.
Well, Professor Siegel from Penn had some great things to say. He said, listen, we're trying to get 300 jobs in, and we're making it so that we're losing thousands of jobs because we're not a manufacturing country anymore. We're service. I mean, look at aluminum. Like, we stopped making aluminum a long time ago. Why? Because it's really dirty, nobody wants it, and we have really expensive power. So, I mean, yeah, we got rid of aluminum. We didn't want aluminum. We sent it up to Canada. We don't want aluminum. Aluminum's really dirty. They've never been able to make the smellers good. We haven't been able. We're good at recycling, which is amazing. We're actually good at recycling.
Right. So you don't think we want to reshore aluminum production?
No, aluminum production is horrible. I mean, I used to work with Klaus Kleifeld and Alcoa to go over how bad it is.
Yes.
We want to send it to Jamaica. Big bauxite.
What do you make of the EU now? Not just on steel and aluminum, Jim, but some whiskeys and some soybeans taking target at Speaker Johnson's home state?
Well, soy is really football. Soy is always the state because we're really good at growing soy. Whiskey's down so bad in our country that it doesn't matter. I mean, you could have come after Johnny Walker Black. That's yours. You want to come after Jack Daniels? The American people come after Jack Daniels. Hey, kudos to RFK trying to get us off Fruit Loops. But I do think that people don't understand the liquor market. They're really missing the point. There's no demand. The liquor prices the browns are coming down steep. The clears are coming down steep. Only agave is holding any value. So, like, the idea that, John, get back, I gotta tell you, they gotta cut the price of Jack Daniels. I mean, if you want to get granular. So I'm not too worried about those guys. They should worry about the American market. They're like embarrassing, the people who make the Browns. They don't seem to understand that they raise price. I'm putting on Outlaw Beer tomorrow because they got a case for 16 as opposed to Modelo for 38.
So now you're getting to one of the fears is that we're going to have to start settling, if not for more expensive goods, then lower quality goods.
Well, I had Modelo. You know, look,
Leisman today talking about the 70s when we had quotas on Japanese cars. We're making Pacers.
Outlaw's made next door to Coors. Yeah.
In Golden?
Yeah. I gotta tell you, you're making a big mistake. Some people are starting to realize that the raising price thing is over in this country. And hallelujah to that. The backers of this Outlaw are really big, really have a lot of money. Because there are enough companies now who are looking at these things and saying, that's it. We're screwing the American public. Again, the president. Why are they yelling at him? Stop with the 25%. He's gotta get more serious. Gotta get more serious, speak softly. He's got the wrong president, this McKinley. You know, it's TR. It's not McKinley. Hey, McKinley, second-rate president. You want a winner. Why are you backing McKinley? Now you're going to back Buchanan? Yeah. I don't like Ashley Buchanan. I don't like President Buchanan. Pennsylvania's
didn't end well on McKinley.
No, it really didn't. Yeah. But we got to start getting a little more story. I mean, go with him.
We're going to talk about whether the message gets distilled here with the CEO of Cleveland Cliffs. Going to join us this hour, get some perspective on the steel tariffs at least. Take a look at the pre-market as we do have some constructive things going on.
You bet we do.
And futures reflect it. We're back in a minute.
Insurance.
Look at some S&P gainers this morning. SMCI's at the top, but Tesla not far behind after that sales event at the White House yesterday. And then Palantir, Jim, teasing an event tomorrow where some partners like Lennar and Delta will talked about how they used the product.
Heavyweight. Lennar uses Salesforce too. Lennar and Stuart Miller, he really knows what to do. Palantir's got game here. The trucks that they out, the combat vehicles on Friday, delivered one time ahead of RTX. They got that contract, 178 million. Palantir's okay. Alex, I don't like the, never mind. Haverford. He hated Haverford.
We'll keep an eye on it on this busy week. We'll get Kramer's Mad Dash and the opening bell in 10 minutes.
NBC.
Let's get Kramer's Mad Dash as we wait for the bell.
Let's talk PepsiCo. Okay, so yesterday I said PepsiCo, which is in the high 150s, had a crater here in order to be able to be sure that the ridiculous program out of the real companies and into the soft good companies and consumer packaged food companies. Well, here we are. This was the end. It was, up here on the spike on what I said was just a ridiculous trader, didn't know to do his job. Sometimes people at home have to recognize that not everyone on Wall Street is a genius. By the way, I'm not sure Ray Dalio is a genius either, but we can get to that later.
Talk later.
But I do think that this is the denouement that I was looking for. Jeffries, this is a buy to a hold. It's very tough because Frito's doing well, but tough because GLP is doing well. By the way, I think the Novo Nordisk decline off the Roche $5 billion. Will you give me a break? Roche has been trying to crack into the weight loss game for 3 years now. But I do think that this is a very tough call because there's limited upside potential. U.S. beverages remain soft, but it's really Frito-Lay. And Frito-Lay is GLP-1. No one wants to admit this stuff. I do think that when you get people off the record, they all admit it, but not in the food business, the supermarket people. They all tell me, listen, Jim, GLP-1 is really hurting sales.
Yeah, that's one headwind. I mean, fairly large buyer of aluminum, too.
Yes, buyer of aluminum, recycled aluminum. Don't forget, younger people, this next generation, they care about their bodies. What's with them? When we were like smoking and drinking Jack Daniels, they don't like it either. I never smoked, but I know people do. But anyway, this is what you needed to see. In order to get a real rally, you needed to see this. So you got You have real game on this rally because you needed this money to go to the companies that have been crushed. It's out of Pepsi to NVIDIA ahead of the GTC conference. Let's watch that.
Yeah, we'll see if that holds, that trend holds today. We'll get the opening bell in 5 minutes.
Elon's been doing really a fantastic job. He suffers a little bit because of it. People go after him, but actually, I think in the end it'll maybe reverse itself and be just the opposite that's happened before. There's people that they tend to go after one group or another, but basically it's the other. They go after conservatives, and when somebody stands up and fights, their business ends up doubling.
That was the president yesterday at Business Roundtable defending Elon Musk and his efforts to slash government spending. At that White House event earlier in the day, the president doubled down on his support for Musk by saying he would purchase a Tesla. Meantime, Musk pledged he would double U.S. production of the company's cars, Jim, within the next 2 years. Raise more questions about demand.
Well, I've got to tell you, I work with Larry Williams, who I think is the foremost market historian. Rally right here, beginning today, 80% of the time. This has been the season to buy it at this very moment. Don't sell the stock. It's about to have a real run. All of history says it. I don't know about Elon. I don't speak to him. But there's also been very, very aggressive buying. Now, it doesn't look like that in the last few days, but Larry really knows these things, and he's coming in hot.
Any reason to think we're in a different time regarding the stock because of how Musk's stance has changed?
You know, got a long time in history here. I'm willing to go with the history. And by the way, his artificial intelligence action very, very strong.
He's been complimentary.
Oh no, because he's got. I think he has the second most GPUs, NVIDIA GPUs, after CoreWeave. Really, really very impressive.
We're still waiting to see double taxi in June. Meantime, let's get the opening bell on the CNBC Real-Time Exchange. The big board. It is the Futures Industry Association virtually ringing the bell as they celebrate the 50th anniversary. Boca 50 is the annual International Futures Industry Conference, and at the NASDAQ, it's rocked, an e-commerce company, and Red Bull Racing celebrating their partnership and commitment to fostering diversity in Formula One alongside women in STEM.
Monster, the best performing stock in the last 3 years.
Yes,
Interesting.
yes.
No, I think that when you get a negative, we had a negative piece of research on Amazon this morning, negative on Apple. This is what you have to see at the bottom. I mean, everyone's kind of saying, all right, I've had enough. I'm waiting for a negative piece on Alphabet, where I think the numbers are too high. So you get Microsoft, I think, could miss again. That's a charitable trust name. I got big gains in these. I'm tired of them. I got a big meeting tomorrow. I will express my fatigue with Microsoft and my fatigue with Alphabet. But this is what you're seeing. You're seeing the guys just say, you know what? I don't want to be affiliated with these stocks. And that's when you have to buy them, unfortunately. I don't want to be too contrarian, but these stocks have come down a great deal.
Yeah.
And they're intriguing to me because, I mean, Amazon, someone was saying that Amazon Web Services is not going to do the quarter. I mean, that's probably inaccurate. So you really want to, do some soul searching before you get rid of Amazon, which I think is doing very. And then my favorite is Meta. Unless you have a cratering in the advertising market, which I've not seen, I think Meta's the cheapest of the mega caps.
Remember back in the day when media companies were plowing money into content, but then it became bullish to spend not as much on content. Is the same thing going to happen to hyperscalers and CapEx?
I think that what's going to happen from my checks with advertising, they used to be very, there was magazines, there was radio, there was TV, linear TV. No, there's just Amazon, Meta, and YouTube. That's where they go, and then TikTok. So what's happened is they concentrate their buying because they're getting over and over again the read that the artificial intelligence can give you the most. Like, if you want to compare, we have Adobe this week, but if you want to know an ad campaign, just call Zuckerberg. He handles the ad campaign. So one of the things that people have to realize is those are the four, and everybody else is out. I mean, linear TV is we're involved with that business. But I worked in evening papers. I worked in radio. I mean, look out where I work.
It's just a trail of destruction.
Whoa, man. It's understand each other. If you want to reach people, you go TikTok.
That's definitely how it's working these days. By the way, Jim, nice JPM reiterate Disney overweight 130. Some nice things to say about Comcast Epic Universe.
Yeah, I mean, my trust owns Disney. It's been frustrating, but I think that the idea that the theme parks are too expensive, look, if they're too expensive, then why are the numbers good? Do I want them to continue to raise prices? I think that they're meeting the demand. But the stock acts poorly because people still don't understand that they've staunched the bleeding in linear. They have. But you can't convince them till you see the numbers. And people thought the last quarter's numbers were bad. I didn't think they were that bad.
You mentioned NVIDIA, big GTC next week. You're going.
Yeah, I'll spend some time with Jensen. I do think that NVIDIA's become a meme stock. It's controlled by these 2x ETFs and by the zero-day options. Most people think that can't be the case. But when those are theoreticians, and I'm empirical. I don't like theory. I like empirical, and that has been my strategy since '77. I'm not deviating. You want empirical.
B of A today reiterates a buy 200. Very compelling price, they argue. Is there any risk of Jensen disappointing? How would he disappoint next week?
He would disappoint by saying that that they have Rubin, their next iteration, and people are starting to skip Blackwell for the next one, which would then cause a freeze. But I don't think they're going to. That would be something that I don't think Jensen will say. I think Jensen's before this conference, you can't reach him. He's just in quiet. We don't know. So to speculate what he's going to say is to run the risk of really going against the Manhattan Project. You just never know what they're up to.
Right. By the way, as for semis, Jim, pretty remarkable number. 5% above the 200 DMA.
5%.
In semis. I mean, if that's not a washout, what would you call it?
No, it is a washout. The semis are divided between the Internet of Things and telco. And the telco's been horrible. The poster boy's been Marvell Tech. where the numbers were actually quite good, but nobody cared. That's a stock that was cut in half. Broadcom down 18%. That's an incredible company that blew away the quarter. Texas Instruments didn't have a bad quarter. I mean, you go over these. Obviously, Intel, there's always a rumor floated every day. Now it's Taiwan Semi wanting their not-so-great fabs. Before it's Marvell's going to buy, they're going to buy Altera, and then it was Silver Lake. I mean, may I suggest that they stop talking? They just should stop. I mean, like in Reuters, give Reuters something. Well, I'm waiting for the FT to say that any minute now Qualcomm's going to buy them after Qualcomm denied, and then Broadcom after Hock Tan denied. But people can say anything, and it's irritating. Maybe this is the one. Maybe this is the boy who cried wolf, and really there is something for Intel. But I think Intel's overvalued. But Intel's part of the problem in terms of the market cap.
Yeah. Well, we did get David Solomon on the tape today of Goldman saying that better certainty, to your point, will unlock some of the promise of M&A.
We're 3 weeks away from a huge amount of M&A. We're 3 weeks away from the first IPO that is going to be terrific, which is CoreWeave. Maybe that will make it so that this stench of Venture Global goes away, which was really rather extraordinary, how they pimped the street there. Wow, that was a horrible deal. And that was a big deal. I mean, they just gapped the street. Like when you go fishing and you catch a bluefish and you got hit over the head with a baseball bat. Well, thank you. They baseball batted us.
Yes. It's been a tough run for VG. Meantime, Alibaba's chief Joe Tsai gave our David Faber a read on the Chinese consumer at CNBC's Converge conference in Singapore. Tsai detailed that closed-door meeting China's President Xi held with some business leaders over there last month to encourage investment in that country.
A few weeks ago, President Xi Jinping had a meeting with entrepreneurs, and people underestimate the importance of that meeting. What that meeting did to the entire entrepreneur sector, or people that are the private business sector, is it gave private business people confidence to make investments in their business. I mean, we just came out and announced that over the next 3 years, we want to invest over $50 billion in compute infrastructure and AI, right? So it gave us the confidence that, you know, to put our earnings back into CapEx and investments, and also hire people, right? So the combination of private business confidence and the excitement about technology development will eventually translate into consumer confidence.
I believe that.
Why? It's because companies are making investments, companies are making hiring decisions, are actually hiring people again, companies are growing again. And ultimately, that will trickle through consumer confidence.
You know, we struggle sometimes in the U.S. to understand the significance of different moments in China. And so you're telling me that that was important when Xi and Jack Ma, your founder, obviously was at that meeting. He hadn't been seen in public, at least in that kind of a forum, in a while. So that was an important moment in your mind.
I wouldn't underestimate the importance of that event.
And sending a message to the business community as well, and to private enterprise?
The message was very, very clear. The government is looking to the private enterprises to come back and boost the economy.
Interesting to hear that, and think about our own business roundtable meeting with the president yesterday.
Well, look, Joe Tsai's right about Alibaba, wrong about America. Look, we have Nike, Lulu, Starbucks, and Apple are the only companies that are left with significant exposure to China. If you open your business in China right now, here's what happens. You get a call from President Trump. I don't want that call. That's a bad call. There's only one guy in the whole universe that Trump calls that it's a good conversation. You have to be sitting right here. Lorenzo Gonzalez.
You want to bring him in now?
You bet I do.
Nice to see you.
Good to see you, my friend. Good to see you, my friend. Okay.
Nice to see you as well.
All right, we've got a treat here. It's a man who understands great clarity. Lorenzo Gonzalez is the CEO of Cleveland Cliffs, who's provided more jobs in an industry that people thought were dead than anyone other than, I'm going to have to say, the Newport rival. And, you know, I appreciate them. Leon's a terrific CEO. I know you.
Thank you.
Okay, so let's go right to work. I want to I want to start at 30,000 feet. The failure of free trade for America.
It has been the most damaging thing that happened to this country in the last 4 years. And President Trump is there to fix that, and we're completely in sync with what's happening right now. and we'll do the work for the people of the United States.
Where would the steel industry be, given the trajectory of 2024 and the continuing transshipment of Chinese steel? Where would you be?
Yeah, it's not only Chinese, it's Japanese,
but
it's
they're
Korean.
keeping, remember, they're keeping a lid on everything, China.
Absolutely, and the transshipment is a cancer, and we would be dead. If this thing would not stop, this thing would be dead.
And how many good union jobs would we lose in this country?
Well, just for Cleveland Cliffs, we're talking 31,000 jobs. We're the biggest union employer with the USW, with the UAW outside of automotive, and with the IAM outside of aerospace.
Okay, so let's talk about the actual pricing. There's lots of stories about how pricing's going to go up big. Isn't the truth that even though you've raised price, that we're really just back a year from where we were, and it was just last year was the worst year since 2010?
Yeah, it was, even at pair with the COVID year, just to give you an idea. So we're not talking about bringing prices up. We are talking about bringing prices back to where you have a real business. 2024, we did not have a business. We had a terminal patient dying, death by 1,000 cuts.
Now, order book since President Trump came in, how are we doing?
Very healthy, and they are now starting to understand what they should have understood last year, that Trump would come to bring manufacturing back to the United States. And then, if you produce here, you're going to be okay. It's still, tariffs are a matter of national security. There's no country without manufacturing and no country without steel making.
You don't want Chinese steel making our tanks and houses?
We would, of course, we can't afford that.
You think they'd work, what, half the time, 50%?
Yeah, look, we can't, Jim, we can't even think about that. We have to make things in the United States.
Navy ships, how'd they do if we have Chinese steel? Pretty good?
No.
Do I trust them?
No, of course not. Of course not. And it's not. But by the way, China is the biggest in terms of size, but others are pretty much the same. In percentage-wise, you have worse than China, like Japan, like Korea, like the Europeans. The entitlement is over. It's America first and America for Americans. We gotta have manufacturing, middle-class jobs, good-paying jobs, consumers able to buy things, like I just did with my company, Cleveland Cliffs. I'm giving a $1,000 bonus for each employee that would buy an American-made car with Cleveland Cliffs, at least 1,000 pounds of Cleveland Cliffs steel inside. And they can pick from 50 models, or if I go a little lower than 1,000 pounds, they can pick from 120 models. So we are the largest supplier by a lot.
Can American manufacturing ever match the cost of production of a foreign producer?
Without subsidies and without currency manipulation and without all the kinds of cheating that are embedded in the number that we're trying to trick me and call, yes. Because we're the best. We're the most efficient. We have the highest technology. We use hydrogen. I came here not too long ago with Secretary Granholm to talk about hydrogen because we're using, not because we're trying. We don't brag about what we're trying. We're trying a lot of things. We only brag about what we do. And by the way, it was with the Biden administration. Even the Biden administration was able to recognize our technological efficiency in comparison with other countries. So right now, we have the right moment, the right time. Manufacturing is back. If you believe that a supply chain bringing parts of cars across the border with Mexico or Canada 7 times and this is efficient, this is not. This is insanity. We're going to build in America. We're going to produce things here, employ Americans, and be happy with everybody.
If it weren't efficient, why would an automaker structure it that way?
Because they take advantage of the advantage of a currency that's artificially devalued, labor that is completely impossible to.
That was my question.
Yeah.
Whether we can match that kind of wage pressure versus other countries.
Okay, these things are all great, but it's the same thing of saying you can have this program here without Carl Quintanilla and Jim Cramer from New York City. We can do it in India. They will do your job, receiving 10% of your pay. Are you good with that?
The Jim Cramer?
Personally.
No.
And then you understand. Treat people like people. That's what President Trump does. He wants the Americans to be the ones winning this capitalistic war.
All right, Lorenzo, I gotta go there. It's unpleasant, but your stock price is too low. No, that's not good. It's a double-edged sword. So what are you gonna do? I mean, because you have to pay down debt after the Stelco deal.
We need to. By the way, talk about the Stelco deal.
I think it works.
Best thing I did.
I agree with that.
The best thing I did, because Stelco is a steel company of Canada. It's the most well designed to supply the country of Canada, and that's what we're doing. Instead of dumping steel from Canada into the United States, no more. No more. Now we produce for the United States, still produce for Canada. That's a good start. So every single country across the spectrum should be doing the same thing. Because President Trump, Secretary Lutnick, Ambassador Greer, Vice President J.D. Vance are all committed with this agenda.
He
and
knows
they're not
Middletown.
going to...
He knows Middletown.
Yeah, Middletown is the center of the world right now. And by the way, the most modern plant supplying automotive steel in the United States. And it could be General Motors, could be Toyota North America, could be Honda. All of these folks, they buy from us and they are happy.
Then we're not going to let Nippon Steel in here with heavily subsidized Japanese steel, are we?
Oh my goodness. They receive billions of dollars every year. And their sense of entitlement is something that is off the charts.
So they walk away and you finally get your wish and you'll be able to buy it, but you need your stock higher.
Yeah, look, yes. And investors should see through this. The time for things that you don't understand and you still invest because they are going up, you take the ride on the trend is over. Now it's back to reality. We can't have a country without manufacturing, especially in a world that's not the la-la land that we had for a few years.
That's the problem. It's a service economy is great, except for the fact when you have to have a defense.
Right. I guess, is there any incongruity between bringing Masa-san in and announcing a huge investment in the United States and having Nippon make a huge investment in the United States?
Well, Jim Cramer interviewed President Trump over there, here. He could have asked it, that he didn't. So complain with Jim.
Hey, doing my best. What, you think I had like the Eagles in my mind? I was working hard.
Yeah,
Come on, man. So give me a break.
You're great. I'm just giving you a hard time. But at the end of the day, there's absolutely no incongruence. What President Trump is talking about and with Masa is bringing new investment, new plants. Keep in mind one thing, Carl. We are the only country in the world, in the developed world, and including some underdeveloped countries, that we produce less tonnage of steel than we need in the country. Everybody else has a surplus. Everybody else has overcapacity, overproduction, and they believe that this market belongs to them, not to us.
Well, we're patsies.
So we want to produce more in the United States, and that is deflationary. Because when you produce the amount of steel that you need, then it's supply and demand. But we can't allow for the currency manipulators, the ones that just cheat the rules by changing specs, the ones that just do transshipment with absolutely no concerns. These are the things that we're talking about.
All right, well, we're going to have to wrap things up, Lorenzo. I think that you weren't as hard line as I'd like. Lorenzo Gonzalez, saving Cleveland Cliffs, become the, again, Leo Tapari. We have 2 steel companies left. We have letter X, but we have 2 steel companies left. Thank you.
Thank you so much, Jim. Thank you, Carl. Always a pleasure.
Good to see you, Lorenzo. As we go to break, watch bonds today. We'll get a 10-year note auction at 1 o'clock. Other than that, the CPI number, really the print of the day, did come in light, both on core headline, month-on-month, and year-on-year. 10-year back to 4.3. Stay with us.
I'm here. I'm here. I didn't have this thing on this morning. Oh, no, I did not. Okay. I'm here. I'm here. Jake Paul, I'm here. I don't understand. Okay, we've jumped up to the resistance channel. And we're in the resistance channel. I'm here. Randy, did you hold the fort down? Randy. Randy's not here. Man. Let's see, I gotta get organized. Been a busy morning this morning. Woo! Looky, Tesla.
April 1st.
Okay, liberals. We can do without you.
Ray Dalio speaking at CNBC's Converge conference in Singapore, warning.
Screw you.
Pretty muted, with limited at this point about tariff impact.
Tariffs, don't screw you too. $241 has to hold. Did you miss me? I missed me. 241.63 has to hold on Tesla. My phalanges are cold. Here on the other hand, what the fuck is that? What is that? Look at what in the heck is that chart I showed? You gotta be kidding me. What the heck? That's the weirdest thing I ever seen. And can you read that chart I put? That makes me laugh. Turn on your light, Jim, so you can see what you're doing. Well, I heard you can pour vegetable oil down a trap if you want. A sewage trap. I'll be doing that. Okay. Let's check out my SPY. Oh, yeah. I'll tell you, my timing's just perfect all the time. Don't matter what time I come in here, I see the setups. This one here is just a flag. It's not much of a wedge. Okay, where's my SPX? Something's off fishy here. Where in the hell? I don't see it. I still have a heart fit over yesterday's missing that 50,000. I'd had 50,000 on a trade. On one. Okay, let's change the. I'll bet you that turned SPX too now. Yeah, it did. Scanned. Jake Paul, I fixed the sink. That's a spy. Now what the fudge? Oh, we're at the 200. Prepare ye in the name of the Lord. Today's the 12th. The strike, 60 50s again, but they're a little bit high. Well, shoot. I waited too long. Yeah, it's got to be the 60 50s. We'll wait for a pullback if we get one. Dadgummit. It moved on me right when I clicked it. So we're retesting now. Let's see if I can get this at a discount. $8 would be great. We're looking at the 5650s or the 5660s. But I want the 50s. And by one. The spy. I got 2 of these up. What the fudge? So this needs to change to the SPY. SPY might be cheaper. See, it's already up. Should grab some at 10. Apple's at 220. AVGO's up $8. If this thing can get back down to the 200, I'd buy it. Right now you're at support. So if it's bullish, it's going to break out here. I just think they're too expensive. Maybe other traders might think that too. Okay, here we go. Get ready. March 12th. Oh, yeah. Jimmy said wait, didn't he? 56.50. Boy, it'd be nice if we get one more leg down, but I don't know. Well, there was 830 to 1060. Should have grabbed one right there. Bam. That'd been my scalp. I'd been in and out of that trade by now. Spy's also got a snake. I don't know what to call this one. I'm going to call it a bull flag. That would have been a good trade too. Resistance to break on the SPY is 560.26. There would have been 300 on the SPX right there. Somewhere around 56.17 is resistance. So how did the numbers come out this morning? Or have they come out yet? The CPI? Not yet. I don't see them. OPEC crude output rose by 154,000 barrels a day. It's unbelievable how much oil we go through. Shit. I'm going to just watch this go by this morning. UAL has 3 black crows. On the TTM, Bank of America has a price target of 110, maintains a buy rating from Cohen, cuts price to 150. Barclays keeps overweight rating at 140 for UAL. I'm not sure if it's a good spot, but you tagged me on CPI numbers earlier. How far up I got to go? Both CPI and PPI came out quite a bit better, lower than expected. Well, that should give us a market should be bullish in. Take that freaking apron off. Well. Do we see 56.43 coming up today? So we got a 1, 2, 3 down here at the bottom, and that's where I'm going to jump in it. I think I'm going to buy me the New Balance 1906 next. Can we get 1, 2, 3? You got to consider that we're always 2 steps ahead of the fat cats, but they have more money than I do. So 5601.60. And I set my alert. Prepare ye in the name of the Lord. Okay, this is about it right here. There's 980 right now. I'm going to take a risk here. $9.30. 940, excuse me. Took 40. I could have got 30, I think. But it took 40. One, two, three. Risky. Well, well, well. One, two, three. Now don't stall on me. Well, well, well. No. Don't. I got pee. Oh. Okay, this ain't looking too good. We're at the 200 now. It's got to hold here. I'm going to get out. I don't know if I want to add one. This should be bullish here. Oh, God, come on. don't know if it's going to work. Double bottom. Okay. 780. There's the expansion pattern. $760. Yeah, I don't know. What's the SPY doing? SPY's at a double bottom too. We've got a hammer. Two hammers right at support. Well, 850 is what I need. Then we've got to break the 200. And get out even here. But let's run it. I want it to go up. Quit fucking with me. Please. If you don't feel comfortable, you get out. And I don't feel comfortable right now, but it's always when you're at the bottom. We got a double bottom, clear to see, with two hammers. And I don't know much about this pattern here. I just know a double bottom when I see one. See, there's $200 right there. I should go ahead and sell it right here because that's my first resistance, was the triple bottom. And we had 3 black crows, and we're coming back up to resistance. You see what I'm saying? So I should go ahead and take my profit and be satisfied. Because we could come down and break this the 3rd time, and it wouldn't be fun. See right there, I should have done it. And back to even just on that little move. We're rooting for you, Jim. We know you can do it. You remember that cheerleader you dated back in high school, Susan? She still loves you. She still messages you every once in a while. I know. She was a great kisser too. Anybody ever dated a cheerleader before? I dated 2 of them. That's funny, they both came from Central High School. I dated a Visquette from Parkview. Well, I knew it would come back down. It's not very bullish right now. The market's not. Well. Shit. There we got a megaphone. Okay, I'll be right back. I'm gonna go turn my water on, and I don't have my phone on me. Oh. Where's my phone? There it is. Okay, I'm back to even. Let's break out. Okay. You gotta stay above that trim line. Let's get it on up. I'm not scared. The megaphone, we could reach all the way to 5630. Brandy. Subway, I'm glad you're back. I don't want to run you off. You've been around too long. Been busy at work? Good. I was kind of upset that you didn't like my singing, and I figured you left the room. I'm going to try out for the church choir in a couple weeks. So I can play guitar if you need a guitarist. Play ukulele. Breakout. We're waiting for you. I'm going to say big old pop. It's either get out now, because I'm a little bit concerned. But if we can, because we come back down again and I'll be back at $6. And just take a little break here and reassess everything. The market don't seem very bullish. Figured pot stocks would be running a little bit. Let's see what AMD's doing. It was down at support. It's probably broke out by now. Yeah, it moved up a little bit. Oh, Apple. Apple's back at 219. Still kind of overpriced, but Nvidia's at 114 from 102, staying above 100. We were talking about Boeing yesterday. Boeing hit 159. Called that one out perfect. There goes SPX dropping again. Yeah, I'm not feeling very good about this market. We got to hold here. I think this is the last time. $570. It's not going to take it. Wait. Yeah, this ain't looking too good. Okay. $5.20. We could drop a lot more. We got inverse head and shoulders, and we hit the second shoulder for the second time. So it really needs to hold that. Come on, Jim. Actually, that's not a good drawing right there. Well, yeah, it is. I'm going to leave it there. I could drop more. What's Tesla doing? Tesla hits, ooh, needed to hold right here. For it to stay bullish. Tesla's not the one I want to be trading though. Tesla at the 200. Not good. SPY's closing in on support to stay bullish. That blue line. So we're close. I'm gonna make my tea. So far I'm not off to a good start. See if it reverses here. Well, okay, we're at support. Should I try to get back in these or not? I don't know. I'm way too far out of the money the 56.50s are now. AMD's back under 100.
Excuse me, in the last three has also been one that's slumped recently, but has been consistently doing quite well. And then their other segment for the last now 10 quarters, I could see as far as their investor relations page has just seen a declining revenue. I mean, now American Eagle was their $832 million roughly of their $1.3 billion last quarter. areas 410 and the others shrinking to 56 million. If it's a good thing that it's shrinking, I mean, I think that maybe if they're trying to center their ties to some of these other brands, that could be interesting.
I think so,
but
too.
I never really looked into what Todd Schneider or Unsubscribed is. They're both luxury. They're both high-end. Todd Schneider in particular has stores in like Manhattan as well as Greenwich that speaks to, I think, the market they're serving. But it's actually surprising because retail, as far as luxury, has done quite well. We've said that that's a more insulated consumer.
For sure. What's that brand called?
Todd Schneider. And Unsubscribed.
Unsubscribed.
That's
I think
one
I've seen that store.
I haven't even seen, I never even heard of it till this morning, and I did a deep dive into American Eagle. So there's trends that are positive, but I think on the back of comps that continue to accelerate at Abercrombie & Fitch, they're losing share here from, I think, a name like American Eagle.
Yeah, what a powerful branding. Unsubscribed. What a name. Because I'm sure how many people unsubscribed from their American Eagle,
no kidding.
list. All right, Rick, bad chart?
Yeah, to put it bluntly, yes. We're down about 56% off of that high point that we established near about 27, just above 26. And we can see now that the situation has really kind of gone from bad to worse. You can see that first we had this more gradually
Funny how things can change overnight.
with those highs progressing to our steeper blue trend line, finally our very steep, very narrow white trend line. So we've been bouncing around in this very small range, relatively speaking, that is tilted more toward the downside.
I'm going to try these again.
52-week lows yesterday. We can see, though, that perhaps one maybe minor bright point is that our downward sloping trend line on the RSI has been broken. But I would say it's more complicated than that because even though we are also seeing perhaps the argument could be made a little bit of a bullish divergence here, we are still in the oversold area once again, which is typically a sign of
VIX is at 26.
There's some conflicting mixed signals there. I would say that we're making new lows. A little bit of bearish divergence doesn't exactly sell me on a bounce just yet here. I think it still could be possibly a falling knife type of scenario here because we're not really too close to any notable old price levels here, but we are close to our -1 standard deviation channel and a small volume node here as well. Those both come in around 1160, 12 or 12 bucks or so. More small volume right about here near 1450, and then the biggest node anywhere close to where we are now comes in around 17 or so. And a quick peek at our longer term chart as well.
Seems like we got low volume.
Rough this decline has been. And I did want to point this out because we did have a double bottom type shape right around here. Even back a little bit further, you could maybe even argue for a triple bottom. But right around like the 950 level or so, that would be the
I'm really not seeing where I want to buy it.
Okay. That's a really good perspective on the longer-term chart. I love that context. It gives some hope, but also still kind of leaves a little bit of room for weakness. And to your point about the falling knife, I mean, even if you do think some big bounce, like you got to be so nimble in a chart like that.
We're near the -1 weekly standard deviation channel on a 5-year basis. We're near the volume profile point of control. We're near the double bottom lows. If anyone's going to make a stand, this seems like the place to do it.
It's
I'm going to make a stand.
Now kind of moves higher on my list of retail to watch because I have been asking like our retail guests a lot, which business models like can't handle negative surprises.
5650s.
There's a fairly decent list of like charts that look pretty dicey. So this might be one to see if it totally falls off the map. Last one. Speaking of which,
here.
Right? Dollar General.
Speaking of
360.
which, I think that this company, it's fascinating to do like a deep dive on the research of
Man,
it because its heyday
try
was
it
really
again.
back in 2020 through 2022. I mean, its market valuation rivaled that of Walmart. And I think what it gives such what it gives such a good read on is their target consumer right now, which makes around $60,000 a year or less, as well as rural America. We talk about inflation. We haven't really ever seen it affect, we've actually seen consumer spending only increase. Well, we've talked about the inflated costs of goods. I know CPI today better than expected, but still showing we're in an elevated environment. So all things considered, this speaks to the good read on rural America. But fun fact for you, Dollar General is bigger than Walmart, Target, Costco, Kroger and Albertsons combined. Yes, 20,000 locations, which is bigger than their footprint is. They have more Dollar Generals in the U.S. than McDonald's has restaurants.
I wonder how. That's a great stat. Wow, that's a great stat. They've got more Dollar Generals than McDonald's.
Yes, isn't that wild?
That is wild.
I know. They're huge.
Sounds like they need to close up a bunch of stores.
I know. Sounds like they need to trim it. They're only growing. They're trying to right-size their costs, but very narrow margins when you're working with such low costs.
I guess that's kind of why they have so many stores. If you're going to make money off a dollar, you got to do it like a gajillion times. But then it also just kind of means that it's a fragile business model sort of in general right now with prices. Rick, I mean, this chart looks...
My very unscientific anecdote is that when I was driving through the South one time, I saw a Dollar General, and you could see another Dollar General from the front of that Dollar General. So that's just my kind of, you know, I wish I could remember exactly where it was, but it just was funny.
It's like when I was, the first time I went to Rhode Island, and
Break
it was way up north, and we were like, is there anywhere to get coffee?
I got to make up. I lost $400 on my last one.
It's around the corner.
That's funny, yeah. It kind of speaks to the pervasiveness of the brands. You know? Like, I mean,
too much.
On one hand, that's a good thing. On the other hand, it's a bad thing. You kind of argue it both ways here. But to look at the chart more closely, though, I do think that there are some signs that potentially we are seeing trend shift. You can see we had a longer-term downward sloping trend line in blue that we have broken above, then retested, and then made another push above those initial highs that we formed after the breakout. So perhaps some encouraging developments here as we bottomed out near 66.43. One thing that I would say could be a potential, disappointment here is we did have a little bit of bearish divergence. RSI did not make a corresponding high when price did. RSI also did not make its way to the overbought area as well, which would be often regarded as a sign of strength here. Nevertheless, we are above our moving averages that are clustered together right here. Our yellow 21-day and orange 63-day exponential moving averages come together near about 76, so a key point to hold. We did fail at our volume profile point of control, though, within the past few sessions, so look for a push above 83 for potential for further upside.
All right. Decent little bounce in the last 2 weeks, but we already gave it back in the last 2 days, another 2.5% down. Tough charts in retail for sure.
I just think my time is not good today.
Same story. Thanks, Rick. Thanks, Jenny. Markets, too, on the brink as S&Ps are trying to hold positive, but it's pretty heavy, and it looks like we're going red.
I'll be right back. Still in it, 360. I'm not sure about it.
Taking control with stocks now red. Caroline Woods and George Tillis, senior markets correspondents, joining me here for a check-in. Caroline, what happened there?
Well, what happened is strength in tech is being offset by weakness in most everything else when it comes to sectors of the market. I mean, consumer discretionary and
make it run, Caroline.
Services also higher, but that's probably mostly tech-led as well. So investors are scooping up some beaten down tech names. Tesla is actually leading the Mag 7 higher, although Apple is still seeing weakness, continuing to get punished by those Siri Apple Intelligence delays. NVIDIA also seeing some pretty impressive gains, though, and holding on to those those, up about 5%, bringing some other chip makers with it. Micron, Lam Research, ARM, up pretty substantially today as well. Also seeing some strength in other AI names like Palantir. Supermicro has actually been a winner all week, but also up today. Oracle also rebounding after that earnings sell-off, so catching a bid, maybe some dip buying there. We are seeing some continued weakness in other areas of the market, though. Verizon continues to take a hit, down another 4.5% today after offering downbeat guidance yesterday. And it's also catching a downgrade from Wolf Research, downgrading shares from outperform to pure perform following that first quarter guidance. The analyst there says he senses a lack of consumer confidence in the stock, saying cash flow looks solid, but new guidance adds to concerns about the cost of maintaining the largest, highest price subscriber base in an era of reduced network differentiation. So could also be weighing on shares. We're seeing AT&T and T-Mobile lower today as well. We're also seeing continued selling in travel stocks. United Airlines and Delta, two of the worst performers on the S&P 500 today. Cruise lines are actually rebounding in the green right now, but overall pretty downbeat picture for travel stocks continues. And I heard you talking about American Eagle higher ahead of earnings. In terms of the retail space, we are seeing some winners. Restoration Hardware, after getting hit pretty hard. Macy's, Lululemon all higher, but continued weakness in Kohl's, Elf, Abercrombie & Fitch now down some 50% in 2025. Wow. Target, Ulta, all lower. So those consumer-oriented stocks, despite the fact that the inflation report came in a bit cooler than expected, still seems like there's some concerns about what the economy could mean for the consumer or vice versa.
Good analysis there of the retail stuff. Good combination with the charts we were just talking about and some of these weak points of the market, in particular the travel stuff as well. The airlines down 2.7%. We're losing a good bit of the economically sensitive groups. George, I was kind of joking with KG earlier, like it's a fine drop sectors as long as tech holds in. The problem is that tech's fragmented as well because Microsoft's barely up. Alphabet firmed up a little bit, but Apple's down. Amazon kind of a little changed. Nvidia and Tesla look good, and that's about it, GT.
4:30.
Yeah, I mean,
Woo! There we go.
Interesting. Every day is different. Today you're looking at semiconductors are up today, even with some of the selling we're seeing in the Dow. Obviously, there's some of the food stocks, the defensive names, Brown-Forman, and the alcohol space is down today. So we're seeing defensive names sell off alongside the discretionary names, like the travel names that Caroline mentioned just a moment ago. So
get out now, and I'll be almost even for the day.
The big tech names, they're starting to firm up, but you're also seeing more distribution in the IWM or the Russell 2000 as well. S&P is just trying to hold the break even, giving back all the gains from the CPI print. I think the market, you're just looking at it, OJ and guys, it looks like it still wants to go to the downside. It's not firming up unless it does by the end of today, based upon what we perceive to be good news from the standpoint of easing for monetary policy, because that's what we need right now with fiscal restraint going on right now and that fiscal drag I've been talking about. And the Fed doesn't look like they're going to do anything coming up next week. May is still under question. Looking at two-year yields, which are now closer to 4%. Earlier this week, they were down below 4%. So that's telling us that the Fed should be cutting rates at least 25 basis points. They were behind the curve on the upside. They're going to be behind the curve on the downside. So I think this market, to be honest with you, we may
be honest.
A counter trend rally closer to the 5,800 area. That's possible. But I think also the possibility is, the 5,300, perhaps even the 4,900.
God.
As we move into the latter part of April and May, because I think this market is essentially going to force the Fed's hand, to be honest with you. And I think the Fed will come in and swoop in and essentially save this market. And this may be into the end of May.
Well, the Fed can't do everything.
Okay. To the point about the Fed maybe being a little too tight. We do have bonds firming up as equities got hit, but they're still down on the day. Yeah, real quick, George.
Well, I was just going to say, the Fed is going to have to react. I think that's what I see coming down the road. And it's because the conditions have changed, at least from a fiscal standpoint. The sentiment around the economy has really shifted. And so with that said, the only option we have is the Fed to essentially help short this market.
All right. Well, we might have to wait a couple months. Appreciate it. Thank you, Caroline Woods. Thank you, George Tillis. I want to give Caroline a chance to say what's on her mind there. It seems like maybe she's not ready for that Fed cut, but we gotta go. We gotta go. Stocks are flat. Trading 360. Nicole Petalides is up next.
It's now almost 11 o'clock Eastern time. I'm still in these, but I'm thinking about selling them too.
Schwab Bank Investor Checking. Now built for investors. Named highest in
Well, that went fast. That chicken soup is just
6 years in a row. With
beautiful.
Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM.
I don't think I've ever made
for
such a
cash
great chicken
withdrawals
soup in my
worldwide.
entire life.
No overdraft fees.
This stuff is just something else. Did I hear him say 49,000? How'd he come up with that number? We have an ascending triangle on the VIX. I'm not happy. Not happy one bit. That's it. That's what he's talking about. That's a pretty big drop. 600 points. Nicole, change the day, baby. Today should be wearing black or blue. Uh-oh. Do-do-do-do. She's wearing black, just like I thought.
I'm Nicole Petalides. We're live on the floor of the New York Stock Exchange with a big show for you today. And it's worth noting that stocks have started off in positive territory and have since turned into the red. We have a big 360 spotlight. We'll be joined by the chairman and CEO of Gorilla Technology. The software stock has jumped 55% so far this year.
Interview me, baby.
Ahead of the earnings due out after the close. And in our 360 round, we'll dive into those CPI numbers from this morning. All right, take a look here at the numbers. Last week was the worst week on Wall Street. We've seen extreme selling. The question yesterday was that the low, right? We hit 55.28. Right now we're at 55.63. You don't want to have lower lows than yesterday, do you? Let's find out from our guests. NASDAQ 100 right now is up 79 points. The Dow is down 337 points, and the Russell down 1/3 of 1%. And taking a look at oil and gold continues to move higher, up about $9. Oil may snap 7 weeks of selling. It's up $1.40 today at 67.66 the barrel. The 10-year bond yield continues to move higher. It's at 4.30 today, and the dollar remains a little bit weaker in the big picture of things. 103.46, 81,700 there.
I'm gonna slow down on my trading.
About 2%. Jenny Horn is here. Markets
Figure out what I'm doing wrong.
Network to take a look at some of the top moving stocks. And so some of the news from Elon Musk and Tesla this morning about U.S. production. Would like to hear the very latest. Good morning, Jenny.
Good morning, Nicole. And yes, if you followed Elon Musk on social media, you know that him and Donald Trump have been very much working together to try to reignite, I think, some of the pretty staggering losses we've seen since peaking out, of course, over the election euphoria. So in a new post on X, Musk did say he's committed to doubling Tesla's U.S. vehicle production totals within 2 years.
Doubling?
In line with the changes from the Trump administration, saying that in support of these policies, now they are very much confident in the future of the United States, and Tesla's committed to doubling as a result. But it comes after U.S. President Donald Trump, of course, made headlines on Tuesday for vehicles outside of the White House, and then now the latest is that he has purchased one of these Model S Plaids, which mixed feedback on how that much that will actually matter, I guess. But right now, as far as the expectations, Gary Black did say that he's a managing partner of the Future Fund, said that this endorsement could potentially be huge, just given that if 5% of Republicans were following through on purchasing a Tesla in the Model S, and we could see, I mean, it translated into millions of purchases. So just one train of thinking, but it's time that Elon Musk at least focus more on Tesla here. We know that what Bush's Dan Ives yesterday said that he needs to sort of resort back to his roots, and that being Tesla right now. It's a critical moment for the stock. So I think more so and more that we see Elon Musk involved in Tesla, less with the Doge, X, I mean, not a cybersecurity attacked earlier this week. That bodes well for the fundamental story that has really shifted to be more negative here, because Tesla has some growth it needs to continue to contribute to, and I think that many are still concerned he's fairly distracted. But yeah, the social media, the memes on this are hysterical. I recommend checking them out. But Tesla, of course, now down about 7.5% this week, but having a pretty decent session today thus far, Nicole. I know the overall markets have rolled over a bit.
Thank you so much. Jenny Horn, great to see you, markets correspondent. Good look there at Tesla today. And that was some fun video with the president and Elon Musk at the site of the president's new Tesla. And we get insights in the news shaping the markets. Everybody wants to know what's going on. Should I be in or out, or what should I be buying? Kevin Monsma here, President, Chief Investment Officer, Henny and Walsh Asset Management. Thank you so much for being here. So look, you know, we see the S&P down 12, and what happens is even whenever we have a little bit of a rally, it sells off, and you know, we'll see whether or not we test yesterday's lows. But how are you feeling about the market?
I think it's clear, Nicole, that March Madness is upon us. However, this year it started in the stock market as opposed to on the basketball courts with the return of volatility. And I don't think we're flushed out just yet, as there's many concerns that remain for investors. Whether it's tariff, whether it's a slowing economy, whether it's forward-looking earnings guidance from some of the big companies in our country coming off of fourth quarter, or whether it's with respect to potential overspends in AI. All of that is creating this mountain and wall of worry for investors to overcome. However, for those investors who are trying to time this pullback, I will caution that there's often an exercise in futility. And when this pullback does bottom, and I believe that's not too far off into the future, it's likely to bounce significantly. And you don't want to be on the sidelines during that bounce and miss out on some of the potential largest returns that the market may offer.
Yeah, and you know, that's what they say. You know, you have the best 10 days of the year, and if you're out, you miss it. And so you are expecting somewhat of a bounce back, and it could be fast and furious. And if you're on the sidelines, you'll miss it. and very difficult to try and call a bottom. I want to hit today's news, and that's the CPI print, where inflation seems to be going in the right direction. We'll leave eggs aside. We used to use eggs.
Yeah, we can get back down to 55.29.
I don't think it's a fair way to use anymore because of avian bird flu. I feel like we need a new barometer. But so those went up again. But the big picture is that the print was better than expected in that there was disinflation.
Yes, and pardon the pun, but I do think CPI was an excellent number today, as both core and headline came in below expectations. However, remain well above the Fed's 2% target. However, I think that gives the Federal Reserve some reprieve. Remember, the Fed's stuck between a rock and a hard place right now. The economy is
You've got
slowing.
a triple bottom on the SPY.
Forecasting negative GDP growth for Q1 of 2.4%. That's concerning, but the Fed doesn't want to cut interest rates if, in fact, inflation is rising or potentially rising further with tariffs. So this cooling CPI print gives him some solace to know that if they need to cut rates during the second quarter of this year, they can.
So what within the report, because we'll get PPI too. Look, we have, and then we have PCE, and then when we have one more inflationary print that we get. But the big picture within GDP. So the big picture, do you feel inflation's going in the right way? And what do you think the Fed may or may not do?
Yeah, so the Fed meets again next week after St. Patrick's Day, and I believe they pause again, as there's not enough evidence right now to move rates lower, and certainly no evidence to move rates higher. But at the end of next week's meeting, we also get an updated dot plot chart and an update on their summary of economic projections. That will tell us their outlook for unemployment, GDP growth, and for inflation. It will also tell us if they're going to
still
stick
falling
to their
down.
2 rate cut forecast in 2025, or will they perhaps increase that? If they increase that forecast, I think you'll see that be a tailwind for the stock market.
Can't win today.
What people should be putting in their portfolio, but just a quick picture. There are a lot of folks who say that the president and the administration are sort of front-loading the pain.
Yes.
Get it done. You have the votes, you have the momentum. Just throw it all in the pot, and that they have a lot of tools to fix it next year ahead of midterm elections.
Yep.
What do you think of that?
I think they have a lot of tools.
Yep, I have a bullish bias.
All of these proposed tariffs could be rolled back. We also know that the tax cuts could be extended. Both of those are net positive for economic growth. And we also know that the Federal Reserve could always potentially come to the rescue if the economy continues to falter. So I might suggest that where we are right now...
We hit one of my other supports right now in the SPY.
And I would remind all of the listeners today that tariffs, I believe, will create more of a growth scare than they will an inflationary scare.
What?
I'm going to use this example I learned at a conference last week. If a consumer has $100 to spend, he can buy $2 worth $50 each. If the cost of those goods go up to $60, he can't buy both of them anymore. So he's just going to buy one of them or look for an alternative, cheaper price good to replace that other need. But it's not going to actually inflate prices, but rather it's going to slow down economic growth. That's my concern, and I think that's the Federal Reserve's concern as well.
Right, and people reallocate their spending or they save.
Well, that'll make sense.
All right, so right now we don't have a sense of panic on Wall Street. Maybe people are panicking if they look at their 401ks, but I think the pros are not panicked.
I agree.
That being said, let's talk about your picks. L3 Harris you have on there. You also have BAE Systems on there as your 2 picks today. Tell us about the opportunities.
Sure. So over the last 2 weeks, we've heard significant commitments from the European Union about increasing defense spending and looking to keep some of that defense spending local or onshore, whether it's for immediate spending needs for Ukraine or longer-term defense capabilities. BAE Systems is the largest defense contractor in Europe and likely to benefit the most from that increase in defense spending. And they'll pay a pretty good dividend too, around 2%. Onshoring, looking back to the U.S., we keep hearing President Trump talking about an Iron Dome.
I gotta go again.
Capabilities. I think of L3 Harris when I think missile defense capabilities, and they also pay a dividend of a little over 2%. So I think defense might actually be a good offensive way to position your portfolios.
And so you're looking at both of these names. Yesterday I had a guest who said tech is going to bounce back first and in a big way.
Yes.
What do you think of that?
I think it's been oversold at this point in time. I think the winners are going to be separated from some of the potential losers. It's hard for me to present a valid argument that NVIDIA is going out of business tomorrow. In fact, I think they're at just the beginning stages.
They gotta make
of the
back some
longer-term
money.
AI revolution. So each of these pullbacks creates a more attractive potential entry points. Same could be said for Microsoft. The same can be said for Amazon. The same can be said for Alphabet. However, technology isn't the only sector for investors to focus on. In fact, I believe the pullback in 2025 reminds investors not to just concentrate in one sector or 7 stocks, but look to build a more broad and diversified portfolio.
All right, Kevin Mon, Hedian and Walsh, thank you so much.
You're
Great
so
to see
welcome.
you, Kevin. Glad you were
too.
here today, and thank you for your insight into the action we've been seeing. Much more to come here on Trading 360. Up next, it's the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the technicals. John Kaufman takes us through the trades for Tesla and the German ETF EWG. And we'll check out Walmart, too. We'll be right back.
Well, kind of like Spy here.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Penelides. It's time for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades, Don Kaufman, co-founder of Theo Trade. Glad to see you both. Don, what do you think of this market? I mean,
No, I'm not still in.
Than Monday. What do you see, or are you pointing at any moves one way or the other?
Yeah, you know I love the volatility. I mean, this is where I live. This is what I grew up in terms of a trader. So definitely love a lot of volatility back and forth. Obviously, I'm an options geek. Selling some of the implied volatility right now looks decent. I mean, look, overall in terms of moves here, one of the things that I really need to express, we're not seeing high enough degrees of correlation. And that is, if you look at like the S&P 500 and some of these really big down days, there's still, pockets of strength going on. We need to see people just literally throwing in the towel before some of the sell side activity is over. We're a little closer this morning, but we're not home just yet.
So you don't think yesterday was the capitulation or the bottom just yet? Is that right?
No, absolutely not. Again, without correlation, we have no capitulation.
Don, all right, let's kick it off. Let's talk about Tesla, which is actually up 5.5% today. It says it's the company going to double U.S. production. We've seen some fun videos of Elon Musk and the President of the United States with his new Tesla. Some of your thoughts on a name that was beaten down 50% from its highs. It's clawing back now.
So Tesla, this first trade I'm actually going to be bullish, and this one I'm bullish on, largely predicated on, look, it had almost a 15% down move, 2 days ago, but one of the things that really struck me was immense amounts of volume. So the activity inside of the last 2 days of trade in Tesla was of the degree of capitulation, in addition to just, and I'm just talking pure stock volume here, like if you look at a daily chart, you're going to see immense amounts of volume. Like everybody was throwing the towel in on Tesla. In conjunction with that, I actually saw the IV rank, that's an implied volatility rank, the highest it had been literally in the last 52 weeks. So in the last year, it's the highest implied volatility. Again, both of those pretty good signs of capitulation. So I'm actually going to trade this effectively for a bounce. Inside of Tesla, I'm just going to go out to the April 4th expiration. Now, I recognize that Tesla is already bid higher today.
Yes.
Nevertheless, I'm going out to the April 4th expiration. I'm going to be buying a 270 call, selling a 275 call. I'm going to use a spread, $5 wide spread, keep myself intact and away from what we term the volatility crush. Stocks like this,
well, I got to learn how they trade like this.
When they bounce back, the volatility crushes.
These guys do it different.
To protect myself there, not just buy a call. This $5 wide spread is done for a $1.35 debit.
Okay, let's see what Rick says about the chart. He's noting the heavy volume, which I'm sure you'll see there on the chart too. Let's see it.
To kind of piggyback off Don's point, in a different way too, I look at the option time and sales data in Thinkorswim very often for a variety of stocks, and typically Tesla is one of the highest numbers.
Which could be starting to rebound now.
Anecdotally, 330,000 individual option trades per day, one of the highest in the market for sure. So quite a lot of heavy activity, no matter any way you slice it here. But to look at the chart, we can see that.
I gotta go run and do something real fast, and I'll be right back.
Two phases I would say in this chart recently here. We had our sideways phase, and then we had our rally phase, and then the eventual give back that took us back to where we began this kind of sideways consolidation range between about 208 and 265 here. You can see that matches up with lows here, and then high points here, and here. So unfortunately for the bulls, that old ceiling did not really provide much of a landing pad here for price as we fell down below the lower edge of our downward sloping channel type shape here. We can see that we have tried to retest it so far today, that old boundary. So far we haven't made it back within those confines here. Heavy volume spikes, volume at least 50% above the 50-day simple moving average of volume. So heavy volume on one of the heaviest volume traded stocks to begin with. RSI perhaps about to break above not only that 30 oversold line, but also our downward sloping red trend line. So if we do recapture our pattern and RSI gets a corresponding breakout, that could add some extra credence to the upside move here. But if we were to move lower, volume profile point of control down here, 177 or so seems like a noteworthy area. We are within another volume node here near about 250, Nicole.
Okay, thank you for that. And it's interesting because, right, you don't normally talk about being bullish or seeing momentum to the upside, Don, but it looks like you're making an exception today based on these charts.
Yeah, there's going to be a lot of bullishness lately because, look, this volatility brings opportunities on both sides of the marketplace, and that's what you got to look for as a trader. You got to look for two-sided trade. What we've been in, if the last couple of years are any indication, there's a lot of one-sided trade. We just kind of grind a little bit higher, and I know that investors love that. But this kind of volatility, as I said, this is where I live. This two-sided trade over here, some of the bounces, and again, I would perceive a bounce could come at any moment, not just in Tesla, but the entire S&Ps. Nevertheless, as I said earlier, I still don't think we've seen the bottom per se, though, of the overall marketplace.
Let's get to EWG in Germany. The year-to-date performance for this German ETF is up almost 20%, certainly bucking the trend that we've seen here at home. Tell me a little bit about where you think this could be headed.
Well, here's where the bear comes back in. You have German markets effectively sitting at or near all-time highs. Yeah, they backed off a little bit in the last couple of days, but Here's one where I'm not buying it. Literally, figuratively, I'm actually getting short. I'm a big time bear in the European markets, and EWG specifically is where I want to get that done. Now, I could go into reason after reason, but you only need look at the political environment or the regulatory environment to say, like, look, who wants to invest? Now, I'm hearing constantly right now, on broadcast that, well, we're shifting right now over to overseas markets, a lot into Europe. You really want to invest?
First sign of greenness here.
Friggin' a wet blanket to a party at this point, anywhere in Europe in terms of the regulatory environment. I just don't see heavy investment inside of the European markets.
It could be starting to turn around.
Look, I'm actually taking a statement over here. I'm going to go all the way out to the July 18th expiration, and I'm going to be buying a put in the money, and I'm doing it because I'm creating what we term a synthetic short. I'm buying the 42 put, just buying the put outright, okay? And I'm doing that for a $5.05 debit, looking for a dramatic, not just a short-term move, but a more dramatic move to the downside inside of the German markets.
Okay, thank you for that. So turning bearish on this one, let's see what Rick Ducat says. Check out the technicals.
Well, I'm going to be right back, and then things are going to turn around if they don't turn around on me before.
As we look at our chart, we can see that was our high point before we had our gap up. And
you got to check out an air conditioner.
Low point during these past few sessions here. So 3750 was just kind of the general area that I was like focused on. Probably 37 would make sense just to call it an even whole number there. But the reason that we are taking notice of that is not only because of that gap level, but also because we have this upward sloping channel here that began with this low point. Our two white dashed trend lines are parallel to each other. Took a conventional trend line going across the lows, duplicated it, put it across the highs, matched up pretty well, provides us with a potential boundary to keep an eye on going forward if we do resume our upward climb. Now, we can also see, once again, very heavy volume recently. Many volume spikes here as we have broken above our previous highs, but notice as well at the same time RSI actually fading a bit. We're seeing bearish divergence here. The pace of the gains is slowing down. Does this mean there's an impending collapse coming? Not necessarily. That's not what I'm trying to say. This is just showing that the acceleration of the trend is starting to slow down. The pace of the gains is not really matching the level at which it once was. So a sign of potential slowdown or consolidation. So we had those shaded areas on our chart. The reason we did is because they match up with these volume nodes here. Relatively light volume at these elevated levels compared to all the way down here at our point of control. But some areas to watch based on that would be more like 38.50 and around 36 or so, Nicole.
All right, thank you so much for that. And finally here, last but not least, Don, we'll take a look at Walmart. Your thoughts?
Walmart?
Yeah, so Walmart, I'm not necessarily outright bullish here, but I am looking for a significant bounce back to the upside. So, Walmart, if you look at this this underlying chart, which Rick is going to look at momentarily, you would think, like, if you just covered up the symbol here, you would think this is like NVIDIA. It's not. It's Walmart, people. So welcome to Walmart, which has become quite a volatile animal in the most recent years. Nevertheless, I'm actually going to look at this for what's called a call ratio backspread. It's a little bit of an up-tempo strategy, but it works extraordinarily well in these kind of what we term as traders wicked rip your face off rallies. That's
I'll
exactly
be right
what
back.
I expect inside of Walmart. So I'm only going out to the April 4th expiration. And the trade is to sell one of the 88 calls. So selling one of the 88 calls to turn around and finance buying two of the 91 calls. This trade is done what we term at even, meaning that it's neither a credit nor a debit. It's even money. If the trade doesn't lose anything, if the marketplace goes down, the trade actually can make some decent money if we actually get right back up to that 94, 95 region, and it's 95 specifically that I have in mind in this particular price chart.
Okay, let's take a look because let's see about the rip your face off rally. But the truth is, there are people who still come on. They all love Walmart. I had one guest who said the outlook is it being somewhat tepid sort of crushed the market. That Walmart single-handedly was somewhat responsible for the market sell-off. Rick, let's see what you think.
Yeah, and I agree with Don's point as well because once again, if you were to cover up the name, you might not think this was a big, slow-moving consumer staple type name here. But we have seen 46% of a rally off of those 52-week lows, and that's after we had this.
Looks like it's trying to rebound.
Drop or so off the highs. So we had some big moves in this name, and this chart is really interesting to me because if you look back, if you follow our dashed green line back here, you can see
Here's
that
your
we're getting very
resistance
close
line.
to filling this earnings gap that we formed during November near 84.85. So a noteworthy area to keep an eye on as today's session
Right there.
progresses. We're not very far away from that point here as we speak. That also matches up with the lower level of our downward sloping channel type shape here between our two white dashed lines. RSI moving into the oversold territory, typically regarded as a sign of potential weakness here. So I'd be really curious if we break through that gap level and the RSI solidifies into that oversold area, could be a noteworthy scenario. Notice that our purple 252-day exponential moving average comes in at about 80.50 or so. So that's a noteworthy area to the downside. To the upside, we have our two moving averages, yellow 21-day and orange 63-day, basically right on top of each other, near about 94.55. So quite close to Don's break-even point to the upside on his trade. If we were to look at our volume profile, we can see that it also matches up with the volume node. So that seems like an important area to clear based on these technicals. Notice as well that our purple 252-day EMA also lines up with the volume node, so 80.50 supportive area to the downside.
Great to see you, Rick. Kat, thank you for all those charts today on the Big Three, and we'll give you the final word. Don Kaufman.
Yeah, markets right here, right now, again, expect considerably more volatility. Sure, we're going to find a bottom through this, but as I said earlier, look for higher degrees of correlation. For those of you that are on Thinkorswim, look at like the S&P 100, the number of stocks that are trading, if you will, to the downside in some of these big sellouts. You want to see in the S&P 100 that number hit like 90, even 95. We have to start to correlate to find a bottom in this marketplace.
All right, nice to see you both. Thank you so much for the Big Three today. Always exciting, and today we had Tesla, EWG, the German ETF, and Walmart. Don Kaufman, BioTrade, Rick Ducat. Thank you both for the Big Three. Coming up next, let's spotlight Gorilla Technology. This software AI company has soared 55% this year. Chairman and CEO joining me next.
Get ready to squeeze either way.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly.
Damn, how
I
cool.
can invest and trade on my own.
Yes, and I let them manage some
Don't let him do it to you, Carl.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab,
Damn it.
a modern approach to wealth management.
Welcome to Market Overtime on the Schwab Network.
I'll be right back.
Has worked pretty much across
That's what I said before, but I mean it now.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial. The old guard is saying, away, off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So
what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
Welcome back to Trading 360. I'm Nicole Petalides. We're live on the floor of the New York Stock Exchange. We have a CEO spotlight for you. We are spotlighting Gorilla Technology. The stock has been on a tear. Check it out. The company has announced an AI energy deal with Thailand. Now some news in South America. And we see some big money coming as far as investments go. So joining me here on set, Jay Shamden's with me, Chairman and CEO Gorilla Technology Group, and Renato Costa, CEO of Brazil Invest Abu Dhabi Investment Fund. Thank you both for being here.
Thank you.
Exciting stuff. I mean, I know that you had your milestone, a huge backlog as you were coming into 2025 for Gorilla Technology. You're going to be talking about a huge investment, Renato, that I want to hear about. So first, Jay, just tell me how business is for 2025.
So, first of all, thanks for having me here. This is, I think, the second time, if I'm not mistaken. Gorilla has been growing at a very rapid pace. My 2025 numbers look very exciting. We're, in fact, looking to upgrade it this coming year. We were aiming to do about $90 to $100 million of revenue this year. We're upgrading that to about $100 to $110 million of revenue. But what is very exciting about Gorilla today is that the very fact that we are not just focused on 25, we're focused on 26. And our backlog today is beyond, it's more than 70% for 2026. So what we are trying to do is we're trying to create a sustainable business with long-term revenues and long-term contracts. And that's kind of difficult, especially when you're looking at national cybersecurity infrastructures, national AI infrastructures for governments, and more importantly, building smart infrastructure for cities.
Right. For example, the smart grid that you have for Thailand, right, and providing power there. And Renato Costa of Brazil Invest, tell us about the exciting news this week. Huge investments coming.
Huge investments are coming. We already signed $100 billion to use in Americas. $20 billion for United States and $80 billion for the Latin America, including Brazil. So we are very happy with this. So now we announced the Global Edge Worldwide Fund. That's a major fund with the Middle East investors. So we are so happy and with a great responsibility.
I mean, and huge projects that will modernize infrastructure, and Gorilla Tech will be the prime technology provider, right?
Well, we've instilled a lot of confidence in Renato and his team. We're excited to be working with Renato, but what is exciting for us even more is that we get to work and build new economies. It's not just about investment, right? Yes. When Renato talks very passionately about this, it's not just about investments. It's about making sure that we can create impact and deliver value for those communities. And I think that's yes. Exciting, isn't it?
Its growth economy is more than just a fund. It's about helping people, help communities grow the economy. So it's not just about a fund. We have a division for early stage, and one big gap between investors and huge projects, amazing projects that we have. So we are more than just a fund. We are a financial mechanism for this.
Yeah.
It's interesting too. I mean, I think it's, first of all, I love that you talk about the expectation of revenue being even higher than what we thought it was in the fourth quarter, because you have this backlog, and that in itself was the milestone of the revenue going forward. But you've already raised that number here, and the stock has been soaring up over 50% this year. When we talk about what you're doing with the company, I mean, I think of malware, cybersecurity. We talked about the smart grid. I saw AI video at the port, right? You could track the containers. I mean, these are the types of things, the business solutions, right?
Yes. So, Gorilla as a company today has evolved from being an HAI specialist into a smart city infrastructure provider. AI for us is not just about delivering value to the customer, it's about creating value for the customer so that they can sustain their business for the next 20 years. So when I look at it from let's say, for example, the Thailand grid, it's not just about optimization, it's about protecting the future for the next 25 years. And I think that's where Renato's fund also comes in. Gorilla is no longer just providing solutions, we're providing capital and solutions together. Now we talked about, what Renato was alluding to as well, is we are going to work with Global Edge. We're creating a $20 to $25 billion fund for Middle East, North Africa, which is a separate fund from the $100 billion which has already been invested. And we're also creating a $50 to $100 billion fund for Asia, specifically focused on Southeast Asia. And that it will invest into national infrastructure, so whether it's ports, seaports, smart city initiatives, grid optimization, railway networks, and so on and so forth. And Gorilla will be the prime provider of contracts for technology, if I may, for all these projects around there.
Right.
We're earmarking anything between 20 and $30 billion for Thailand alone, and we're seeing that nation grow very rapidly. So what we are trying to do with Renato is something very unique.
I mean, look, sounds like we're getting closer to 200 billion because we had 20 billion in the U.S., 80 billion in Latin America, 20 to 30 billion, right, Africa. You just mentioned one more, escapes me. But I'm keeping up because
his aim is about 300 billion over the next 5 years.
So that's what I was saying. We're saying 100 billion, but we're just throwing the billions around.
And it's more than 100 billion.
It's more than 100 billion for sure.
Yeah.
For sure. How did you feel about all the DeepSeek news and the AI model? When we learned the news from China, I don't know whether or not you believed it all. A lot of those tech and software related stocks sold off. How did you feel that day and what did you make of it?
I actually think DeepSeek is quite a, one, it's a useful tool. I've used it, I've played around with it. But more importantly, I do not believe what the market tends to believe, that it's going to kill the overall AI evolution. I think it's going to push the AI evolution. In fact, I would see people starting to use bigger, better, more GPUs required. I'm seeing countries already coming to me and talking to me about, increasing their spend on data centers. And one thing which I can tell you today is between now and 2027, we are required to deliver between 20 to 24 data centers. Okay? Oh, yes.
Where will that be?
Across the world. It's in Colombia, Peru, Panama, United Kingdom, Egypt. Of course, we're building about 4 in Egypt right now. We'll complete 8 by the end of next year. And there's a few in Thailand and Malaysia as well.
So, I mean, this is all going to require so much energy. We're back to the billions. And what you're doing is providing value too. I mean, it's not just about the technology or the growth of the companies, but you're trying to provide value to the people that are, this is humanity here, right? This is your message.
Exactly what we are doing. So our partnership is exactly to join force with an engineering company, to join forces with the team, join forces with this amazing company of technology to grow this business and data center, so we are giving them the financial support for this.
Have you had to meet with other tech CEOs, U.S. tech CEO, like when we think of these big semi companies or those providing for data centers and infrastructure, are you meeting with those folks? And what kind of CEO C-suite conversations are you having?
Currently, we're doing both. We're meeting CEOs in the United States as well as where we can actually build them.
What are the trends? I need to know what they're saying in the meetings. Are they optimistic?
They're super optimistic, very optimistic. I personally believe there's a lot of investment that's going to happen over the next 5 years, especially in infrastructure. The U.S., especially under President Trump, is going to invest a lot of money into the region, and I believe that's going to be good for the country as well. But we're also seeing the U.S. support other countries as well. What people are not seeing behind the scenes is that the U.S. is actually helping support a lot of that growth initiatives in other countries. Like, for example, in Thailand, we have the UK and the US support from the UKEF and so on and so forth. So it's behind the scenes. It's not pretty blatantly obvious, but it's behind the scenes. And we like that because that gives us confidence that when you have a government support and government like the United States and the United Kingdom, we can actually move forward. I think you've seen the One Amazon project which we recently signed, and Renato is a big investor in the One Amazon project itself. And what is exciting for us about that is we have huge government support in the United States. We're working with Goldman Sachs, for example. The CEOs of Goldman Sachs have come back to us and said, listen, we're going to push this forward.
And these big tech CEOs are the Fortune 500, the biggest of the big.
That's correct.
Final quick thought, Renato.
Yeah, so he told about One Amazon. For us, is one of the best and most important projects that we have. So we are committed with them, and we are investing $100 million at the project. And Gorilla is with us, so it's very important. So we are here to join force, grow the business, grow economies, and help communities. That's our message.
Thank you both for being here, and Jay, thanks for coming back to the show again.
Absolutely.
Here on Schwab Network. We're so glad to have you back, and now breaking news with just the revenue growth, the data centers that are coming. You mentioned 20 to 24
About
data
24,
centers,
yeah,
right?
probably more.
And maybe more by 2027, so we'll look for that data center growth as well. Thank you both for being here, and come back as you continue to grow and tell us more good news. Nice to see you both. Jay Shandon, Chairman, CEO of Gorilla Technology Group, and Renato Costa, CEO of Brazil Invest, Abu Dhabi Investment Fund. Thank you both.
Thank you.
Coming up next, George Sillis is standing by. I'll take a look at Adobe ahead of the company's earnings. He'll preview the number. He has an example trade for you as well. We'll be right back.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Pendelides. We're live on the floor of the New York Stock Exchange. We have a look at some stocks that are on the move this morning. Diane King Hall is here, host of Morning Movers here on Schwab Network. And we're keeping our eyes on Apple today. The shares have fallen to 6-month lows. Morgan Stanley cutting the price target. Let's hear some details here.
They are. So Morgan Stanley cutting the price target on Apple to $252 from $275. They are still maintaining overweight rating, which, as you know, is essentially the equivalent of a buy rating. So there's still some more upside from here. And initially, the reaction was pretty muted when the market was higher, and you saw Apple kind of trading range bound. I mean, it was flip-flopping just above to just below the flat line, but now it is under some pressure along with that broader market weakness that we are seeing. In terms of Morgan Stanley's view on what the lowered price target, I should say, is about, part of that has to do with the delay in the Siri, more advanced Siri update, and then just worries about iPhone upgrade cycles and higher input costs that really in potential tariff impacts. The Siri's AI delay, We know we've heard about that, the advanced Siri delay being rolled out. And so essentially Morgan Stanley's view is that without these significant new features, an iPhone upgrade super cycle we might not see as soon as the street was expecting to see that. So they're projecting that, you know, without these advanced features, it's not the driver, the catalyst for consumers to make that upgrade. They're also concerned about lower iPhone shipments in general, not just because of that AI, but people just holding on to their phones longer. So they're also reducing their outlook on what they see with regard to EPS and revenue impact as a result of this. Morgan Stanley reducing their fiscal 2026 estimates by 5 to 6%, expecting revenue to be $436 billion, EPS of 8. That is actually below consensus, slightly below consensus. They are still obviously constructive on Apple because they are maintaining that overweight rating, but they're worried about the tariffs, the Siri delay, etc. So that's causing them to reduce the price target.
All right, and it's down 1.7% right now. Thank you so much,
Okay,
Diane King Hall. Good to see you. Now let's get to our disruptors. George Sillis is here, senior markets correspondent. Take a look at Adobe. So we are going to hear from Adobe after the bell today. Everybody's waiting with bated breath. So tell me your thoughts. I mean, what should we look for in the close today with the report?
Well, yeah, I mean, if you look at the stock, obviously it's been a poor performer. It's down about 21% over the last year, and in the last 4 or 5 months, it really hasn't done much in terms of price action. So I think this is going to be a pivotal quarter for Adobe because one of the challenges the company has really faced in the last year has been two things. The first is the artificial intelligence monetization, their Firefly application, and essentially integration within their creative suite of publishing technologies. I mean, this is one of the leaders in document publishing, creative publishing, and digital media and marketing. They've actually extended quite a bit of their capital investment into, of course, the e-commerce platform. But artificial intelligence integration has been a challenge, particularly in the past few quarters. So that's going to be, I think, the foremost issue that all the analysts are going to be looking for in terms of the growth prospects of AI. I think the other thing that a lot of people may not realize about Adobe is Apple. I know Diane talked about Apple just a moment ago as challenging, but Apple bought a company called Pixelmator, which is actually a pretty mainstay competitor of Adobe. So Apple is actually moving into that area or encroaching a little bit on the competitiveness of Adobe's ecosystem. So that's something else to consider with the name. But if you look at, obviously the growth rates have decelerated in the past year relative to their 5-year averages for both sales and earnings, but so has the earnings multiple for this name. So this will be an interesting, earnings call to say the least, but they are expecting to earn $4.97 on an adjusted basis per share. That's higher by about 11% compared to last year. Then also at the same time, they're expecting 9% growth in sales, about $5.66 billion compared to $5.18 billion for the same quarter last year. So these growth rates have decelerated because they used to have earnings growth were in the high teens, the low 20% range. Now they're expecting about 11%, and sales, which were traditionally in the mid-teens, are in the high single digits. So the bar, coming into this earnings for Adobe is quite low. So with that said, that could create, obviously some positive momentum, but at the same time, we have to consider the market conditions are still relatively volatile and weak. And if they don't demonstrate monetization of AI this quarter, we could certainly see a distribution again and a sell-off.
All right, George. So how would you go about an example trade? I know the earnings are due out today after the bell.
Yep. Yeah, so it can obviously go in two directions. We know that, but we also have to consider probabilities. And I think, with this, with the market environment plus, again, the uncertainty around their AI monetization, this could be a situation where we see a lot of volatility post earnings. In other words, I don't see too much movement past a market maker move in either direction. So with that said, I'm going to go out to next week's expiration and give us some additional time. With 9 days expiration, I'm going to sell a neutral strategy in Iron Condor, and I'm going to sell it right outside the market maker move, which is right now around $32 or $33. So I'm going to actually sell the 470, 480 call spread. That's above the current price, and then below the current price, I'm going to sell the 400, 390 put spread. Now you could harvest about $4 a share or $400 a contract in this trade. So the whole objective is to have the stock stay bounded within the constraints of the short strikes. That's the 470 high and 400 low. Your break even is 474 if it does move to that level, or 396 at the downside. So you're earning $4, but your total risk in this case is $6. And that only occur if the stock trades above the long strikes, which is 480 on the high side or 390 on the low side. But you have until the expiration of next week for it to manifest.
All right, George Sillis, great to see you, and thank you. Good look there at Adobe, an example trade for us as well, our disruptor today. George, thank you. Coming up next, let's talk all about the CPI number as inflation's going in the right direction. And what do we need to evaluate within these numbers? What will the Fed do? How's our economy? Our panel is ready.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
It's time for a 360 round, and we're looking at today's CPI data, right? So you saw the number come in, and it comes in with less inflation than expected. That's the big picture and the takeaway. So let's see what our guests have to say about this. Joseph Wang is here, CIO, MonetaryMacro.com, and Jay Hatfield, CEO, CIO, Infrastructure Capital Partners. Thank you both for being with us. Jay Hatfield, what was your interpretation here? You know, the core CPI comes in, it's disinflationary, people like that, and in fact, I just saw how tech stocks got a big bid. You know, people got excited over this number. Is there something to be excited about?
Well, yes, the big swing was in transportation services, and that rose a disconcerting 1.8% last month. So that's a 24% annualized rate. So that was very positive. What wasn't so positive is that shelter remains elevated at 0.3. We have an alternative way of calculating CPI using real-time data. That number year over year declined to 1.7%. So we have a differentiated view that inflation's already contained. The Fed should ignore price increases from tariffs because they're one time. It's like a sales tax. And the Fed is behind the curve and needs to cut rates, or else growth will continue to decelerate and eventually we'll have a recession.
It's interesting because you're not the first person to come on and say, look, the meeting next week on the 18th and 19th, they should actually cut. What say you, Joseph?
Well, first off, thanks so much for having me, Nicole. So I think Jay makes a very good point. Now, CPI was a little bit cooler month over month, but we have to be careful now. What the Fed looks at is not CPI, but PCE. So when you look at how CPI feeds into PCE, that PCE number, core 0.3% month over month, is the estimate right now. So on a PCE basis, it's not super cool. However, on a bigger picture basis, I agree with you. I think inflation is last year's story. Now, what we learned from 2018 is that tariffs are very growth negative, and that overwhelms any change in the price level or inflation rate that may happen. So I think the Fed is going to cut more than the market is expecting right now. And I think growth is the bigger concern rather than inflation going forward.
And how do you what's the takeaway here, Jay? I mean, if the Fed's not cutting fast enough, you know, are you worried about the economy?
Well, I think that, you know, Atlanta GDP of negative 2.8 is massively overstated. And it's important to keep in mind the first quarter is always slow. You know, there's no Christmas, there's no construction. We had a cold winter. So we think people are getting too concerned. We were really one of the first to say the economy is weakening. But now I think people have overshot And the one thing to focus on is, so the old economy is very weak, and investment is really critical on that side. And so actually the old economy has been weak for the last 3 quarters. But of course, tech is ultra strong. So our forecast is a 1 to 2% growth, but the Fed has to cut 3 times. We do think they're not smart enough to cut this month, but they will in the early May meeting.
Okay, so now at this point, are you, Jay, by the way, are you buying dips? I mean, if you were saying how you were first to call maybe an economic slowdown, are you now buying dips thinking that you get a bounce back quickly?
Well, we said before the sell-off started that we were neutral on the market at a 6,000 target. And the way to use that target, of course, is if you are 10% below as like 5,500. We think that's a decent place to take a shot, yes. But we would rather wait till April to get really pulled up.
Got it. Joseph, I'll give you the final quick word.
So I think Jay makes a good point. The Atlanta Fed GDP now was saying a negative 2% growth. That's overblown. The creator of the Atlanta Fed GDP came out and said that's largely due to gold imports. You take that out, real growth is about 0.4%. So definitely slowing significantly. Now, my target at December last year was S&P at 5,500 at the end of this year. So I think we have further lower to go. We're going to bounce back later in the year, but I would not be the buyer of equities right now.
All right, Joseph Wang and Jay Hatfield. Joseph, Jay, thank you both so very much. And thank you for being with me here on Trading 360. The Dow's down 163. The S&P 500 is back in the green, folks. So I wanted to mention that. Download our free Schwab Network app. It's available in the Apple App Store, 24/7, schwabnetwork.com. Keep it right here. Fast Market is next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Right.
Join me, Oliver Renner,
I'm back.
alongside Schwab Network's options experts as we explore the second derivative.
We broke it and we hit the 200. We are at the 200. Did you miss me? We got a little bit off that trade. I'm still in the red though. We got to fix it. I think we might break it. SPX pulled back and hit the 200. The SPY hit the 200. I'm not too bad off now, though. Damn. There's $5. 520. If this goes through, the war stops, which could go a lot higher. I'm telling you, we could have a nice rebound. I really don't think it's all about the tariffs, but it is. We're double topping here. We'll see if we hold this resistance or we break out. But this is the double top. Support. Let's get this up here first. Support will be the 200 if this doesn't hold. Your next one will be up down here at the 200 SMA at the yin yang. Right there. Right, exactly right there. Not a penny less. Magnificent. Time for the current to change. I'm almost back to even. Yeah, it's odd that I'm down. $56.11.96. I'll jump back in these if we break it.
Count to 3 and trade with me, but count to 4 to make much more.
That's strange. I was thinking about asking you about that. If you did that. I think it would be neat to become a property manager. I wish I'd thought about that when I was younger. Bought a big apartment and done that. Still might.
Fascinating.
I'm talking to the owner of one of the buildings that I do magnificent, about the air conditioner. Been working on that all day. That's why I left. Had to go back and check them.
Thank you very much. That's really nice. Thank you.
What's that?
Thank you very much. That's really nice. Thank you.
I should have held these. I would have got another $400 out of them. So support 55.99.78.
Affirmative.
Oh, my voice echoes on YouTube. Mannequin. How do I sound on YouTube? Hello? Don't make me want to sing. Say I'm pushing it, Mike. You're pushing it, little man.
You're pushing your luck, little man.
Yeah, that's what I thought. Do I still have the echo? Seems like I should not. Okay, get ready. Think we're getting ready to boom. Huh. Mannequin says I sound fine.
We choose truth over facts.
No echo. It could be on your side. Here we go. Tesla's back to resistance. Well, definitely off to a rough start today. But it's getting better. This is what I mean when everybody's different. I'm definitely different. I'm the kind of guy that when has something on his mind, I can't get it off my mind. And I've had a real busy night. And it still seemed like it's still going on here. Let's go, baby. Break it. It's like the car deal, you know. I couldn't get that off my mind for 2 weeks until I finally got it resolved. Now it's air conditioners. And trying to keep the IRS employees happy, which is a hard thing to frickin' do. You ever try to please a government employee? Especially these days? So I managed the IRS building down here more or less. I'm the in-between guy between the owners and the managers, and then they're out of Kansas City, so I got to be their middle guy. And they all come back to work, so they're all, I'd rather be at home. Like spoiled little brats. Hope they're not listening. Yeah, I'm talking about you IRS employees. They haven't gone back to work since COVID, since the government shutdown, or the closing down business. Okay, I'm not going to hold this sucker. I'll get right out of it if it doesn't hold this support. And wait for the dip and get back in. I ain't going to go through what I had to do this morning. Tell them it's the one on the far west side of the building. Upstairs with all the guns. He'll probably know which one right straight to go to. If he needs to, he can call me. Break it. We're waiting for the double top break. Hey, Mike, did you go to church?
Affirmative.
I'm going to read you a Bible verse. I started going. I want you to read this one real good. Impart, to give a share of portion of my profit to Washboardjim. Romans 1:11.
I cannot accept that course of action.
God, look at that dip. What the heck? Who's the idiot that shorted that? Oh man, makes me want to get out of it right now. I didn't like that candle, how it just knifed.
They call them dumps, big massive dumps.
Yeah. It wasn't much of a dump though. Yeah, it was too.
We choose truth over facts.
It's a $6 dump. There it is. 15 right there. I mean, that's bullshit. Okay. Let's see if it was just a fluke. We got a symmetrical flag. Do you get out now or you take the risk with Bobo? Break it. It's a new Bible verse, yes.
It's all fake news. It's phony stuff. It didn't happen.
I made it happen. I don't know if this thing wants to break or not. I'm scared. Right now. There we go. Magnificent, are you in the trade?
Affirmative.
Very good. There we go. Yoko, are you in the trade?
Affirmative.
We choose truth over facts.
There we go. Make a business decision. I'm about ready for another yabba dabba doo here. 7:30. I'm going to get a double top, I think. Let's end the war. Come on, Trump, you can do it. Alex? They're still buying of the 5,700 today? Very good.
Affirmative.
We got a Head and Shoulders coming up at 56.30.76.
That does not compute.
It will compute. I'll make it
I
compute.
cannot accept that course of action.
You will. Then it'll be 56.31.06.
It's all fake news. It's phony stuff. It didn't happen.
Nope, not today, buddy. Give me a hell yeah.
Nothing for you.
No. Okay, we pull right back to support. Oh, darn it. I'm back at my entry. It's not supposed to do that. We got a 1, 2, 3 bets.
Count to 3 and trade with me, but count to 4 to make much more.
You might have to count to 5. Take a nosedive.
They call them dumps, big, massive dumps.
Shit. So what in the news here? Two engulfing candles with a tweezer bottom. Alex. Uh-oh. I'm going to give you some love, Alex. There's your 3 black crows. Things are going to change right now. $4. Okay. God darn. I don't want to say 7. Shit. Okay, come on, now bounce up. $370. Okay. I added on 370, but I don't know if it's any good or not. I got 3 contracts. Let's hope it is. This has not been an easy day for me. Nothing like yesterday or the day before. We could easily come back and hit that. I might have a red day today. Damn it. At least I saved $3,200 this week on my car. So Mike, I took my car to the mechanic and I told him I was having some issues with the front end. So I went to Big O Tires instead. 3 of my tires were out of line. They were off like 1 ounce piece. Now it's running smooth. Okay, I'll be right back. I gotta go use the restroom. I got my phone with me just in case I need to stop out, but it's gotta hold the 200. If it doesn't hold the 200, I mean, that's a solid support. We got your left shoulder, right shoulder. We come back and hit it one more time right there. I got in it as it started to stall out here, so we'll see. Could hit that 200 and bounce right off of it. I'll be right back.
We were just 5 minutes ago. S&P 500 still up nearly 0.5% on the day. Dow Industrials, that index is down over 100 points. NASDAQ still up over 1.1%, leading to the upside on a rebound in big tech. Russell 2000 small caps fractionally lower, basically flat on the session. So that's come back up a little bit also. So we'll keep an eye on stocks, because if you turn away for 5 minutes, things can change relatively quickly. All right, let's get into a discussion about Boeing. The plane maker released some data yesterday on deliveries, disappointing once again. This stock's been on a roller coaster. Let's bring in George Tillis, senior markets contributor here on the network. George, you talk about Boeing, you talk about the duopoly with Airbus, the need for planes, you know, the demand for planes. They're finally starting to get through some of their production issues after a couple of fatal crashes, unfortunately. But what's your take here on Boeing? It seems like every time this stock catches a bid for a week or two, they start hitting it again.
Yeah, that's the thing. I kind of put this stock in the camp of it's just so difficult. It's kind of uninvestable, honestly, just because there's so much variability in the estimates, the delivery numbers. Obviously, if you look at the operations of the business, that's really where the structural problems lie. Last year, just to give you some context here, the company, took a $12.2 billion unusual charge. And so it looks like to me that they're coming clean and writing down some operational assets. They're restructuring, obviously, and I think this is a long, drawn-out story for Boeing, because every time it catches a bid, it seems to just move back to the downside. It seems to adjust its earnings to the downside on a forward basis. And to give you some context, I mean, if you just go back about 3 quarters ago, the estimates for fiscal year 2025 in terms of earnings was around $4 a share, $3.97. But now it's around a loss of $1.49. But see, the thing is they keep pushing out those expected profits into 2026 now, where their earnings estimates are around $4.24, which is just fractionally higher than the previous estimates that were revised all the way down from positive $4 to negative $1.50. Again, these are just rough numbers here, and they're just pushing it out to 2026. So, with that said, the company itself, continues to demonstrate, deliveries. If you look at their deliveries numbers for the month, it's 44, up from 27 a year ago. If you look at Airbus, they seem to be very in line with their competitiveness, around 40 jets on the month. They do have a duopoly with Airbus, of course. I think that's very positive for both these plane makers, but I think, there's probably going to be some Asian competition eventually, probably out of China, in the jumbo jet, in the commercial space, that we have to consider. But irrespective of some of the challenges the companies face, idiosyncratic to the business, now we have external problems. And the external problems that I'm alluding to include, airline stocks have been performing poorly. Boeing being an industrial stock is also some challenges because of market conditions. And, I think operational conditions, market conditions, and the fact that the earnings keep moving down and they keep pushing out the profitability to the future speaks to why every time the stock makes sort of, 2 steps forward, it makes another step back. And in fact, if you look at the last 10 years, it's pretty amazing to see this. The stock has really done nothing. And it's been relatively flat. And just to give you some context as well, prior to the 737 MAX problems, which go all the way back to 2018, that year, the company generated a profit of
what a time to go take a shit.
And then you fast forward to the last 4 quarters or 12 months, they lost over $12 billion. So it's a complete turnaround because of the 737 MAX, which, again, with the problems they have to right-size it. They can't reinvent that airplane. They're just going to have to right-size their operations. But unfortunately, it's just been a multi-year problem for the business, alongside COVID, which was another issue they faced going back 5 years.
Oh, man.
George, you're right. I think this stock is a duopoly.
This day got me shook up. I'm not going to sit here and hold that thing and watch it knife on me again. Not when I'm up $600. Magnificent, I'm in the green now. Were you able to get out of that trade, Alex? Where in the hell's Randy? I'm out. I'm not going to sit here and watch it go down on me again. Now, I want you to be honest, Alex.
Slowly move back higher, really in the midst of a market, the turmoil we're seeing. So I think it's worth watching. Let's just put it that way. Just because, like I said, the earnings estimates went from profits of $4 down to a loss of $1.50. Now they're pushing it out to 2026. So with that said, just keep in mind that they already took that charge last year, and it's highly unlikely they're going to take another one this year.
Yeah, I think a lot of the pain recently has been tariffs. Tariffs are not good for Boeing as they push out their planes, large capital goods exporter from the U.S. So that's, I think, why we're seeing a pullback sharply in the shares, down about 10% this month. All right, great backdrop for us. That's George Tillis, Senior Markets Correspondent here. Kev, so we got to come up with an example trade in here if you think this stock may bounce after this pullback, because the stock had rallied, as you mentioned, rallied pretty significantly to kick off the year, but it's been under pressure so far over the last couple of weeks here. So I went the don't be a hero type of strategy here, Kev, where I'm selling
don't be a hero.
Put vertical, but I went out to the April monthly cycle, maybe get away from some of the tariff headlines. Went out to the April 17th, that's 36 days to expiration. Sell the 150 strike put, pretty tight to where the price is right now, just $6 lower. And then buy the 140 put, so a short $10 wide neutral to bullish put vertical, collecting roughly. We got a $3 credit. That's where it was trading earlier, trading closer to 275 credit now. So stock has rebounded a little bit with the overall market rebounding. But if you collect that $3 credit, that's what you can make with $700 of risk. But it takes your break even down to 147 to the downside on this one, Kevin. That's 18, $19 below the current share price, Kev. So out of the money put vertical, don't be a hero where, hey, I can profit if it goes down but stays above that 150 strike, or it stays where it is, consolidates, or goes higher, right?
61% probability of finishing out of the money, Tom, but you've got
I'm going to go make me a little cup of coffee and I'll be right back.
A lot can happen in 36 days, as you know, and if the worst case scenario happens, you are risk to.
Yep, definitely short neutral to bullish put vertical look there in Boeing, just like our dollar generally.
You're a little too loud, my friend.
Stick around right here on the Schwab Network. Next Gen Investing's coming up.
Schwab Bank Investor Checking, the checking account built for
Okay,
investors.
prepare ye in the name of the
Highest
Lord.
Client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide. No overdraft fee.
Mike, I wanted to let you know that I'm going to sign up for the church choir.
Linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location.
Fascinating.
Moving funds between your accounts is easy. Cash moved to your brokerage account is available in
Alex,
seconds. That means
stop
you
it.
can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Every morning, our analysis is your blueprint for the day. Bonds, stocks, across all asset classes.
Are you
Morning
serious?
Live on the Schwab Network. Weekdays at 9 a.m. Eastern.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at
Get ready again.
Tune in live or on demand.
This kind of day we're having today.
.com/coaching and start
I should have caught on to this earlier. But sell the rips and buy the dips. Because these things, these dips are just like 4 or 5 minutes long, and then boom. So prepare ye in the name of the Lord. Here I go again. I'd like to keep a higher low instead of a lower low or a double bottom. So get ready. I'm going to buy them right here. Right at 310. 320. Okay. Time for another scalp. And I didn't even get to go make my coffee yet. I had to check out that Venezuela crap. I could never stand Joe Biden. I still can't stand him. He's always been a hair-sniffing dick lick. Okay. We would appreciate it if you break out 320, the 5650s. Alex. And if you're up like 70, 80, 80 cents here, I can get out. Magnificent, get another what? What time was that called? Magnificent. I don't see a time on there. Oh, 12 o'clock? No, that's right now. When did you call that put? Right before the drop? Prove it. $11.58. Damn. Damn. Whoa. I'm sorry, but my clock says 11:58. You're wrong. You must be a New Yorker. So I'm gonna go out of my way today. I'm gonna break a few rules. You've never gave me one of them. I did it. I did it. Can we go ahead and break out, please, to the upside? Do you like that? Do you like that? Tell your girlfriend I want to give her a kiss. Do you remember that song? That's the way, I like it, That's the way I like it, Forgot who sung that song. That's the way, I like it. I know who it was. It was KC and the Sunshine Band. In case you all did not know, I used to be a heavy-duty disco dancer. I was laughed at in high school. You're going to the disco clubs? I say, heck yeah. You probably don't know too many people that's been to the disco clubs back in the 70s. I was.
Affirmative.
Them were some good times.
It's all fake news. It's phony stuff. It didn't happen.
It happened. We're now at 410. God darn it. There's a lot of undecisiveness in these candles today. We have a megaphone out of a snake. Feel like I just want to get what I can today because these suckers. No. Oh, God. Okay, 1, 2, 3. Hold. Nancy, get me some caffeine. Decaffeinated coffee. See, Nancy gives me all the inside information, and I do the stock trading for her. Then after I win, she supplies me with sex. Daniel, it's going to stick, baby. You watch it right here. 1, 2, 3, you can trade with me. Now you can get out now and make a business decision, or we break the resistance. I like to see these things go to $5 to $6. There you go. That's the way, I got my groove back. I lost it this morning. Do you see where resistance is? Say yes. 1, 2 bits, and a freebie. So you take the trend line to the body of that candle.
Count to 3 and trade with me, but count to 4 to make much more.
Exactly. Come on. Okay, we're at 3. You can make a business decision right here, and I'm going to make some. Because this is the way it's been for me today, and I'm getting out. There's not a thing you can do about it. Do you understand me? Well, Magnificent, where's my grades at? Huh? Where's my grades at? What'd you say earlier in the chat? I have a tendency of being bullish all the time. Is that what I remember? You want to take that back? I'll let you take it back. I don't hold it against you. Take it back.
I cannot accept that course of action.
He's not going to take it back.
Affirmative.
I was about ready to have you go out with my mother, but not now.
I cannot accept that course of action.
You're posting links. Sparks is posting links too fast. Now, how can we stop that? Let me see if I can put him up, give him a new role here. Okay, I'm going to make you the volunteer and a contributor. See if that helps any. Stop posting links so fast, Sparks. I'll put you in timeout real fast. It's too funny. You got two whammies in a row. I remember when Sparks first came in the room, I said, man, you can only do a couple of them a day. You remember that? Woo! I will never get over yesterday. There's 520, you son of a gun. Ugh. Magnificent. I guess you're about my age. Did you disco dance? You're a teenager? Oh. What I liked about the disco clubs is there was hardly any men, any guys, all girls. And they, back then. I got so many stories I could tell you. While everybody else was out going to kegs and parties, I was going to the disco clubs. Yeah, like 15 girls to every guy on average. Just an average night. Sometimes the ratios were a lot higher. And back then, they'd let 16-year-olds go into a bar. You just couldn't drink. Unaccompanied, what do you call it? Unaccompanied. I wouldn't have to have an adult with me. As long as I was 16. Okay, here we get ready to go again. Prepare ye in the name of the Lord. Nancy, you never did give me that coffee, damn it. I see a head and shoulders. Yes, I do. Yes, I do. I have a feeling next time the phone rings, church is going to call me up and say, Jim, we've accepted your application. We'd like you to come try out for our choir tonight at the Second Baptist Church. TSLL. Randy? Where is Randy today? Randy, I told him not to be mad. Yoko, are you Asian? Are you an illegal immigrant? Are you a legal immigrant? Oh, that's a good one, Jimmy. I'm an Indian, Daniel Boone. Are you Jew? Are you a Jewish Jew, American? We like Jews in this room. Spy breaking out. He's not Jewish. If we have any Jewish people in here, I want you to know that I really do love you. And I stood up for you through this whole thing. So I'll take 10% of all your profits. Exactly. That's what I always used to say. I think we're going higher here. Jim, where's the next resistance at? Do you really want to know? Brother Sal, Brother Sal. Do you really want to know? Brother Sal. So I'm going to pull up a chart. Oh God, that looks so pretty. Can't believe I called that wrong this morning. I say it goes a little bit higher. I'm saying we're going to hit today's high at open. Do you understand me? 562.81. $562.83. I heard there's some nice chicks in Cuba. Okay. Well, these things have nice volatility in them. We're at resistance. I think this is the fourth time, so if we don't break here, it's time for Pittsville. What do you think, Rob? Yoko? 1, 2, 3, 4. Oh. Always clean as Jim. May I help you?
Hello?
Yeah, what's up? This is Retail Traders.
Hey, good evening, Jessica here. I am so sorry to disturb you at this time. Purpose is to help people like yourself get a new subsidy opportunity available in your state. I just need to check your eligibility. Are you under the age of 65?
Yes, I am.
Perfect. So you are eligible for the free subsidy and essential benefits. Let me connect you to a specialist in your state to do...
She was supposed to say, well, you're not eligible. Putsville. I'll ask her if I want a car next time. Hello, I am an AI robot. If this is what life's like being a senior citizen, I don't want nothing to do with it. They used to have senior citizens discounts on all-inclusive resorts. I haven't seen that pop up lately. Well, if we could pull back to 5,600 here. Subway, If you were to give me a 1 to 10 on my singing, what would it be? I'm just curious. Would you give me an 8?
Count to 3.
I was going to say, if you were going to rate me on my singing between 1 and 10, what would it be?
Count to 3 and trade with me, but count to 4 to make much more.
Come on, I don't care. I'll be honest. Jim, do you have to single me out? Did you say 8? Oh, an 11. Okay, prepare ye in the name of the Lord. The 5570 puts. He's acting like he didn't hear me. I'm going to go make my coffee and I'll be right back. I'll leave you with Squawk Box. Hopefully they're not commercials, and they are.
They are maintaining a sell rating. They've lowered their delivery forecast to 358,000. That's down from their previous estimate of more than 400,000. That is well below consensus. Consensus forecast is 420,000. They say that reflects some adjustments to quarter-to-quarter data on deliveries and margins. JPMorgan Chase, they're lowering their price target on Tesla to 120 from 135. They're maintaining an underweight rating, essentially the equivalent of a sell rating. They are revising their delivery estimate to about 355,000, so close to what Guggenheim is seeing, down about 8% year over year, and quarter over quarter down 28%. Again, that is below what consensus estimates are for deliveries for Tesla. And look, we've been talking about this story with regard to what deliveries look like and demand looks like, especially overseas. We've gotten a lot of data on that recently from Europe or China, showing there's been this slide in delivery. So you can see where the analysts are becoming concerned and having to scale down their outlooks.
And I do think, rightfully so that we're seeing an outlook adjust, because I feel like enthusiasm, of course, was so unrelenting to the upside that it just has felt a bit now unrelenting to the downside. But as we know, these opportunities.
Jenny, I don't want you talking about Tesla.
And Tesla, the arguments have been made about the valuation, but I guess I push back a bit and say it's always been overvalued for as long as I've
shut your mouth.
So not really seeing that necessarily coming down, but at least historically looking a bit cheaper. But appreciate it as always, Diane, for the.
Did you have to throw that in there? You know I don't like you talking about Tesla. Look at that little smirk on her face. How dare you?
Like woman to woman here about the ways in which startups are trying to progress with so many of these women leaders. So give us your insights here.
Tell her to bite your ass.
Hi, Jenny, Alex. It's great to be here, especially on the day that the market is up, and with a little bit more positive sentiment. It's very great that
I call
you know,
puts
during
now,
Women's
baby.
History Month, when we celebrate that, we highlight the remarkable female leaders who are making waves in the finance, tech, and business world. And you know, one of my favorite
5570s.
in the public market is actually Fitchi Simo. She's the CEO of Instacart. And the reason that I like her so much is because, you know, under her leadership, Instacart went public in the most challenging IPO environment at the end of 2023. Even though a lot of, you know, company in the private market was very hesitate and they lay the blame a little bit, she just pushed forward. And I believe that, you know, it's pay off. 2024 Instacart stock rose more than 80% because the company gave the public market what it has been asking for, which is profitable growth and operational efficiency. And I think that in this world, in the finance world, the tech world, we need more female like her, you know, who are tackling all of the challenging, who are building the company and taking to the public market and turn it into a very thriving public company.
You know, Maggie, I think this is really important, and obviously it's a powerful message, and just like hearing some of those stats, it's surprising. But you know, this is a show targeting the younger demographic. You know, maybe prospective future entrepreneurs down the line, both men and women. As someone who's in the world of venture capital and speaking with founders and startups on a daily basis, I'd imagine. What are some of the pitfalls that you see, relatively new entrepreneurs falling into? What would your advice be to those prospective entrepreneurs?
Well, one of the things that, one of the statistics that is still very sad, even though the venture capital landscape is evolving, is, you know, we often saying that the female founded startup nowadays only receive less than, 2% of the total VC funding. It's actually hard to believe that if you think that women only account for only 2% of the idea, and that figure actually has not changed at all over the past decade. And we believe that, a lot of it is caused by, female founder have very limited access to the fund that's led by female GP. That's why when, at the helm, at the Fuel Venture Capital,
don't encourage
we
him.
try to make sure that, we're going out, interacting with female founders, making sure that they have access to us, access to the resource, to our mentorship, so that when they pitch, when they go to the fund, they know what to pitch and they know where to go.
So I do feel like this is unfortunately somewhat of a snowball effect where I do believe it is true that more and more women founders are more likely to hire women and so on and so forth. So how do you go about sort of advising and advocating for that change in a cycle? Because as we know, it's very hard to break a lot of these habits and sort of, I'd say, somewhat of regular notions that companies have established.
Yeah, so every time, we fix something, you have to fix from the top, right? Because everything leaked from the roof. So, the way that I feel we want to change that narrative is, one is we encourage more wealthy women to become limited partners so that they can fuel the female-led innovation. And at our VC fund, we want to make sure that there's always a woman at the table. So you have the female GP who can write check and lead routes, who can, listen to the other female founders and solving the problem. And then, when you're working with them, you're helping them understanding the problem they solving.
Yeah, and I think that that's a great point, and we're so thankful for you bringing this insight to us, as I do think this is a majorly under-discussed and underrepresented area of finance, and specifically within venture capital. So appreciate it, and appreciate you coming on and sharing those great thoughts here in honor of International Women's Day, the month of March, obviously celebrating women. So thank you so much, Maggie Vo, the managing partner and chief investment officer.
There we go.
Venture
Let's
Capital.
do it.
Now, coming up next, time to talk under 30 today. We are looking at American Eagle Outfitters, a name that has broken down pretty substantially, along with a lot of these
more droppage, please.
legacy retailers. We'll discuss what the street's expecting ahead of their
290 to 370, the 5570 puts. Head and shoulders, you see it, it's right there. Time to get out.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy?
That's very unprofessional,
Choose from over 40
James.
themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize
Nobody
to align with
belches
your
like
goals.
I do.
All at your fingertips. Schwab investing themes. 40
Okay, there it
customizable
is.
themes, up to 25 stocks in just a few clicks.
I'm out. Right here. 410. Give it to me.
Whether you're a bull or a bear, you'll want to
I'm
catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Where's my grade? Magnificent. I'm on a roll
Trading the
here.
trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Do call the puts. I did. I asked Rob. Oh, that's correct. Johnny made a winning trade. Very good.
Welcome back to Next Gen Investing. It is under 30 time today. We discuss American Eagle Outfitters, and joining us is George Tillis, senior markets correspondent for the Schwab Network.
Very good, Rob.
AEO, you know, I feel for AEO, nothing in particular, but just a strange market environment to be reporting earnings in. A lot more downside, it seems, lately, George.
You see why we got out there?
The numbers are strong.
Yeah,
Shut up,
obviously
Alex.
the market environment right now is very challenging.
So we were up here. We tried to count to 4, and it didn't want to make any much more. So I said, count to 4. 1, 2, 3, and it just couldn't touch that 4th time. So I asked Rob, I said, puts, baby? Then it pulls back to what? Left shoulder, right shoulder? Uh-huh. Inverse head and shoulders. Mine is average of 3 to 5, and 1 if it's over $5. As long as it's under $1,000. Because I like to keep my limits at 1,500. I've said that over and over. Think about going down and lifting a little bit of weight. I think it only take me like 5 minutes. When I say little, I mean little. Yes, I did. Yes, I did when I was in trouble. $3,200. And I've been up to 5. That is correct. I said I try to keep them under 15. 95% of them are. And if you do that, you can trade with $5,000 a day. 3 good trades. I see it. They're at 540 now. Oh well. That's $390 I left on the table. I'll be right back. I'm going to leave you with Alex, the Virgin. Or George.
Slightly to the upside. You can see sort of a recovery trade.
Now see if you can hold the
in
200
a stock like this. I'm not saying it's
at
going to happen.
55.96.10.
Further to the downside, contingent upon them missing earnings and actually guiding lower. So you have to keep that in mind. But I think competition has been a challenge. I think the Aerie brand, which competes with companies like Victoria's Secret, that's another area where there's competitive challenges. But like I said, the company's been consolidating their operations, trying to improve operating leverage from an e-commerce standpoint. So I think this will be an interesting one, especially in the tape where any positive news can move a stock because there's eagerness in buying, especially on any good news.
Yeah, George, I'm also looking 7 quarters in a row. It's down on the day after earnings, and it looks like 10 of the last 12. So kind of some dangerous little red streaks on the board right now. We'll see if it can snap that. George Tillis, appreciate it as always. And thanks as always to you, the viewer, for tuning in to Next Gen Investing. Coming up next is the watch list. We'll see you tomorrow.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now. Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning Movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network. afternoon. Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time. We're coming to you live from the New York Stock Exchange. So glad you are with us. We've had some back and forth action today after the CPI grant, more economic data throughout this week. We have a big show for you today. In today's show, we'll be joined by the CIO of Leasehold Group to cover the firm's major trend index, which turned negative just last week.
Oh my gosh.
For the market, you'll want to hear more about this. Then we'll review Southwest Airlines' recent policy. How the airline can set itself apart. We're seeing a lot of panel standing by.
No.
Review or preview, I should say.
I just left $900 on the table.
This afternoon's earnings report and what's next for the company when it comes to the evolving world.
I just left $900 on the table. Actually, yeah. Unbelievable. I'm gone 6 minutes and I left $900 on the table. I did 20 whatever. I don't have the muscle like I used to have. I can't believe that. There's a lot of dough on it. A lot. You've seen probably $1 million, maybe 2 million, maybe 3. I'd say it's been $500,000 a year. That I left on the table. I made $150,000 last year, so imagine at least 3 times that.
At one point. Are any of the traders there feeling like the lows are in? Have you heard any conversations like that? Or, I mean, surely they love the volatility because that they can work.
Yeah, they like the fact that the market seems to be rotating back into the large cap tech and out of things like staples and utilities, those safety trades that were actually doing well during the sell-off. So that seems to be a pretty positive catalyst for an expected comeback of some of these very beat up Magnificent Seven names. As you know, Tesla is up today. You've got a lot of the big names rebounding off some recent lows. Nvidia is having a good day. Those are the names that need to come back for these Magnificent Seven names to gain some of their momentum back. You know, they've hit them pretty hard. So this is a good rotation back into the leadership of this market that took us up to these levels.
Oh, yeah?
Yeah, how about when we talk about Vistra, that's number 1 on the S&P 500 today. It's up 8%. but year to date is down 10%, right? Or 3 months down 22%. So talk about volatility. Thank you so much, Kevin Hinks. Great to see you. Appreciate it. Let's take a look at the bigger picture. Joining me right now on set, Doug Ramsey is here, CIO of Leuthold Group. Thank you for being with us. I want to talk about the index, but first, just a big picture thought. How do you feel? I mean, as you look up and you see the red, green of today, but the trend has been lower lately. Your thoughts?
Well, it's the context, and I guess, in which this setback occurs. I mean, we had something comparable in percentage terms last summer, but the economy's on somewhat more tenuous footing than it was last summer in terms of employment growth. You know, as healthy as that jobs report last Friday, and it already seems like a long time ago, right? Just a few trading days. Non-farm payrolls now up only 1.3% year over year. We've never slid to a number that weak and seeing the economic expansion sustain itself. So we're at a level that's historically been sort of past the point of no return. And now on top of it, and
using that metric.
Using that metric.
Right.
There are other, certainly, there are a lot of employment numbers that always enable you to craft a story on either side of the ledger,
Yeah,
right?
but that's an interesting
It
point.
is.
I understand it.
Yeah, we've never dropped that low. I mean, another one that's got a perfect record in not so much forecasting recession is actually confirming one, and that's the number of unemployed people, which is contributing to the unemployment rate uptick. But the number of unemployed people now for months has been increasing at more than a 10% annual rate. We're not seeing it in unemployment claims yet, but that's a loss in purchasing power that more recently has shown up in the income growth numbers. So I'm concerned that to the extent that stock market wealth, the rise in it has helped sort of buttress the slowdown in income growth. Well, now that's turning the other way, and we've written about that for quite a while. This wealth effect as a prop to the economic expansion is now turning in the other direction, and our fear is that with the economy,
puts are really good today.
Normalizing is like the euphemism people like to use. Normalizing at a very low rate, to have this stock market wealth effect flip from very positive to negative could be the final straw in the back of the economic expansion.
You know, and when does it turn back? I know you have the Leuthold Group Major Trend Index, and that has turned negative last week on deterioration. You talked about technical, cyclical indicators. What are some of the key indicators in the Major Trend Index of Leuthold Group?
Sure. Well, if you were to take a picture of the S&P and market breadth and various leading groups as they existed at the market top that was just 3 weeks ago today, February 19th. You know, if that stands in as an important top, it will be a picture in future technical textbooks from the perspective that you had the S&P 500 making a high, but almost nothing else in terms of groups that have the tendency to peak out in advance. So the transportation index, the utilities index, the Russell 2000, the equal weighted S&P 500,
take a little break.
the average stock, and then they sort of call it the granddaddy of all technical
We're right back.
indicators, which
Just
is
a
the
small
daily
little nap.
Stock Exchange Advanced Decline Line. All that stuff peaked back in late November when we were all fat and happy from literally maybe from Thanksgiving dinner. That was sort of the broad market peak, and it's very characteristic. Although ideally you'd like to see this period of narrowing, or the technicians call it distribution, you'd like to see it maybe last more like 4 or 5 months instead of 2.5, which is what we saw into that high. And then just from sort of a market historian perspective, I mean, the fact that February 19th is the 5th anniversary of the COVID high, it's not insignificant. I mean, the market itself.
February 19th was what?
Of 2020 was the 5th anniversary of the pre-COVID market peak.
Yes.
So just, you know, the market.
That's ironic, right?
Yeah, markets have a perfect
I
memory.
didn't think about that. I remember that. Yeah.
And sort of like a wicked sense of irony, right?
Yeah.
So that fact in and of itself probably makes February 19th a little more likely than just a random chance.
Let's jump in. I mean, because there's so much here, and I don't want to have our viewers lose the focus here. So what does it tell you now? It's telling you negative indicators.
Yeah.
It's showing you negative signs.
Yeah.
We yesterday hit a low of 55.28
Yeah.
on the S&P. Is there any way to get an indication of how much lower we go, especially when some of these indicators turn negative in November?
Yeah, just
Is there any sort of indicator on that like that?
yeah, very difficult, I think, in this age of, first pretty activist monetary policy and now arguably pretty activist fiscal policy, right?
Right.
So that just our confidence in projecting downside, I mean, based on what we've seen, and it's not just, the actual major trend index flipping negative last week, it's what preceded it. In other words,
Right.
like the anticipatory things, the market narrowing, the slowdown in income and employment growth, the yield curve reinverting. People don't talk about that much, but that was a final confirmation. So in other words, our
And
clients
here we are.
have sort of been, warned about that, and then we got the trend confirmation.
And you're going back and actually looking at the dot-com bubble, though many would argue it wasn't exactly the same when you look at, PE ratios and things like that. So that being said, it sounds like you feel like we're in this for a longer period of time.
Yeah,
That it's not going to be a bounce back. It's not going to be, some sort of quick recovery back to new highs.
That's our initial take on this, that and we've had the major trend index break negative at, not necessarily in this cycle, but in past cycles where it was more just a short-term disruption. But it's just a lot of the bigger picture falling into place and then getting the final confirmation with the trend work breaking, so that now we would be, and certainly the market's oversold enough that I would not be surprised by a bear market, what I think would be a bear market rally of 5 to 7%.
Right.
We would be looking
So
to
you
take
would
down our
sell into
equity.
the rally.
Yeah, we'd
Okay.
be looking to reduce exposure.
So
on that.
bear market rallies, sell into the rallies, you're not buying the dips. We had a conversation here prepared to talk about shorting tech.
Yeah.
And you're seeing some of that. Is that something you would even advise to folks to keep shorting
Yeah,
tech?
we've done, and by the
Yes,
way,
advise us to do that.
we've got a short selling quantitative strategy that we've run for 35 years. Not too many of us short sellers left, right? But it's a small piece of what we manage. But the Luthold Grizzly strategy that we use in our tactical funds. So that's most of our equity hedge. But we do have a short position, and this is not something we do frequently. But the greatest downside risk, if this is for real, would be in the large tech stocks. So we do have a small hedge on short the QQQs.
Right, you increase the short position there. So LCR, that ETF,
Right.
is what kind of ETF if someone wants to look at this Luthold Core ETF?
It's a
What are they
tactical
getting?
asset allocation fund where we have our long equity strategy, which is more industry group based rather than focused on individual stocks. So thematic on the long side.
Right.
Uses our short selling strategy to accomplish reductions in net equity exposure. So in a way, a hedge fund like approach in terms of not just selling outright longs, but introducing an active equity hedge, and then, as I mentioned, having that short position on in QQQ
All right.
right now.
Good to see you, Doug Ramsey,
Good to see
CIO
you.
of Luthold Group. A great conversation. Thank you very much, and bringing
Thanks
us
so
all
much.
those indicators as well. Appreciate it. Coming up, Options Corner. Tom White is standing by. He will highlight unusual options activity on the day and how investors are looking to trade on the recent news of Micron, Baidu, American Airlines. We will be right back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. Time for Options Corner, where we analyze unusual options activity and trades that we're seeing throughout the day. Tom White is here, host of Fast Market here on Schwab Network. And you have a few names that you're watching, a mixed bag on how people are playing them. Very interesting about Micron, one of the names in tech that actually has a year-to-date up arrow. Some of your thoughts on what you're seeing here when it came to the trade?
Yeah, I think it's getting a little bit of prop up maybe from the gains that we're seeing in NVIDIA. The SMH is up nearly 3% today. So seeing a pushback into some of these big tech names. Now, you mentioned that Micron's actually up this year, up about 13%, up over 7% today. But the problem is, and you see right there in the chart, that it's down about nearly 40% from its all-time highs that we saw last June. So it's already been punished pretty significantly. In the memory side of the chip business, this is a cyclical type of segment. So you got to expect these type of moves in chop in these names. Now, NVIDIA has their GPU Tech Conference next week. They typically talk about the amount of memory needed as they build out their AI data centers, the chips that they have, how it ties in with NVIDIA. That might be a catalyst. They also report earnings next Thursday after the close. So that's going to be a catalyst for this stock. It did get a price target cut today out of Wolf Research. They cut it to 150 from 175. They keep their outperform rating on the shares, and they think that they're going to be more clarity in the second half of the year. But I think the big catalyst is earnings next Thursday, and I think somebody's setting up maybe for some disappointment. And we've seen a lot of disappointment, even though these tech names are beating earnings on EPS and revenue. If they guide anything below what the street expects, or maybe guide even higher but not what the street expects, these stocks have been getting punished. We saw a trader out in the April monthly cycle, so 36 days to expiration, about 5 weeks in this trade. He bought 2,000 of the 90 strike puts, paid an average debit of about $5.20. So that break even where this trader starts to make money, 84.80 over the next 36 days. That's about 11% below the current share price. It's about what the option market is pricing in for that move, but this trader's giving himself a little bit more duration. While he might be setting up for some disappointment on earnings, he's giving himself some duration to the downside in this bearish position that he took.
Understood. Okay, and you make a good point about how far off the highs it really is. Well said. And then a name with some real volatility this year would be Baidu, and you found a bullish trade.
Yeah, this stock's getting hit a little bit, and if you've seen the resurgence in a lot of the China-named stocks, and you've got all these hedge funds piling into China, saying that a lot of their stocks are undervalued. And that's propped up the FXI, the China ETF. It's up 18% so far this year. Now, Baidu's still up about 8% this year, even with the slide today. But it's underperformed a lot of the other names in this space, whether it's Alibaba, JD.com, PDD also. So, it's definitely lagged a little bit, even though it's up so far this year. And if you take a look at their Ernie bot, they're trying to roll that out more. This is the largest search engine in China. They rely a lot on advertising. They've seen a pullback in advertising spend over there as the economy's kind of waned here a little bit. But they are making inroads into AI, but they're putting more capital behind that push into AI. And we'll see what happens with that. But we did see some bullish activity, maybe somebody trying to take advantage of this pullback that we're seeing in the shares. This was out in the March 21st monthly cycle, so expires in just 9 days. A trader bought 3,000 of the 90 strike calls, basically at the money, paid an average debit of $360 on those, so that 93.60 break even over the next week and a half. That's only about 3% above the current share price. The trader didn't give himself a lot of duration, but at the same time, you don't need a massive move to the upside to get above that break even on this bullish trade.
Okay, and last but not least, what's going on with American Airlines? We've got a lot of airlines news this week. What's the latest here when you're looking at American, which is down 4% today?
They were having such a good time in the latter stages of 2024, Nicole. All the airlines were rallying to the upside. United, Delta were hitting all-time highs. American were hitting multi-year highs. And then you've seen that capitulation. And this might be on consumer sentiment numbers, consumer confidence data that's been waning a little bit. Maybe, the big boom that we saw in 2024, people traveling, experiences starting to fade here a little bit as concerns start to rise about consumer spending. So that's a problem. And then yesterday, the Delta Airlines news, where they cut EPS for the current quarter. American did the same. They're cutting based on the fact that maybe some of the domestic routes that were doing really well, they were seeing some pressure there. CPI data that came out today, airfares were down 4%. That tells you right there there's some demand issues on that side of the business, and that's why a lot of these airlines at that JP Morgan Industrial Conference started cutting the current quarter. Now, a lot of them didn't cut the full year guidance, so they expect a pickup in the latter stage of the year, but they cut the current quarter just based on the data that they had already. But I think somebody trying to kind of put their stick in the ground here and say, hey, this fall that we've seen in American down 23% so far this month. Maybe it turns around. Saw some bullish activity in here. In the April 17th, the 12 strike calls, traded about 35,000 of those, paid an average debit of 40 cents. This is a low-cost stock, so you don't have a lot of option premium there. So the break even for this trader where they start to profit is above 1240 over the next 36 days. That's about 12% above the current share price. It seems pretty big on a percentage basis, but on a dollar basis, American has some pretty major swings. Call volume about 4 times normal daily average volume, even on the pullback that we're seeing. So maybe somebody thinking that we're going to see a turnaround here in American Airlines over the next month.
Look, you just need a couple of good days or something on Wall Street, and that could happen.
Yeah.
It's interesting because you mentioned the month, how this month to date down 23%, 1 month down 33%. So maybe it does have a little bounce back room if you start to get a bit of good news. But, I don't love to hear that the domestic bookings are sort of waning a bit. Fewer was the word that they used. Fewer domestic bookings. I mean, it just shows that maybe people are not as jumping on board at the moment. So let's see.
Yeah.
Tom White, thank you very much. Good to see you. A great options corner today with Tom White every day. Coming up, Eddie Gabor is standing by. He'll take us through his investment strategies in the current economy and why he plans to sell on the strength. He'll explain. Watch this. We'll be right back.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. all crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Davis. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the Watch List. I'm Nicole Petalides. We are live on the floor of the New York Stock Exchange. We want to get our next guest in here. Eddie Gabor is here, owner of Key Advisors Wealth Management. Thank you for being here. We got our CPI print today. We get PPI tomorrow, and we have had some serious back and forth over the unchanged line activity of late, but the trend has been lower. How are you feeling about the market these days?
We're very concerned about the market. You know, we've always been a data-driven firm, and we came into the year extremely bullish for the short term. We were buying dips, and then look, the data changed, and when the data changed, we changed with it. And now we're doing the opposite. We are taking big rally days to take down some risk, because I think we have some major headwinds ahead of us. Mainly when you take a look at some of the things that DC is doing a good job of telling us what they're going to do. They're trying to get interest rates down because we have a massive amount of debt that's coming due this year. We have nearly $8 trillion of debt coming due in the next 9 months approximately, with a big tranche of it coming in the next few months. And when you look at our interest on our deficit, the numbers just came out. They're up 17% year over year. That is an unsustainable path. And so we have to make some tough decisions. And that means if we're going to take $1 trillion out of the budget, which is what they're trying to do with DOGE, and they're going to cool inflation by getting interest rates down, growth is going to come down. And so I think the trend over the next few months, unfortunately, is going to be bearish. And I want to have a lot of dry powder because I think there'll be some generational buying opportunities on the back end of this. I don't think there's a Fed put or a Trump put anywhere near the levels we're at right now.
What's interesting is when you talk about U.S. debt and our deficit, it's a big deal. It's something that people were very conscious of when they were voting. I mean, they really felt it was imperative to sort of attack that, and that is what they're trying to do. Whether you like how they're doing it or not, I don't know. But the big point is that, as you say, some of these, are calling. They have to pay up now, and they got to get this in order. What's interesting is how you're selling into strength right now, taking some profits, and you think that there's going to be this generational opportunity. When does that come? When are you going to buy a dip and say, oh, this is it, this is the bottom, this is my opportunity?
You know, obviously it's impossible to pick the exact time. Right now, based on how we're looking at things, I think we're going to probably be in the third quarter when that happens. I think there's too many people right now that are still complacent and don't think they're actually going to follow through with the policies that they're telling us about. And when you look right now, the S&P coming in the day was really only down 5%, yet you've got some tech companies that are down 30%, 50% from their highs. So think about it, the S&P just has another 10% correction to the downside, which I think is probably a best case scenario. What will some of those names do in that environment? So I hope I'm wrong this time, but right now the data and the information that we are getting directly from DC is telling us. They said be ready for a detox period. And that means the tough decisions that people voted for, which is getting debt down and taking government money out of the system, has the opposite effect of when you inject a lot of unnecessary capital. So we enjoyed it as it blown markets up and asset prices up. So we have to realize if you do the opposite's going to happen to asset prices, and that's why they're going to come down.
Right. So you think that the S&P will head into bear market territory? I mean, for example, 1 month we're down, let's say 3 months we're down 8%. You see another 10% to the downside, right? For the S&P.
I do.
And that would be in the second quarter, because you said April, May, June, and then it's not to the third quarter that you see some relief.
That's correct. And the only thing that would change that is if the Fed makes a massive change in regards to trying to get inflation to 2%, and they start doing some type of quantitative easing, which I don't think they're going to do, or if the Trump administration changes their stance on Doge and goes less aggressive. Right now, Doge is targeting $500 billion to $1 trillion of cuts. And to me, it doesn't look like either one of those are going to stop. And look, this is probably one of the best things that could happen for us long term. But in this little air pocket here, investors should protect themselves. They've had a great run. It's okay to have a bear market for a few months, just as long as you're not in the way of it.
Understood. So how do you position a portfolio? Are there opportunities? Are you shorting anything? How does somebody make money? Is there any stocks you're recommending right now?
Right now, we're actually, the only area that we would be adding to would be our gold position and some fixed income positions. We have increased our money market holdings quite a bit. Sometimes it's okay to just do nothing. And I think right now, depending upon how you're positioned, it's okay. So we do not short the market. That's something we do not do for our clients, because that's something where you could actually be right and still lose money. So that's a game that we don't play with our client assets. So right now we're just in protection mode. We have about 30 to 60% on defensive side for our clients based on their risk tolerance. And we're going to be patient and wait for opportunities.
I want to hear about some of the fixed income that you find interesting. So I do want to talk about GLD more in a second. But when you talk about fixed income, you know, obviously short-term treasuries or notes were doing very well. As yields come down, maybe those will be less attractive. What do you think will work in fixed income?
So fixed income right now, if you think growth is going to continue to slow, you can own some government ETFs that are going to pay you a yield. And if the interest rates go down, the asset price will actually go up on that underlying asset. So that's a way to buffer. We've got some high yield debt that has actually done pretty well from a dividend perspective. But frankly, the spreads are starting to widen. And we're probably going to cut bait on those as well, too. When you go into a growth scare like we're going into right now, the fixed income markets on the high yield side can have a lot of volatility as well, too. And that is something that I think some investors don't realize, is that you can lose money on fixed income also. So you want to be a little bit safer, more on the shorter end on the government side, in my opinion, right now. And that's going to be the safest way to play it. And you can probably get some appreciation on that underlying asset. And then use that as ammunition to buy some wonderful names after they've had a big drop.
Yeah, I'm curious to know what those are. But I do want to get to GLD for our viewers. They always like some actionable advice. Would you step in and buy some even today on GLD? I mean, we know gold has run up in the first place.
Gold has been one of the best places to be this year. And if the growth scare gets worse over the coming months, I think you're going to see gold continue to do well. So if you already have a position in gold, maybe wait on dips. If you don't have a position in gold and you want some defense, you can dip your toes in the water now and dollar cost average on down days, because that, in my opinion, is one of the ultimate safety plays. So if things get worse, I think you're going to see a bid for gold. And look, we don't like playing defense. It's boring, but sometimes boring is good when you're in a down market.
Yeah, understood. And when it is time, you said it's maybe the third quarter, that you'll start buying a lot, and you said it could be a generational opportunity. What do you think is going up first? What are you going to be buying?
So what'll go up first are the areas that are going to get hit the hardest. And right now, it's no doubt the semiconductors have been hit really hard. And some of our favorite names, you know, like we'll use NVIDIA, for example. You know, I love that company. I think they have a great fundamental story. But that just goes to show you, it doesn't matter how good your company is. When you have a down market or a bear market, it's going to take the good companies with it. I think they were coming in today down 30% off of their highs. We did reduce our exposure there. We'll be looking to add that back in. You look at names like Palantir, we'll be looking to add names there. And then, you know, on the other side of the spectrum as well, too, is financials have really struggled. We have cut bait on financials as well. We cut the rest of our financial exposure today, and we'll look to be buying those. I think it's going to be an area where it's going to be a broad-based sell-off, because everyone's going to be so worried that we're going to have a recession. And I don't think we're going into a recession. I think it's going to be a big drop in the market in a non-recessionary environment, which is the best case scenario in that type of situation.
Okay, and that's worth noting because I was going to ask you that. So a big drop in the market in a non-recessionary scenario. Thank you so much, Eddie Gabor, owner of Key Advisors Wealth Management. Thanks, Eddie. Good to see you always. Thanks. Still ahead, we'll focus on Southwest Airlines' recent major policy changes. What do you need to know about this name? We'll be right back.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Nicole Petalides. We welcome in Ben Matsuba, Senior Aviation Editor at The Point Sky. Ben, thank you for being here. We're watching Southwest, which is down about 0.75% today, just over $30. A lot of changes, policy shakeups. Your bags no longer fly for free. Is this what needs to happen for this kind of company?
I think that's what we're all waiting to see. I think the conventional wisdom had been that the two bags flying free was such a differentiator that Southwest would probably stick with it. Obviously, they leave some revenue on the table, but they have outsized loyalty compared to a lot of their peers. And inside the industry anyway, we kind of thought that by being different, Southwest could kind of make up for that lost revenue and then some by being the outlier. Now that that's going away, did they have to do it? I think with Elliott and their role there, Southwest literally had to do it, whether they wanted to or not. And now we're going to find out if that is a good idea, either short term, and I think long term, it's probably a little more questionable. It does make Southwest like everyone else, which then begs the question, if the fare is the same and the schedule is the same on American or Delta or United, will you end up picking them over Southwest if all other things are equal, where they previously had not been?
And we know Elliott Management, activist investors, certainly putting pressure on the company probably to get more revenues anyway, anyhow, and that would include charging for bags. It was interesting because the Wall Street Journal today had dearly beloved travelers we gather today to mourn Southwest. And it was just sort of a piece being somewhat nostalgic for the old Southwest. But the problem is the discounted airlines, and we can look at, you know, Save and Frontier, and they've had a hard time. Something has to change, right?
They have. Well, yes, for sure that's true. And I think the thing that was the biggest disruptor here was the pandemic. I think that's just changed so many patterns that seem to be sticking after the pandemic is over, where people do value, leisure travelers do value more space and a little more luxury when they travel, whether that's 3 extra inches of legroom or an actual first class seat. And so that's kind of turned the old paradigm for what works in the industry on its head, whereas the discounters had been eating the big boys lunch for 2 decades, it all kind of flipped on its head after the pandemic, and that's really hurt the real ultra low cost carriers. Southwest has always kind of occupied that space in the middle. They don't have as much premium to sell in terms of seats and obviously no first class. They are adding extra leg room, so that will give them something they can upsell against. So there are some revenue opportunities there, and I think there are some other things that the airline did have to change. You know, their open seating policy, you can love it or hate it, but I think even the people who love it probably acknowledge in 2025 with the way things work, assigned seats make a lot of sense whether you like it or not. The bag thing, that I think this will be a marketing 101 class 10 years from now about the overall, because the Wall Street Journal's obituary piece was one of several to take that tone. So I think, you know, 10 years from now, there'll be a marketing 101 class somewhere where they talk about how we all fretted and thought this was the end of the world for Southwest, but it turned out fine. Or it will be it was penny wise and pound foolish. They generated a bunch of revenue, but they created a brand that was perhaps the most iconic, most differentiated brand that the U.S. industry, if not has ever seen, has certainly seen this century. And we'll see what the consequences are of that. Those are the 2 ways it could go, I think. And unfortunately for those following it, there probably won't be a real way to know until it plays out. But you certainly have people worrying that this could be the end of Southwest as we know it. And if they lose that unique value proposition, do they just become another airline that American, Delta, or United can outgun with a bigger network?
I think a lot of folks, let me ask you this. I think a lot of folks may just say, Southwest has the time I want. I'm taking Southwest. Is that possible?
And we know that is true. I think, right? You know,
not everybody's brand loyal, and I'll tell you, I mean, as some color of when I've flown, and I've flown a zillion and one times, and I always get like an extra space seat because I'm often traveling with my mom, and somehow, no matter how expensive those tickets are, we always seem to have to pay $30 or $50 or $60 when we get to the airport for the bag anyway. I'm not even sure why. You know, so I think travelers are sort of still scratching their heads when they book the whole thing anyway. So what's the difference?
Yeah, so I think with Southwest, everyone knows that bags fly free, and I think there's a certain segment of the market that really values that, and they have exercised loyalty in ways that most other airlines haven't seen. So I think the worry is that that large loyalty base gets a little less sticky or shrinks, and I think there will be some of that. But the other point is, the counterpoint is, we have seen this time and time again. It is one of the truest things that you can observe about the airline industry. Even if you have had a bad experience with an airline and say, I'm never flying them again, the first time that you go to book a trip and they've got the best schedule and the best fare, you're going to say, like, I'm going to forget about that time that I was delayed for 7 hours somewhere, and I'm going to book it because it's $5 cheaper than the other guys, and it's exactly when I want to go. And that's certainly going to be true for Southwest. Even people who are going to choke down the bag fees and remember that they didn't have to used to pay them. If you want a 9 a.m. flight to wherever and it's $5 cheaper than the other guys, you're going to take it. And that's just true. And we've seen that time and time again. Right. So there is a lot of fretting about the stickiness, but yes, that is true.
Yeah. And look, it was Southwest that had all those cancellations over that one holiday period. It wasn't this past one, it was the year before, right? I mean, that was a debacle in itself, and it was Southwest. I mean, this is when you say, do people remember or not remember? I wouldn't have even remembered that unless I were speaking with you about Southwest. I mean, and and I'll tell you today, if it were the one that was available at the best time, I probably would still pick it if it were competitive with prices. That being said, I'll tell you, the American Airlines story about domestic domestic travel and that sort of waning or less domestic travel being seen, that could hurt Southwest, because you remember after the pandemic, everybody was picking, the stock pickers were picking Southwest because it was a domestic leader, you know, more so, like you think of Delta and all those guys, those are more international. I mean, if people aren't flying domestic, that's terrible for Southwest. Do you think that could happen?
Well, I mean, I think it depends what we see in this trend. They as you said, the airlines have noted the dampening of domestic demand. If international stays strong, that is clearly an advantage for the big three that can drive a lot of revenue from overseas travel. If this becomes a broader recession or other regions of the world go into recession as well, and it dampens discretionary spending across the board, then obviously you've got a big problem for everyone. You know, if you look back, if you remember back in 2007, the airlines were something of a canary in the coal mine ahead of what turned out to be the Great Recession. Of course, the airlines then were reacting to like a huge run-up in oil prices that we look back now, it was easy to kind of connect all the dots, but the airlines were the first ones to really kind of go through that back then. So, you know, those of us who are prone to PTSD are saying, oh, this feels a little bit like 2007. So now I hope I'm wrong, and I hope that's just PTSD on that point, but it will be interesting to see how this plays out. And I think, like everyone, I'm hoping that the demand forecast the airlines have talked about really does stick to the current month and spring and not extend beyond that.
So I want to give people a little water cooler or something, a tidbit from this conversation, you know, because we gave them a lot of maybe this, maybe that. You know, a takeaway, what would clearly be if they, you know, they do a lot of surveys. In the customer satisfaction survey, I mean, who are the number 1 and 2 spots? For the on-time surveys, who are the number 1 and 2 spots? Or who lost the most luggage? Do you have any of those kinds of little fun facts?
Well, we can tell you that Delta Airlines won our Best Airline of the Year last year, the TPG Award for the Best Airline. And our new one will be coming out in May, so stay tuned for that. And the Best Loyalty Program was American. So those are the two that our readers that our team here has liked. But with everything, it really depends on where you are. If you're in Charlotte, it's hard to imagine that American is not your airline. If you're in Atlanta, if you're in Charlotte, it's hard to imagine American's not your airline. If you're in Atlanta, it's probably Delta just because of their reach. But yeah, the big three really have a lot to talk about. We liked American and Delta in our big 2 awards from 2024. Looking ahead, United's doing a lot of really good things. So we don't have anything to put them number 1 at yet, but I do see them doing big things, and their international strategy is super interesting. Mongolia, Greenland, they've done some really cool, interesting things.
And I saw a new airline that I'd never heard of. I have to wrap it up then. From Long Island, from MacArthur Airport to North Carolina, or from MacArthur Airport to Florida, Avello, I think it was called. So
you got Avello, and that was founded by a former United guy. And there are 2 new budget airlines. They're duking it out right now. Avello and Breeze. If they're in your market, you know, you'll get a good deal on them. And Breeze is the former JetBlue founder, and yeah, they're good, great options for customers to have.
Oh, see? Okay. Long Island, folks. New York City. You can go get your Avello flight to Florida. Ben Mutzbaugh, thank you so much. Good to see you. Senior Aviation Editor at Point Sky. Thanks. Still ahead, our panel is ready to talk all about the Adobe earnings that are due out after the bell. We'll be right back.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started,
Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me. And my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren planning for their college educations. Someday it'll be their turn.
Welcome back to the Watch List. I'm Nicole Petalides. I'm glad you're here. We want to preview Adobe. The earnings are due out after the bell. Right now it is on the move, and Derek Yan is with us, Senior Investment Strategist at Crane Shares, and Jamie Myers, Senior Analyst at Laffer Tangler Investments. Thank you both for being with us. So we're seeing an up arrow here on Adobe. Some of these tech names have bounced back after the CPI print. Jamie, I'll start with you. Your thoughts on what we could see?
Yeah, hey Nicole, thank you for having me. So we owned Adobe in a strategy we call our 12 best ideas, but we sold it last quarter out of the portfolio, but we still owned it in our growth strategy. Really what did it for us was last quarter management was very evasive on the question. The company has been slow to monetize things surrounding AI, and we're concerned about increasing competition from the low end. So, you know, while we still own it, we own it at a much smaller weight. We're going to be looking on the call for certain things related to AI adoption. And, you know, it just may take some time for this company to hit their metrics as the analysts would like them to.
Yeah, I was going to ask you about Firefly, too, and I saw Estee Lauder will use Adobe Firefly for digital marketing campaigns. But let's get a big picture. Derek, your thoughts?
Thank you for having me. I mean, like, market has been really in a sell mode over the past few weeks. But we see like fundamentals for like many AI related companies such as Adobe are still very solid. Like, so Adobe is holding in our Crane Shares AI and technology ETF, ticker AGIX. We see there's long-term value for AI to really lower the entry barrier for new users to use Adobe, and improving the retention rate a lot for Adobe. But most importantly, we see 2025 could be the year for Adobe to start accelerating their monetization in the AI offering, just like many other.
We got 8 more minutes.
And application companies.
Power hour,
so that's
7.
The biggest catalyst, I think, for the AI application companies so far.
So you think it's undervalued here at $439 then today?
Yeah, I think a lot of the companies really being like sell and in the correction mode, their valuation is really, really low compared to their long-term growth perspective. So that's why, like, for Adobe and in many other AI application adoption companies, they are capturing this wave of value migrating from the AI hardware to infrastructure, now finally to adoption and application. So we think the monetization could start to accelerate, and there's many other opportunity to cross-sell within the enterprise sectors. And the upcoming Adobe Summit conference could be a catalyst for them to showcase that, to really improve their like user engagement and also many opportunity in AI monetization.
Yeah, understood, Derek. Jamie, and you also were very focused on AI monetization. Right now, you're not expecting too much on guidance either. Is that right?
We're not, but you know, we think Derek made some very good points. All eyes are going to be on this summit conference next week, and during that, we expect management will revisit the long-term targets that they laid out about this time last year, actually. So we see that happening. But with respect to the earnings call this evening, sentiment remains tethered to AI monetization. As Derek pointed out, you know, tech has been flushed out over the past few days, and Adobe now despite a little bit of slowing growth, trades at a much more sanguine multiple of around 21 versus 30 over the last 10, 15 years. And the enterprise AI adoption is just beginning. So we have really yet to see that play out. So we still think Adobe's in a good position to take advantage of that. They have a large, diversified product set, steady seat growth, and more importantly, brand awareness. The big lever that Adobe has to pull is pricing. They've been relatively stagnant on pricing for the past dozen years, and that's something we think could come to fruition as their customers gain value from these products.
So I know you're focusing on the Summit Conference next week, but you did note that it was in your 12 best ideas portfolio, but you pulled this one out. You still hold it. Jamie, but are there other names that seem to be in the AI group definitely the better leader and better buy today for investors?
Yeah, so I mean, we continue to own the typical names that you hear of, the Mag 7, the Microsofts, the Amazons of the world. Amazon is in our best ideas portfolio. In selling Adobe, we did buy Spotify, which has been doing extremely well. We continue to grow rapidly as
not a bad day.
Products to their groups. So I mean,
not a bad day at all today. I thought it was going to be a horrible day at first. I really thought I had this trade here. But no, it had to tank on me. Jim says, SPX off the 200. I don't have any moving averages on this one here. Oh, this is a SPY, I bet. VWAP. So I'm going to put these moving averages on here. This was a VWAP chart and I duplicated it. So I've got the 200 EMA and the 200 SMA. And then I've got the 9 EMA. That's got to be in blue. So I changed the width to a 2. I got the blue, and this is the 9 EMA, so I okay that. Then I go up here to this one. I change this to the 63. That's red. Oh, I gotta go back to the yellow. Gotta go back to the EMA. I okay that. I go back to the EMA, and I want to make this a line like that right there. So I've got the 63 with the 9, and we've got to have the 21. '21's white. So I'll change that to white. Put 2 on there. And change that to 21 on the length. I hit OK. Now I'm going to double check, make sure I got everything on here. I need the 50 SMA on here. So I type in simple. SIMPLE. And simple moving average comes up. Comes right over here. I'm going to change that to a 50. I change the width to 2, and then I put green. Then I hit OK. Now I want to double check, make sure I got all my moving averages. I got the EMA and the SMA. I got the 9. I got it up here twice. So what am I missing? 21. I thought I did that one. So I need to change that to 21. There we go. The 9 to 21 to 63 and the 200 with the SMAs, or the 50 and the 200. I hit apply. Now they've been applied. And hit OK. And there we go. All my moving averages are on there. Just came back just now and hit the 200. SMA. Well, I took a pretty good nap, I guess. How long was I gone? Anybody know? I didn't look at the clock. It hadn't been a good hour. Randy's here. We missed you today, man. How long? Do you know how long I was gone? Somebody had to pay attention. It's been another good day, Randy. Not at first. I was yelling for you and needed your help. Been working like a dog. Let's see if they have something in here. Working like a dog. Oh, I want to see a picture of it when you're done. Oh, I need one. When I move up on my property, I'm about ready to build me a small little bitty bunker. Just something to put a cot in and I might make it out of cedar. Man, I was back there snoring. I could tell. Your TSLL flew. Okay, we're coming back to the 200 again. So it's do or die. Do you understand me, Rob? Say yes.
Affirmative.
Do or die.
Affirmative.
Yep. Jimmy's getting ready. The crowd's a little nervous right now.
Count to 3 and trade with me, but count to 4 to make much more.
Exactly. And I say we could drop. I'm going to predict a drop. It wouldn't be much, though. The 5570s at 125. What time is it? 2:09. Maybe shouldn't go for them. Yeah. I'm changing my mind. $55.70. The volume's just kind of set a standstill. Says it's ready for a breakout. Actually, don't know what direction we're going to go. I feel like we're a little bit too much here. Go for it, Jim. Get the courage to do it. Don't follow me in this trade, please. SPX. The 5570s. Puts at 105. Oh! 130. Yeah, I couldn't give anybody any advice on building. Because when I build my little bitty cabin, it's going to be like, God, I know I'll have to do it over again. Come on, Jimmy. Drop. If I hit $100, $1, I'll get out. That's stop loss. There's 130. I can take 125. Ooh. I don't like how that happened. I'm watching the action here. I don't think it wants to price action. Let's go ahead and drop the price. I want 160. So if I can get out now, I'd do it. We're at the 200. There's 130. Oh, there we go. Okay. Time to take profit. They're trying to save it. Drop. Yeah, this ain't being very nice. Oh! 145, 150, I'm out. Bingo. Uh-huh. $150 and $155. Did anybody trade to put? What'd you think about that, Rob? How'd your mentor do, Rob? Don't act like you're not listening. Well, inflation numbers, Trump said he liked them. Randy, did you like that trade? La 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 la. La 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 la. I think it was beautiful. Just simply marvelous. Not until you say good job, Jim. I'll watch Rob. There you go, I'll watch. Which one did you get? The 5630s. And we got to break the 200. Ooh. Uh-oh. That one just kind of jumped right over it. 3 white soldiers run into the 63. Ooh, looky. I think this Kendall here is going to tell us yes or no. Boeing did move up today for double top. Okay, get ready, Rob. 5620s. I don't want to push my luck. I really shouldn't. I'm about done anyway. I think it's going to be a good day tomorrow. Get ready. Right about now. Right about here. 5620s at 320. Okay. Ooh. Might not work. This one might not work. No, 5620s at 320, yeah.
It's my money and I need it now. It's my money and I need it now.
It's my money and I need it now.
It's my money and I need it now. It's my money and I need it now.
It's your money. Use it when you need it.
It's my money and I need it now. I got 3 contracts at 320. We dipped lower than that. My ding-a-ling just went off. What was it telling me? It's telling me I need my money and I need it now. There's 390. There it is. By God. I did it again. I did it again. I'm out at 370. Nope, out at 380. Ha ha ha. Out at 380 and $4. 3.80 and $4. See what happens when you watch a professional? Breaking news, defense ministers say between 5 countries that some of Europe's largest armies are taking place. Oh, God. I tell you what, these people want a world war. I guess I don't know how crooked Ukraine is. Always clean.
Hey, I gotta talk to you about stuff because we're talking about organization. And I've got two twin beds and a cot that I have to deal with, and a queen size bed maybe. And this couch is gross. So I'm gonna get rid of it.
Yeah.
Yeah, and so I'm gonna buy like a couch to put in here before Rasmus' mom comes.
Okay.
And so you probably might come up and look around and help us. I don't know.
What are you doing again?
Okay. I have to get. There's two beds in the spare room that I'm putting Mom in.
Yeah.
Putting Mom back where the kids are.
Yep.
Because she needs a window.
Yes.
Then I got those. She's got her own bed that's gonna go in there.
Yep.
With all her shit, I gotta take all that stuff out of there.
Yeah.
And so, she's got a bunch of shit that she needs to go in there. And, yeah, all that.
Are you still going to have kids after that?
I don't see how I can when the rooms are taken up, because in the wintertime, I don't have any place to go besides the couch.
Yeah.
I mean, I can in that back room.
Yep.
Because it's got a door on it, but I really probably should put a different door on there that one has a window.
The one, are you going to move in that one?
I don't know. That's what I'm talking to you about, because I had to figure this shit out. And then I got all the food. I'm dwindling down the food, even though it's probably a stupid idea right now.
Yeah.
I missed my goddamn interview with Casey's.
Uh-oh. Well, don't do that.
And I did, and I didn't call them. So what do I do?
I mean,
I had vertigo. Everything was spinning. I couldn't walk. I was falling down. If I move wrong, I want to fall down. I couldn't drive.
Oh, really?
But I didn't want to call her and tell her that. Yeah. I didn't want to call her and tell her that because that's crazy. And then, I don't really have an excuse unless I was at the hospital with Mom.
Yeah.
That's what I'm going to tell her. But I've got another interview with the state of Missouri I'd rather do on the 24th because that's $50,000.
Yeah.
Yeah, so, that was in the back of my head, too. And plus, I got another one that's going to pay a lot of money for over in El Dorado, too.
Wow. Well, we'll talk about it this weekend.
Well, yeah, and so, Randy said he will build an extra building, but we got to come up with the supplies.
Yeah.
Like he will build you a room out here.
Well, yeah.
We got to come out with the supplies, and I wanted to talk to you about, because I want to, Randy said it'd be better if we just put the whole roof across there, because, we need all that space out there.
Yep.
Instead of just an extra room, we need more space.
Yep.
And so we would have to put a roof all the way across that and just build in where you're going to be.
Yeah.
And it could be like a patio or something until we start building on it more.
Well, I was thinking of a small little cabin too over there on my side.
Okay. Well, I'm in limbo. I gotta figure out something.
Yeah.
Because if you move over here, it's not a problem. We can put you. Randy can get you some kind of shelter out there. It's not going to cost that much for insulation either.
No.
And the board, if you do it cheap like we tell you to,
Yep.
it'll be done, because most of that is labor.
Yep.
And I've got a lot of wood too around here that we could use.
Okie dokie, well, I'll call you later.
Well, okay, but you see my dilemma?
Yeah, I can see your dilemma.
And so I've got to deal with that because that's got to rock and roll pretty soon. And my billing, I'm traumatized and organized, right?
Yep.
It's traumatizing me out there, and I need to figure out something.
Let's see, I got a phone call.
Okay, bye.
I don't think it's important, but I'll have to call back. Okay. Well, how are you later?
Okay, bye.
Bye. Good morning. May I help you? Damn. What'd they go to? I didn't even see where they went. They probably went up a few. But I wasn't in them. It's going down. Well, the puts didn't go down much on that. The ones that I had. They just don't. I just don't do well with. Well, I did good there, but later in the day when I tried to play puts, they just don't do well for me. Unless you're real close to the money. Well, Rob, this is your reversal here. And there's still, options are still expensive. Yeah. I'm definitely a bull. Every time I post a chart on StockTwits, I always say bullish. They say, well, it dipped. I said, yeah, I'm waiting for the right opportunity to buy it. Well, I still made money on it, though, Magnificent. Where's my grade? I played a put.
Nothing for you.
So what's the event for PLTR tomorrow? While shares are bouncing back, Pure kicks off mobile battle station deliveries to U.S. Army. Ooh. PLTR jumps on new deals, spark optimism. See, it don't make sense. Tariffs shouldn't hurt PLTR. New deal with Walgreens and Heineken. Oh, well, that. Rise of AIPC on event.
Gold now are being bought to counteract some of the price action we're seeing in particularly the equity markets.
Okay. With silver too on the move, as you mentioned, probably worth a look because you generally kind of can get a little higher beta, a little more action on the swing. And I suppose with all this narrative about the rest of the world suddenly in an economic awakening, silver, copper, those types of things might work.
Yeah, I mean, right now, silver breaking out above the February highs is significant, I think. And, you know, certainly from relative strength, gold's still showing more relative strength. But silver now showing the ability to get above the recent highs and maintain the upward price momentum. And so I think that that's something that, you know, could continue. And as you pointed out, you know, copper now, as demand appears to be picking up. Of course, there's other dynamics there with copper, with the U.S. importing a fair amount more now, and also possible tariff situation there. But it does appear that China is looking for copper as well, as they're indicating that supply is stretched right now from a global perspective. And so those things, I think, ultimately lead to, you know, potentially higher prices for copper, even though it's trading at a 10-month high here today. And I guess the other thing I do want to point out, however, in our previous discussion is the dollar under pressure, again, would be another factor contributing to, I think, support into some of these metal prices.
Okay. So both looking pretty solid. Both charts look pretty compelling. Copper, too, kind of the China trade, another way to get exposure there. China's been kind of coiled up, but copper's getting some decent momentum. It seems like maybe all these commodities filling in the role of nat gas, which finally broke the last couple days.
It finally did after spiking up to 490 intraday 2 days ago, Oliver. It's under some pressure. I think one of the factors when you look at natural gas is certainly, the fact that Europe imports a ton still from Russia, and they're looking for other avenues, and that's why U.S. continues to realize demand. But any indication that there might be any type of ceasefire or some type of negotiated agreement, at least maybe short term, with Russia. Is, I think, a factor that's contributing to some of the selling pressure.
12 more minutes left.
If, in theory, Europe continues to import Russian natural gas, and it's so dependent
I'm not going to trade any.
Some stabilization over the short term. I think that's one of the factors why we're seeing the selling pressure. And also the fact that it just had that big reversal after 2 days ago. That was quite a reversal, and that's created this downward draft here for a second day. And, we're kind of falling back into the top end of the recent range, so we're not necessarily giving up a ton at this point. But at the same time, I think those are some of the factors contributing to some hesitation here.
Yeah, all right. I think that's fair. Like the analysis, and we will see if it breaks out further because it seems like it's got good momentum.
It has momentum.
Takes a little break. It seems like there's some good fundamentals, narrative behind it still with all the power demand, and AIs, and all that stuff. It looks like natural gas is. But then I guess you've also kind of got the turning of the season too, which might get a little warm a little quicker. Which, okay.
Yeah, sometimes that impact. Demand. There's no question that the weather patterns influence the prices periodically. On a day-over-day basis, sometimes not necessarily a long-term trend. But as you pointed out, coming out of the extraction to the injection period, and that is something that also is priced into the market. But I think as we continue to see the idea that natural gas is going to become a very strong demand for producing electricity even moving forward, that would keep a bit underneath as well.
Great stuff. Good balance for our discussion as always. Dan, talking some commodities. Appreciate that very much.
All right, Al, you got it.
Managing partner KKM Financial coming back. Let's discuss that international trade some more.
That'd been a good put.
A little bit choppier as equities in the U.S. find some degree of strength. But it's
Shouldn't probably went that direction because I don't feel like running it up.
Hold on to gains. International stocks in the EFI up today 0.75%. And as of now, that is a better move than the S&P 500.
Hopefully these prices will simmer down some on the calls.
Schwab Bank Investor Checking, the checking account built for investors.
The checking account built for investors. Schwab.
Nvidia outperforming the European stocks because S&P excluding Nvidia were about the same performance last year. And so once that we had that crack in the AI story, that was really when the door opened to say, okay, what else is out there?
It went to
And
5
we've
cents to
been,
40 right there.
ignoring
The
international for a
60-20s,
long time.
56-20s.
And then you've got these changes in policies that we're seeing in Europe, where these America First
Right back
policies
down to
here
10.
are forcing them to take a look at what they're doing to boost growth. And in Germany,
You
it's
have to be
really
fast.
key here, and they're really
Hopefully they'll
just,
take your order and sell
looking
it.
at a bazooka fiscal stimulus on infrastructure and defense spending, and that is really a big change. And if they approve it, it could break them out of stagnation and really define the next decade for the country. So it's actually potentially a growth story now.
Okay, so that's kind of where it gets interesting, because if it's real growth and not just kind of one-time policy recalibrations, then that could be more sustainable. That seems longer term.
Yeah, that's right. The infrastructure plan alone is 11.5% of GDP. Now, that's not going to be all in 1 year. It's going to be maybe over 10 years. So that's something that can continue to propel growth. And, it's not just defense names that are outperforming, because we're also, been talking about defense spending. European banks are outperforming U.S. banks by 20 percentage points this year. And so it's growth across the Eurozone that could potentially get a boost. And we're seeing earnings expectations being revised higher and economic data coming in ahead of expectations. And again, that's before any new fiscal stimulus. And Eurozone stocks are trading at just 14 times next 12 months earnings. So they're still attractively valued, and investors have ignored them for a long time. They're likely underweight.
Okay. Do you think generally these are the type of investors, this kind of comes back to the question about the kind of, I think I'm referring kind of simply to my kind of the tiers of investors, but like the big kind of slower moving ones like a pension fund. Do you think those are the types of investors that are doing this, that are not going to be as active, that are just going to park money here? And how do we monitor that stuff? Because if it's just like a bunch of hedge funds that thought there was like some kind of Trump blowback trade, then I don't know, they might be out tomorrow if it looks like Nvidia is going to rally back.
Yeah, I think that's where the question is. Is this something durable? Is this just a trade? If they can break, if Germany can break out of stagnation, that could be a durable trade. And I think that, the slower money that doesn't, makes changes over a longer period of time, they may have, not yet really made any changes. Now, they may have exposure, but they may be underweight depending on how much they rebalance every year. Individual investors, for sure, are underweight because, a lot of people are like, why should I even invest overseas? I know the U.S., I'm comfortable with it, and it's outperforming. So I would say retail is definitely underweight.
Okay. Sector-wise, does it, it's interesting because some of these things are kind of a little more services oriented in some ways, which we've generally assumed kind of is that epicenter of U.S. exceptionalism. But in the last block, we were talking commodities, we're talking copper, silver, some of the stuff kind of more connected to the cyclical components of the global economy. Does that stuff still work too? Can we use kind of the textbook kind of process of thinking, okay, if international outperforms, cyclical materials and that type of stuff generally should do well too?
Yeah, if you look at the MSCI EFA index, half of it is in three buckets. That would be financials, healthcare, and industrial. So financials and industrial would be more cyclical, and overall, EFA is more cyclically oriented. It has less exposure to tech in particular. And like I said, financials are already outperforming by a wide margin, just kind of on that cyclical upswing that we're anticipating.
Okay. I appreciate the update. Nice to continue to pry open the analysis on this. Appreciate it very much, Michelle. Good stuff.
Good to see.
International outperforms again today, but all right, minute and a half. Think we got 0.5%? Yeah.
Yeah.
Let's see if we can hold it. Be right back. We got Adobe earnings.
We got one more minute. I think that girl's a smart girl on there. I'd be teasing her all the time. She'd probably get real annoyed. Ding-a-ling just went off. Well, today was an exciting day for sure. Again, patience always works. Today I got in a rush. You know, I think if I just waited, I mean, there's different hours you could trade the market. I like to get in there and do that beach trade, but when you're having a lot of volatility, it's not that easy. Unless you're in puts, like today, at first. So I got stuck twice. And my stops weren't fast enough, and it put me behind $600 right at open. It kind of brought me down a little bit, but I said, I'll get it back, you know, because I've been here before. It seems like every day turns out to be good if you just have enough patience. Wait for the right setup. So we nailed the reverse on the bottom again. At least I tried a couple times that I couldn't do it. But third time was successful. I mean, it was easy to bring it back, but these options are expensive right now. You wouldn't think they would be, but they are. So I'm going to get out of here. Cooked me a little burger and some broccoli. And I took a nap today. I don't know how long I was out. Man, it seemed like I had to have been every bit of an hour, 45 minutes. But I was in a deep sleep because I remember waking up every once in a while kind of choking or snoring or something. And I've had a busy night, busy day, busy morning. And I need to go back down there and see if I probably ain't going to worry about it, but I'll find out tomorrow if the air's working up there. But I'm sitting here thinking to myself, should I call this lady up and tell her, you know, should we have some kind of check on all the air conditioners before it starts to get hot here again, like the way we got stuck last year? We had 2 units go out last year. This building has like 3, 6, 9 units or more. And we had just all kinds of problems. We ended up spending about $15,000 on air conditioners last year. Just getting them fixed, not new ones. New compressors and then when these employees come back, they've been spoiled. They've been at home for 5 years, 5 or 6 years since COVID. Since they, you know, shut everything down, they've been working at home, so they've been kind of spoiled. And I don't blame Trump putting them back in the office because they're making killer salaries and they get to work from home, and I don't know how productive they are or anything like that. I don't know. It'd be hard for me to, as a business owner, I'd have to have them in the office. I mean, that's just, and they're making the same salary working from home. So that, 5 years of not having to go to the office is pretty nice. 60 to 80,000 a year, and then get all them 11 holidays off a year, where you get 3 or 4 days off at a time. But I'm seeing all these people I haven't seen in 5 or 6 years, and it's kind of interesting. So I'm having to work harder now. Now they're all back. I got to try to figure out how I can get it all done in a couple hours, hour and a half before I can get here. And today, I had to work on a sink, get this sink going in the bathroom, and then, Jim, well, the air wasn't working yesterday. It was 77 degrees in here, and all these, they're not healthy. A lot of these people that work at the IRS aren't healthy to begin with. Out of shape. I can tell they put on a few pounds, and it'll take some time to get adjusted to. So I hope everybody had a good day today. Anybody have any questions? We missed you today, Randy. I did. You're welcome. We'll catch everybody later. I wish I knew how to build like you can, because I want to build me a little cabin. It's going to be just a big fort, I think. No, I ain't got no plans. I'm gonna build it from scratch. 4 walls and have a homestead with an outhouse, and just so I could have something up there on my property, not have to live in the house. Because I'm real picky about my sleep. I want to be able to go in and just go to bed, not hear no noise at all, except the radio. It'd be fun. Just a small little place. Enough to put a desk and a bed and probably a shelf to have my kitchen on. And a little bitty 4x4 bathroom to shit in. Inside when it starts to get cold. It gets cold up here. Looks like we're having some panic here on something. Adobe. 420 Adobe. Oh yeah, there were earnings this week. I forgot all about it. I don't even think they talked about it today. If they did, I missed it. It's probably a new low right there. Nope. We can go over 400. Do a double bottom. Right now it's at an inverse head and shoulders. Well, I'm going to get out of here. I'm going to catch up on the news.